how to read a balance sheet, you're in hot water, you're in trouble. As of 10 years ago, if you didn't think blockchain, data science, and new technology and what they do in finance, you're in a bit of hot water. Right now, I think it's a career risk not to be involved. And by the way, when I think of SC Ventures and our role in banking in general, sort of being backed by Standard Chartered and within the bank, we take risks. There's no question about it, right? So they're little ventures. Some things can go wrong, and some will succeed greatly, and some will do not. So they're all risk, but the bigger risk was not to do it.
Interesting. So actually, on that point of SC Ventures, so obviously SC Ventures, the venture arm, is run separately. Obviously, it's owned by the bank, but it's run separately from an innovation perspective. For the CEOs in the room, if you had to actually redo this, and you go back in time, knowing what you know now and you've seen how the industry has evolved, do you believe the financial institutions should try to innovate themselves? Like you said, not doing so is a risk, or the machine is too big, you still have to do it outside, like SC Ventures, and try to then bring the technology innovation in? I mean...
Sure. So first, a little plug. We put it on paper. We wrote down, what got us to do this, the rationale, the story, the 0 to 5 story in a book. It's called Nothing Ventured, Nothing Gained. It's on Amazon. I encourage everyone to buy it, write a review if you like it, especially. But please buy it. All proceeds go to diversity scholarships, which is even a cool thing. So explain it. And part of what we say in some of the first chapters of the book is that a big part of it is to be inside and outside in the same time, right? Inside doesn't work, not because people are evil and don't want to change and all this. I mean, you can make up stories about the evil sort of empire and all that. It's not true. People want to change. People want to serve their clients. Most people want to do the right thing. But it doesn't work because of the setup. When you set up to do certain things in a certain way, it's going to be very hard to switch gears and do them in a different way. And so some of the stuff has to happen outside, and some of the stuff has to happen inside. And that doesn't mean you shouldn't digitize your bank. That doesn't mean you shouldn't do all the process improvements and all the things that any organization should do for itself. To me, that's like brushing your teeth. It's hygiene. We hopefully do it, all the time. But there's an element of it which happens outside. And I'm going to expand it. We build ventures outside, and we learn by doing, and create businesses by doing. But we also do things in partnership. There's very little we do by ourselves, right? We hear guided by, and with our friends at OSL. OSL was one of our very first partners when we set up Zodia Markets together. And the point here is that if you're thinking that within the borders of a well-established corporation, you have all the answers, all the capabilities, all the skills, then it's very delusional, especially when we're going to look at other things. And so there's a real role for blurring the distinctions between what's in and outside, and engaging in daring partnerships with players perhaps you didn't know of, and engaging with them. And there's different ways to do it: technology, commercial anchors, co-investments, JVs, all different ways of partnering with people outside the organization.
But what about then culture? Because if you look at any crypto firm like OSL, yes, OSL is a large listed firm, but it's also very entrepreneurial. I'm not sure I'll say the banks are very entrepreneurial. Yes, banks want to change. But there's a very clear culture clash between any financial institution and any crypto startup that operates actively, quickly, and where the element of time is very, very different. If you're a startup and you're going to wait for the bank to do something, you may run out of cash. So how did you guys bridge that culture gap? Or what have you seen work well from that culture mismatch?
It's one of the great things, and I think one of the privileges of doing what we do, which is engaging with diversity of cultures, backgrounds, and different ways of doing things. And the startup ecosystem is a critical piece of that, right? So it brings us a lot of things. Anybody got kids in the audience? If you have some maybe older kids, teenagers, unruly teenagers, very different sense for risk. Brain isn't quite formed yet. But at some point can open your eyes to different ways of doing things as long as you keep talking. So as long as you keep talking, that's the analogy I want to make, right? If you engage with a startup, if you engage with the ecosystem, and you're willing to listen, then there's a lot of two-way information, two-way traffic That brain not formed is like you don't have a CO yet, you don't have your processes yet, you're not compliant yet, but I can help you with that. In the same time, you're opening my eyes to things that I hadn't thought of and coming up with different ways of doing things, and that's helpful as well. And that exchange can be a little painful, it can be a little clunky, but it's immensely enriching for both the startup and the established organization. And that's how we move on, and that's how we evolve.
We'll do banking in Roblox or in Minecraft, so I think that's next.
Exactly. Sorry for being a little paternalistic about this. You know, makes me sound like the old guy, and they're all children, and some of them are very, very valuable children, and doing very well for themselves. So I don't mean to be dismissive of it, but I think that there is an element of just that two-way information, which is so valuable.
So let's talk also about making money and investing, right? So like, what are the sectors that right now SC Ventures is looking at where you believe there's good opportunities for upside, like as investments for the SC Ventures portfolio?
So interestingly, you know, I'll first start with a time horizon. Maybe this is the one thing I knew, but I wish I really knew in hindsight, which is how long it takes to build businesses. So your investment cycle in early stage businesses is 8 to 10 years. When you're building, it's more like 10 to 15 years. And so if you're looking at decade cycles, you cannot go with the fad of the day. Like this year, stable coins are on vogue, but next year they will not be, and last year it was something else. There's an element of adhering to themes where you have strong conviction and staying the course on these themes. Our themes have not changed, at least not a whole lot, since we started. And they were about clients, what we thought clients wanted to see from financial services, and how they want to be served, and how we have to go about it. And so they were 1, 2, 3. One in the retail space, digital banks, digital banking, banking as a service, payments, basically integrate financial services in people's lives. Yeah, you don't have to go to a bank, you don't have to go to a branch, certainly not. You have to just, it's seamless. You live and you use finance for the sake of, you know, what you do. And that integration is a key. That's one theme. Theme number two, and so the digital banks and banking as a service are examples of our investments, and we continue to have conviction in it, and actually it's picking up now. Two, on the corporate side, supply chains, the world trade, supply chains, SMEs. 50% of almost every market I'm in is SMEs. SMEs are not well served by finance, by banks, etc. They fall in the middle between retail and corporate customers. SMEs are parts of the world supply chains, world trade, trade financing, and we have built a number of ventures and again, picking up, scaling, and doing pretty well in that stage. And then I'm going to say across the board, because both theme 1 and theme 2 ultimately converge with this, is digital assets, it's the infrastructure, it's the new economy on new rails. And so we started with cryptocurrency custody, which quickly became digital assets custody, and now we move into, which is your equivalent of digital gold, and now we're moving into infrastructure and what it takes to operate financial services, and then we're moving into yield creation and value add on Web3, et cetera, et cetera. So there are the three themes. I think, you know, we could talk about quantum, we could talk about carbon credits, we could talk about a bunch of other things, and obviously AI is underpinning everything we do because you have to have data science in every one of the things I've just mentioned. But they're client themes as opposed to foundational technology themes.
Actually, on that point, so how do you see AI and crypto come together? Do you believe it's a 1 + 1 = 3 relationship? Do you believe that this will catalyze even more the movement of the acceleration of digital assets?
Yeah. So first, we had lots of AI before people called it that way. I mean, a very small number of geeks called AI only 10 years ago, right? It was called data science, and now we evolved to AI, let alone Gen AI, et cetera. So there's a lot of not new, and part of the conviction in building digital ventures is that we weren't doing enough with the data that we have, and if that data can be put to use, then we can do great things for and serve people better. To your question, AI and digital assets, remarkable how, you know, one panel is about digital assets and the other panel is about AI, and different people treat it in different conversations. I really think it's one and the same conversation. It really is one and the same conversation. And so why do I say this? Let me bring it to life. You know, have to project yourself in a Web3 environment, and you have agents, AI agents, exchange, you know, doing stuff. And so exchanging coins and settling using stable coins in a Web3 environment. And is it right now at scale? You know, maybe not. But think of a world that has 2 billion gamers. And you know, our conversation just earlier, maybe we're not that far off, right? You know, I'm paraphrasing a very big guy who said Web2 forgot money, Web3 will not. That's Mark Andreessen, by the way. And so the Web3 will not forget money, and this is in the form of digital assets. And you'll see AI agents settling stable coins routinely. And so in so many ways, the two conversations are completely intertwined. And we need the skills, the muscles as an organization. If you're a bank or an asset manager or anything, you need the muscles to operate in both spaces quite seamlessly and put them together.
So AI and crypto seamlessly, the muscle will put it together. What about you gaming? Obviously, there's billions of gamers around the world. Obviously, China was a massive market of gaming. Do you believe we'll see better conversions of the gaming world at large and digital assets?
You know, it's interesting that there's an element of history repeats itself, which is, you know, how did Web2 start? You know, all these apps we take for granted on our iPhones, you know, they started with very profitable applications, and I'm not going to name one of them. The other one was gaming. But basically, because they were lucrative businesses, you could justify the investment in infrastructure, which today constitutes what we take for granted on the web. And an element of that is happening in Web3, where you know, the fact that we have a very popular industry, which is, you know, it makes sense to invest in it. And as so you're witnessing the creation of infrastructure ranging from just computer capacity at speed, right, to all the virtual immersive environment sort of investments that it takes to do this well. And I think it's laying out the foundation for what will be Web3 when I was going to say when we grow up, but it's not that far away. Right?
So talking about foundation, there's a big debate. You mentioned before the whole foundational infrastructure that we have. What about DeFi? I mean, if you look right now, depending of the month, DeFi volumes are anywhere from 5 to 10, 15% of centralized exchange volumes. How do you see DeFi and CeFi interact? Do you believe they'll work side by side? There'll be crossover? One is a hedge to the other? How do you see that evolving?
I think there's just Fi.
Just Fi.
Just Fi, yeah. So it's a distinction that is destined to get very blurred and go away. So my headline is there's no such thing as DeFi and CeFi. It's Fi, right? And remember when you said what are you investing in? Are you investing in CeFi or DeFi? No, I'm investing in what clients want to see. I'm investing in use cases. We're building businesses because that's what clients expect. Well, that's what the world expects. That's what societies expect in terms of wanting to be served by financial services. That's what's guiding us, right? And generally speaking, the conviction is that as we speak, we're moving finance to different rails. We're operating payments in different ways. We're operating the way people do things in a different way, right? Online commerce, you know, moving into virtual environments and commercial experiences in an immersive environment, etc. This is happening as we speak, and so inevitably what this really implies is there's no such thing as tokenized finance. There's just finance going forward.
But in that case, let's say my great OSL account, I can go trade, I can get yield, I can custody my assets. Don't you think that these large crypto firms that have the trust of customers, OSL being a good example, could be then the financial institutions of the future? Right now, people go to Standard Chartered and they do other banking services and maybe crypto in the future. But don't you think the crypto firms could be the financial institutions of the future, especially for the younger generation?
No, there's no question. There's no question, right? So you know, go back to children. When my now not so young kids were beginning to open bank accounts and sort of telling, you know, Dad, is that what you do for a living? And really, it took me 3 months to open a bank account with, you know, and I have had to go to the branch 3 times and all this. Not cool. We took it for normal, but it's kind of not the experience that people want to see. Whereas you know, as far as I'm concerned, onboarding is a few minutes, and the ability to transact is 24/7, and you know, all these things are things that, you know, the next generation certainly takes for granted. So yeah, what we call the crypto firms or digital assets firm. I'm going to say digital assets enabled firms that could apply to a very old established bank like Standard Chartered are the banks of the future, because they'll be able to thrive and continue to stay relevant in a world where clients take all the things I've mentioned completely granted and don't expect any less. The same way you don't expect any less than immediate availability in your palm on your iPhone of what it is you want to do. And the same, and by the way, as a retail customers or as a corporate treasurer, it's kind of the same thing. You want it now, and you want it quick, and you want it easy. And so if any industry, any services industry doesn't provide that, then that's a problem and ultimately will lack relevance. So no question in my mind, unequivocally, that we're building the banks of the future and the financial services of the future, yes.
So talking about the financial institution of the future, we're in Hong Kong today. When you look at mainland China, for example, like fintech, financial services in fintech are way ahead of anywhere else in the world by a mile. And you can argue that in many other verticals, China is also very well aware. The West just doesn't talk about it or decides to ignore it. From a digital assets perspective, how do you see even the role that, let's say, China will play in the next couple of years in digital assets?
Anything China does will be humongous, will be meaningful, humongous, and relevant on the face of the planet. And so that's one statement. The second statement is, as I've observed China now for many years, I was in Hong Kong before, I lived in Singapore for some time, and I've observed that there's an element of we've been around for 5,000 years, we'll be around for another 5,000 years, and we're going to take time to think it through really carefully and to experiment, see what works, discard what doesn't work, and adopt. And once we adopt, we will do it at scale. And so there's a very special place that Hong Kong has at this point, sort of experimenting things. Project Ensemble was announced yesterday, where obviously we're a big part of that. We are as some of you may know, we're in the Hong Kong MA sandbox, sort of building the stablecoins with our friends at Animoca. There's an element of experimentation which takes place here, which I think is a prelude to East Asia, generally speaking. Obviously China sort of adopting what has worked and learning from the first use cases to get on and scale them essentially. So there's no question that the ecosystem here is building. I think you can think of it in terms of competition between the West and the East. I'd like to think that actually that's pretty good competition. Emulation is good, and it keeps everyone focused and on their toes. And that applies to digital assets just the same it applies to AI, just the same it applies to about anything we do.
Before I move into my fire round questions, you mentioned the competitive landscape. Of course, Standard Chartered is doing great things. What other bank you look at, you say, wow, these guys are doing good stuff in crypto?
I'm going to elude this question, and I'll tell you why. The more banks I can get on board, the more we can partner with banks and they get on the journey and with us in SC Ventures, co-invest in something, co-build something, the better. So typically, even banks that would be arch rivals in traditional banking,
are coming on
guess
board.
Who they are. I think of them as potential friends and partners in the context of what we're doing, because competition is actually not the other banks. Competition is becoming irrelevant as banks and financial services as others build it. And I'm going to give you, actually I can keep going on this. I'll give you a few examples. Think of digital banking and the largest market caps in digital banks, right? And any banks in there, barring Standard Chartered, which has to?
Yeah.
Not really, right? Not really. Revolut, Monzo, others. Yeah, not really. Think of SMEs. Who are the largest servicers of SMEs in the world, on the face of the planet? Asia and financial. Amazon in the West. How good are banks doing? Think of Stripe, Adyen. Think of the market caps that were created and which banks have essentially abdicated. Now think of digital assets. What are the largest market caps in digital assets? Right, you name it: Ripple, Coinbase, OKX, etc. Any bank to be seen? Right. So that's why I'm not really thinking about banks all the time. I'm thinking about the other guys all the time, because that's where relevance is, and the market's telling us that's what's relevant. Yeah.
So Alex, I'm going to ask you quick questions. My bell is here. I need 1 or 2 word answers, and the bell is going to here to keep the momentum.
And
you ready?
Prepared that, yeah. Okay.
Here we go. We're in Hong Kong this week. What's your favorite thing about Hong Kong?
Vibrancy.
Vibrancy. Here we go. What is the biggest risk we have in the crypto ecosystem, in your opinion, right now?
Not doing it. Not getting on with it.
Not going on with it. Interesting. If you were not in the crypto industry, what other industry would you be in?
I'm in the crypto industry. Everything has to do with digital assets. Everything is, so no answer. It's digital assets are relevant to every other
That's
industry.
it. Nothing else in life. It's only crypto. You're a triathlete. What's the big next triathlete competition you would like to do?
So I just said the full distance. I'm doing the half distance worlds in a few days.
Wow, where is that?
In Spain.
Spain, here we go. Interesting one for the parents. You mentioned kids before. 18-year-old kid comes to you and asks you for advice on what should be his first job if he wants to get in the digital asset space. Do you recommend he joins a consulting firm, startup, the regulator, or something like SC Ventures?
Something like SC Ventures, because
Why is that?
because it'll be the best learning experience across the board. Unfortunately, we don't have jobs for every 18-year-old, and so my longer advice would be do something that is really going to interest you, as opposed to something that sounds cool.
Linked to that, if there's one course you think every student should study now in university or at school, what course should they take?
Entrepreneurship.
Entrepreneurship in school. Interesting. What's the best advice you've ever gotten with regards to entrepreneurship in business?
Intellectual curiosity. Make space for ideas that may go nowhere, you don't know where they belong, but be curious with the commercial buys.
It's an interesting one. You had to launch a new crypto business. You have the choice of these 4 co-founders. Who do you pick? CZ, Vitalik Buterin from Ethereum, Justin Sun from Tron, or Taylor Swift, the singer?
It has to be Taylor Swift, right?
Why is that?
Because, I'll give you a serious answer. She'll figure out a way to sell it.
Right, that works on that side. Last question, Alex Manson. It was a pleasure being on stage with you today. My traditional question asked to anybody who comes on my TV show on stage with me. Alex, if you could have lunch or dinner with one person, dead or alive, lunch or dinner with one person, dead or alive, who do you have lunch or dinner with?
I'm going to get a little emotional now. I think Mother Teresa.
Mother Teresa?
I surprised you now, right?
Why? Why is that?
Because everything we do in crypto, if we forget it has to be purposeful, then it has no meaning. We're here to serve societies. We get very excited about crypto and AI and all these things. Ultimately, it's a mean to an end, and the end is to serve society and people. And so I just thought of
Igor, the banker, the triathlete, and serving society. That was Alex Manson from SC Venture. Thank you very much, everybody, and we'll see you guys later on. Thank you very much.
Thank you so much. Thank you. Such a wonderful and meaningful sharing. Thank you so much. Please take your seats. Oh, let's take a photo. Let's take a photo. Yeah. Okay, 1, 2, 3, cheers. Okay, thank you so much. Please take your seats. So, from the discussions, as we all know, now Hong Kong is at a critical juncture in the development of financial innovation and digital assets. So, for the next featured fireside chat on the topic of Hong Kong's breakthroughs, innovations, and safeguards, we will focus on how Hong Kong can achieve breakthroughs and innovation in fintech and Web3 while actively safeguarding market stability and investor interest. Now, please welcome our moderator, Mr. Gary Tu, Executive Director and Head of Regulatory Affairs of OSL Group. 让我们掌声有请主持人 OSL 集团执行董事兼法规事務主管刁家俊先生。跟住落嚟，讓我哋掌聲有請 Our speaker, Dr. Eric Ip, Executive Director of Intermediaries of Hong Kong Securities and Futures Commission. 有請發言嘉賓，香港證券及期貨事務監察委員會中介機構部執行董事葉志恒博士，掌聲有請。
Okay, so Eric's had a very busy day yesterday, and he has another one today. So I will try to prompt Eric to share as much of what we would all be craving to find out this week in Hong Kong FinTech Week. And Hong Kong FinTech Week, look, for the crypto industry, we don't look forward to Christmas. Our calendar, November, the first week of November is the most important week for the crypto industry in Hong Kong. So just to get things started, I was at a lunch roundtable with Eric Balkunas of Bloomberg recently. He's the ETF specialist for Bloomberg, including all the crypto products. And he's making final preparations for writing a book scheduled to be published next year. And he shared with us at the lunch, he said he has never, ever been so nervous in his life because there's a chapter in his book on crypto. And he knows that by the time the book is going to be published next year, the contents are probably going to be wrong, outdated, or irrelevant. And I think that actually sets a scene for what I would like to ask Eric. Eric's got a great deal of influence over policy making for the regulated crypto industry in Hong Kong. So everything from VA dealing, VA custody, to all the announcements that were made yesterday. So question to Eric is, how do you make your policies at the SFC to make sure they remain on point? So what we know about publishing a book or writing a law is that by the time at the time of writing versus by the time they hit the market, how do we make sure they're still relevant? And how do we make sure they're still relevant long after that?
So Gary, thank you very much for your invitation. This is actually my second time for this past few days in a filled-up room in Grand Hyatt. I was talking on Sunday here, and I said, it is sad to see that, we fill an indoor room in Grand Hyatt talking about digital asset. Listen to me talk about digital asset. It's actually sad. There's actually a bigger life outside Hong Kong, but it does show a lot of emphasis from the market. Now, your question. Let's just go on the philosophical side first. Is that you actually don't need to get it right. So I think for those who were listening to me speaking yesterday, in the beginning of my speech, I talked about the backwards law. I don't know whether you guys know about the backwards law by Andrew Walls, a philosopher. Is that, the more you pursue something, the less likely you're going to get it. The more you're trying to get it right, very likely you're not going to get it right. That's the philosophical side of things. And to be honest, if you look back at life, that's probably a lot of things come true. I remember talking to a colleague back then, not my colleague at the SFC, is that, she always wanted to get a salary raise. And I talked to her that, the moment that you stop asking for it, you will get a salary raise. So that's kind of like that. We are in a very evolutionary world. So we need to have that kind of mindset. We don't really need to get it right, because if we really, really want to get it right, very likely we'll get it wrong. Now, back to the more down-to-earth message is that, if you look at the regulations, there are many different tools that we can use. First, we have the ordinance. I talked quite a bit about it yesterday. Ordinance, it takes time. Look at us. We started from 2018. Now we have pretty much going to have a pretty much robust regime. Look at the US. There are a lot of momentum, but wait till, how they actually get the carried out. There has been postponing. It actually takes time to get legislation. So that's kind of what legislations are. But what legislations are useful in the context of crypto, I think, is more about curbing unlicensed activities. Don't try to overstretch the legislation usage in a very dynamic world like this. And then we have code and guidance, etc., which usually when we change it, we need to do public consultation. And then we have circulars, and then we have different type of dialogues with the market. I think that part of it is very important. And I remember speaking in another occasions where that's actually the key point is the market always said they want principle-based regulations so that we actually kind of keep the rules, regulations, everything on a principle basis. But then in actual life, the compliance officer and sometimes the management come to me, they actually want the prescriptive rules. So this is actually an interesting dynamic. For me, for dynamic industry like this, I want principle-based. But then once we actually have principle-based regulations, then the market asks for clarity for its prescriptions. Now, here is my thinking process. Where should we go for principle or rule-based? Rule-based is for mediocres. Rule-based is for elementary school. So it depends on the capability of the market. A higher quality market, which we gradually see Hong Kong coming out, we should move to principle-based. And that actually gives us a freedom to look for like the Mother Teresa type of altruism instead of just looking at a very precise, minute detail.
So to a certain extent, what I hear from you, I hear sort of also similar echoing from Alex earlier on. So for example, when he was saying, if you're a banker today, there are certain things that potentially may be a career-limiting kinds of elements. So in your world, because I know you were a banker before you became a regulator. So in your view, in the digital asset space, when it comes to preparing for the future, like writing rules for the future, so what you've said there, do you see a difference in how you are planning your life as a banker versus now as a regulator? So sort of this rules-based versus principles-based, maybe something similar. Can you share something?
Okay, for the record, I was not only a banker in my life. I think I was actually trained as a pianist. Yes. And then I was in the stock exchange managing the equity market, and then I was in private equities, and then I become a banker, and then I become a regulator. So my career is basically start from very difficult stuff, now getting to the easiest part of my life, which is being a regulator. So, but I have been a very consistent person in the sense that because I think, well, do stay away from pursuing a music career because that is actually military, totally like inhumane type of life. But it teach me something that still affect me. That's called childhood trauma, probably. Is that for anything you do, you need to, well, which I also said yesterday, you need to plan, build, and grow. You can't skip the step. I mean, you actually look at a piece of music and you thought, I mean, tomorrow I want to play Beethoven Moonlight. That's not going to happen even for Mozart. But then you need to plan how you learn, and then you need to learn, and then you can perform. So you can't really skip that. And then for digital asset, it's actually the same. And a lot of the credit actually has to be given to the market and also the SFC colleagues before I joined. Because we started the journey in 2018. I always said that at SFC, we are never the fastest or most kind of adventurous regulator in digital asset, but we have been the most consistent. And we have been able, our Chief Executive Julia yesterday has mentioned that we were able to escape some of the worst disaster for the crypto world, including in the form of FTX and other failures. But we are, I mean, like yesterday in my presentation, the title of it is that moving steadfast. We are moving still steadier and faster. The important thing is that we pace ourselves, making progress just like practicing, incremental, and then improving.
Okay, so I can't do a Henry Aslanian because I don't have a bell. But if I say 3 minutes, sales pitch on what you shared with the market yesterday, 3 minutes.
All right. So, well, very easy. First, if you look at what we have done this year, well, I mean, the numbers seems to be all right. I mean, this is 10 minutes. I will actually finish at 7. Then, very important, beginning this year, February 19, we released a roadmap. That's the plan stage. And then we build, we make progress, and then yesterday we talked about global liquidity, all those stuff. I mean, you know about that. And then I gave a scoring of our progress, not results, progress. We have 12 initiatives under Aspire roadmap. And then I give myself, and I'm a very tough scorer. I mean, trust me on my scoring. Is right now, I give myself 6.5. 6.5, what does that mean? 6.5 means that we are in the middle of a progress. It doesn't mean that we are failing or passing or whatever. We're in the middle. My aspiration yesterday, as I said, is that by end of next year, probably in this occasion, hope that we will be about 11 or 10-ish towards 12. So that's kind of roadmap. Then after we have done that, we actually can embark on another plan. So finish the first plan first. And that's kind of scope our focus. This is exactly why I want to do a plan back in consensus this year on February 19th. Now, then I talk about 3 directions that I'm going to focus on, not in the next year, but in the next few months. Fast track 3 things. First, fast track our licensing, in the sense that, I mean, we know about our consultation of the VA dealing and VA custody. I mean, we can do all that, but it takes 1.5, 2 years to go through the legislations. But already, we can use our existing licensing regime to license whoever want to be torture regulated by us. So we already have 170 this type of licenses to actually use our existing regulatory framework to participate in a regulated way digital asset activities. So whether you're interested in trading custody, talk to us. The second, which is relevant to OSL and also other market practitioners, I want to launch an accelerated program. And that is going to happen in the next few months. It's going to be, well, a mediator or someone bridge between regulator and the market so that we can fast track innovation product and services. And the third thing, which is already in the pipeline, is actually you have to read the Chief Executive Policy Address, Section 104. The SFC is going to use technology and data to establish the line of defense for digital assets. And then we have launched a program called CrypTech. We're going to actually look at how to use technology to guard against AML risk, custody risk, and also market misconduct. 3 minutes.
Well done. So I love the idea of self-scoring. At OSL, we do a full pan every 3 months. The last one that we did was about 3 weeks ago, and we're still recovering from the trauma. But on the 3 initiatives, 2 particular initiatives really caught my attention. So common themes around sort of this fast tracking of innovation, of licensing. So Hong Kong, I guess generally, it's probably no one's going to disagree. We want innovation, we want speed and agility, and we want shorter road to commercialization in the Hong Kong market. And in fintech literature, sometimes we hear the clear recognition for the immense value of so-called iterative mindset or trial and error. Right? So we want to innovate through doing, we want to go deeper understanding and learning, we want to quick fail ideas, right? So here's sort of my question to you. In Hong Kong, to a certain extent, we've seen some versions of quick fail for the last few years in the form of licensing. So if something is not right, we don't even give them the space to hit the market. That's a quick fail. But that's a very early stage quick fail. So another form of quick fail would be we give them the space to go to the market. But if they fail to comply, they don't survive, we quick fail them. They exit naturally. So here's a question. Do we want to see more of, and it's a leading question, so do we want to see more like option 2? So quicker commercialization, get to the market, but if they don't survive, they exit. Is this what we want to see more of in Hong Kong?
I think that's probably part of the agenda for the accelerator program. We want to have, well, I know there's a lot of mainland audience today. I mean, 普通话我们叫这个小步快走. So small step with fast growth. Yeah. So that's kind of what I'm trying to aim at. But let me just take things from my perspective. I mean, many people thought that I'm the executive director for digital asset. I'm not. I'm the executive director for intermediaries. And to give you a perspective of my life, again, with all due respect for digital asset, if you look at the whole, I mean, I'm from the commercial side, so I look at my portfolio as a company. I'm managing Hong Kong. My company, digital assets from an income perspective is 0.5%. So there is 99.5% of income generated by activities that's not digital asset. That's my portfolio. Now, but I'm spending 10% of my time in digital asset, which means that I'm actually seeing this as a growing sector, and I think, of course, it shows that it's something that I believe. But don't forget that I have 99.5% of universe out there that also need my caring. And in the sense that my bottom line is that whatever we try, we cannot affect 99.5%. Because if you look at the G-SIBs, a big firm, the reason why they are skeptical in doing digital asset is that because the 99.5% of their the income has been very, very healthy and it's growing. So that is very important. And we are talking about AML. We are talking about custody. We are talking about like loss of client asset. And we are talking about market misconduct. Those are the baseline. For the other thing, we can be a little bit accommodative, especially, I think, again, from a very commercial point of view. It really depends on the risk appetite or loss appetite of the market practitioners. If you have more money to burn, you can try more. But you have less, then you need to be proportionate. Yeah.
So trial and error. So trial and error in this context of digital asset policy making, is this more challenging for you as when it comes to designing policy?
No, again, this is the easiest job in my life, so it's not challenging. Because if you look at trial and error, the way that I look at it is also learning from my childhood trauma is that don't look for perfection. I mean, I'm talking this to my colleagues and also I'm talking to the market. I mean, you want the moon, but sometimes the regulator want to give you a peanut, take it. I mean, let's feed your stomach first before, travel to the moon. So try something that is more practical. And you also, after you've seen what I did for the last year, you know I have an appetite to grow. I have the appetite to kind of move. But then step by step. That's my childhood experience. As I think it's a good kind of consistency in my life, yeah.
Okay, so products. So we know we want to innovate because I think from what you shared yesterday, there are certain areas of commercialization we want to see more of. So question for you to share with the audience. What do you want the Hong Kong sector to do? Or kind of like the where question. What type of products do you want to see the market do? And when, if we want to measure in months?
All right. Now, do your homework. I'm a very consistent person. And I am very out of the box, but at the same time, very within my box. Very, very contradictory person, though. Look at the Aspire roadmap. I mean, you have to do your homework. That's initiative, that's the P, product pillar, that is initiative 1, 2, 3, 4, 5, 6, 7, 8. So already written on the wall. I want derivative, I want margin financing, I want stopper and landing. In fact, just for the record, I just browsed my WhatsApp. My last conversation yesterday with my colleague is 9:27 p.m. on capital rules for derivative trading for virtual assets. So I work very, very hard. So you talk about kind of what I want, it's already there. Don't try to move ahead too much. If we have that, then I think it's a very, very bold step forward. And I'm ready, to be honest.
Okay, the when part.
It depends on, well, I said I'm ready. It really depends on the market. Because at the end of the day, on this part of it, it takes a bit of kind of what I call principle-based regulations. But then, as I said in the beginning, principle-based regulation requires certain sophistication of the market practitioners. And I have to be very honest, I'm always trying to improve myself and my team has been fantastic. I mean, you can see that. I mean, we have like many, like over 50 colleagues working on policy matters now, so which I really impressed by SFC colleagues. But I also need the market to step up, because sometimes you do observe, I mean, we do observe that we are actually moving faster than the market. And I only can move as fast as the market because we are not the one actually being the front line running the business.
So there's a bit of a common thread between our previous panel and this panel as well, because I know Eric is also a long-distance runner. So his consistency and endurance, I can attest to from a first-hand perspective. His team works enormous hours, public holidays, weekends.
They have a tough boss, yeah.
Yes. So because I know how hard you work, thank you so much for your time, and thank you for sharing all that insight with us. Ladies and gentlemen, Dr. Eric Yip.
Thank you. Thank you, Gary.
Thank you so much. Let's take a photo together. Thank you for your engaging discussion. Thank you. Please take your seats. So up next, we will next to our fireside chat to focus on the topic evolution of digital asset regulation from Hong Kong to the Middle East. The global regulatory landscape for digital assets is rapidly evolving, with Hong Kong and the Middle East emerging as key jurisdictions. So, in this session, we will explore the different interconnected paths of these two financial hubs, comparing their regulatory philosophies and frameworks, as well as their approaches to balancing innovation with investor protection, examining how these developments are shaping the future of global digital asset markets. Now, please welcome our moderator, Mr. Rocky Tan, Director and Head of Policy Research of Financial Services Development Council of Hong Kong。依家讓我哋掌聲有請主持人，香港金融發展局總監及政策研究主管董一嶽先生。有請香港金融發展局總監及政策研究主管董一嶽先生。And our speakers, Ms. Elizabeth Wang, Director of Intermediaries and Head of Fintech Unit of Hong Kong Securities and Futures Commission。有請發言嘉賓，香港證券及期貨事務監察委員會中介機構部總監兼金融科技組主管黃樂欣女士。有請香港證券及期貨事務監察委員會中介機構部總監兼金融科技組主管黃樂欣女士。And Mr. Wylan Kwok, Senior Executive Director, Financial Services Regulatory Authority of Abu Dhabi Global Market。有請阿布扎比国际金融中心金融服务监管局高级执行董事郭伟林先生。有请三位来到台上就座，谢谢。
Thank you very much for the kind introduction, and it's great to share a panel with two experts in regulations. Eric kept saying that it was his easiest job. Today is actually my easiest. The easiest job among the three of us would be mine, because I'm just going to be a moderator, and the difficult questions will be answered by William and Elizabeth respectively. So the Financial Service Development Council, unlike the Securities and Futures Commission in Hong Kong, which has already picked up the issue of crypto-related matters in 2018. We only started looking into it back in 2021. And that was when I started working very closely with Elizabeth on this matter. To us, Hong Kong is an international financial center, and we can't just leave behind an emerging and potentially the future of finance going forward. And that's why back in 2021, we thought we shouldn't be limiting the access to crypto to only professional investors. Now, on that note, I would like to ask Elizabeth the first question, which is about Hong Kong's approach to digital assets, which has also emerged and changed over the years. Now, Elizabeth, how has Hong Kong's regulatory philosophy evolved to keep pace with the rapid development of digital assets? And what are the key changes that you have seen in the market in response to SFC's covered and expanded coverage in relation to regulations?
Thank you, Rocky, and thank you for inviting me here today to participate in this panel. So as Rocky mentioned just now, the SFC first started to regulate this space in 2018. We were actually rather early movers. We weren't the first, but we were quite early. So what we saw was that many jurisdictions were still very undecided about whether they would regulate or not. So the digital asset market landscape was very uneven, and many players were unregulated. So our focus back then and our priority was to create a safe digital asset ecosystem in Hong Kong. So what we did was that we started with a very prudent and conservative approach. So over the years, we have expanded our regulatory remit, and we are regulating more and more digital asset-related activities in Hong Kong. What we did was that we did this through creating a rather closed-loop ecosystem in Hong Kong. So our licensed virtual asset platforms were the central role, played the very central role in our digital asset ecosystem in Hong Kong. So currently, our brokers need to partner with our licensed VATPs. Our SFC authorized funds need to trade through our licensed virtual asset trading platforms, and they also custody their fund assets with the custody entity of our licensed trading platforms. But what we've noticed is that through creating this closed loop environment, we are creating a pocket of liquidity only for Hong Kong. And that does not connect with global connectivity, global liquidity. So this fragments liquidity for investors in Hong Kong. And because digital assets are borderless in nature, this reduces liquidity in Hong Kong because liquidity begets liquidity. So as part of our roadmap, we had Aspire roadmap. We identified that this is an initiative that we really need to look into. How do we connect Hong Kong with global liquidity? We want to enable local investors to have access to global markets. We want to attract institutional trading to Hong Kong. All this is to be able to foster and to create a deeper and more liquid market in Hong Kong. So yesterday, we issued 2 circulars. One especially is to tap into global liquidity. Through that circular, we are now enabling our licensed virtual asset trading platforms to share a global order book with their affiliates overseas. Now, this is the first step in achieving global connectivity. And this circular was a result of working very closely with the industry, and it actually took quite some time to really, launch. So through the circular, we have identified, the new risks arising from tapping into global liquidity, mainly trading and settlement risks, and also, market misconduct issues. So we've provided more guidance in the circular, and I think why it has taken us so long to, tap into global liquidity to issue the circular is that we've spent so much time with industry because I think they're slowly, recognizing that they need to put on a TradFi hat. They need to understand what TradFi guardrails are necessary to create, a trusted ecosystem in Hong Kong. So this also coincides with what we've seen with the industry is that they're slowly recognizing the importance and the value of being regulated and also being compliant, as regulation provides the credibility to their businesses. So this is also what we've seen, basically that industry is embracing regulation, and this is also in line with our responses that we've received to our consultations on introducing virtual asset dealing regimes and also custody regimes. They want to be regulated. They are very supportive, and they are looking forward to being licensed.
Fantastic. That's a very quick download of what Hong Kong has gone through. Now, Wai Lam, I remember I visited you at ADGM roughly 2 years ago. It was we wrapped up our trip to Dubai. That was part of the COP28 discussion, and then we drove over to Abu Dhabi to visit you and to discuss with you quite a few items. If I recall correctly, the discussion was pointing to the fact that Abu Dhabi was not really looking into a digital asset at that point. But just like some of those other markets in the Middle East, like you think about Saudi, you think about Kuwait, and some other places, they weren't. But I think Abu Dhabi has done a fantastic job in providing a very secure and prudent, and at the same time very forward-looking roadmap. So I would like to check with you if that was the case, if my memory served me right, and if so, what has changed?
Right. Thanks for having me, and good to see you, Elizabeth. So first thing I want to correct you. 2021, when you visited us, definitely we are not. Crypto is really a big part of our journey. Just that in Abu Dhabi, we don't tend to promote or market ourselves. So truth be told, in June 2018, we launched our framework. And back then, when the whole world was talking about AML, CFT risk, we thought that we have to go beyond that. So we spoke to various institutional players. The only regulator back then we saw was that has a framework was the Japanese FSA, as well as the New York Department of Financial Services. And even back then, the framework to us wasn't really fit for purpose from our perspective. And the institutional investors are saying, look, the only way for us to come into this space is unless you address all the risks that we see in the space, we're not going to invest into cryptos. So long and short of it, we eventually just decided to extend our TradFi regulations to carve in crypto assets as just another asset class. So whether you are a broker-dealer, custody, asset manager, market operator, payment service providers, as long as you deal in cryptos, we regulate you as if you're a traditional financial services sector. And that was with the vision that we think in the long term there's going to be conversions of TradFi and NewFi. And I'm glad that we took that decision. It was a difficult one to take because it means that it's a high bar to begin with for a lot of these technology firms. But today, we are seeing the conversions. So if you're a broker-dealer dealing in securities, derivatives, perpetuals, cryptos, so on and so forth, it is one license that you are able to do. It's just we are asset class agnostic. And interestingly, the development of the market has evolved. When we first started off in 2018, the first movers are largely the on-ramp, off-ramp, price discovery people, because back then the individuals are the main users. They're looking for a place to on-ramp and off-ramp. And of course, when FTX hit, there was doubling down on institutional players and custody solutions. And now that you have a safe custody solution, people are looking for yield, right? So the third wave of players that we're seeing are the people looking for yield, staking, borrowing, and lending, right? So today in EDGM, we have a budding ecosystem of players from broker-dealers, market exchange operators, stablecoin issuers, borrowing and lenders, as well as staking providers. And we are starting to see TradFi, CFIs, deploying their strategies on DeFi. So it's an exciting space, and for me as a regulator, I see the changes happening every day, and the only way to keep up is to quickly or closely engage with the industry at all times.
This is fantastic. I think I see some similarities between ADGM and Hong Kong's regulators. The background is that we are international. At the same time, we have our very own characteristics. And we also want to connect with different parties and markets. And we want to do it prudently. We don't want to do it very aggressively, just invite everybody to be here, play the games, and like if what hit the fan, then like everyone just leaves, right? So we don't want to see that happen. And to that end, I would like to ask both of you the same question. What are some similarities that you see in our markets? And what are the differences? And how can players that are currently present in one market, how can they actually leverage and tap into the other market? So, William, perhaps?
Yep, definitely I see a lot of similarities. And over time, you see the conversions, like I say, into the way we look at cryptos. So I think we use the lens of a TradFi. We look at protection of investors as well as protection of the financial system, right? So I think from that perspective, gradually, in fact, not just between Singapore, not within Hong Kong and Singapore and UAE, there's the convergence of regulatory sharing, mind sharing. Things like asset segregation, protection, market abuse provisions, those are things that's happening. So that conversion is definitely very helpful because it helps firms, as Rocky mentioned, scale. Right? We are starting to see firms looking at, well, in the early years, you can see them sort of looking for an anchor, a headquarters, to first build the foundations. But I think the timing is right now where we are seeing a lot more interest, especially from Hong Kong and vice versa, firms looking to scale, right? So that convergence of regulatory framework definitely helps. There will always be differences at the margins because every jurisdiction starts off with different circumstances and priorities. So we do have our priorities. Hong Kong will have its priorities. I suppose I see an advantage in being able to start from a framework with zero legacy issues, building up from scratch, catering to the being more agile to changes. Whereas a lot of established international financial centers already have frameworks and they have to sort of think of how to retrofit or update or tweak their models, right? So I think there will be differences in that perspective because each jurisdiction starts from different starting points. Yeah.
That's it.
Right. I think that I agree with what YLAM has observed in the market, that we are converging across the globe. And I think one of the key reasons is that international standard-setting bodies have also, asked regulators to really adopt a harmonized approach to regulation. So basically now the principle is same activity, same risk, same regulation or regulatory outcome. So this is what we've been applying in Hong Kong, and what YLAM has said as well in UAE, we're looking at TradFi guardrails, bringing it to the digital asset ecosystem. I agree with YLAM as well as that many firms are looking at, anchoring and then scaling. I think right now what we're seeing is that for those unregulated firms, they're also choosing their home jurisdictions. So they're choosing one place to then expand based on that headquarters to expand to other jurisdictions. And I think it's very interesting to see, what really goes into their choice and when they're choosing a jurisdiction. And I think what we're seeing more and more is that they also value regulation. So they understand that they need to choose a robust jurisdiction so that they can give credibility to their investors and their clients, and then through that they can further scale to the rest of the world. In terms of tokenized assets, I think we're also seeing that across the globe, regulators are also adopting the same kind of stance. So that basically we look at the asset itself, it's a security, we regulate it as a security, we use the same TradFi guardrails, and I think this is also gaining momentum across the world. And it's also something that I think for, TradFi, they're also looking into it because it's something that they know how to do. So we're seeing that every firm, whether it's in the crypto markets or whether it's in traditional finance, they're really focused on the digital asset ecosystem now.
This is great, because we have to have a fine ecosystem that connects traditional finance with the emerging industry, or perhaps now it's a mainstream industry, and subsequently we also need to connect with other markets. Now, in Hong Kong, that's a difficult question for Elizabeth, I think. So OSL got the first license, and the second license didn't come through until a while later. Then we have batches of license approval. What took you or your colleagues so long? That's the first question. And going forward, how can we ensure that while we are going to play by the rules, and how can we ensure that the ecosystem is continuing to grow sustainably?
Right. So we do admit that the licensing process for our trading platforms have taken quite some time. I think partly it was, especially when we started off with OSL, it was really a learning journey for us regulators to understand, what exactly is the digital asset market? What are they doing, right? So we worked very closely with OSL in working on the license. I think for subsequent licenses, what we've seen is that, again, we used the same kind of approach. We were very, a coordinative and a collaborative kind of approach with our applicants. But what we've seen is that in the industry, there's still more of, we're from the crypto world, we're not part of TradFi. So it's been a learning journey for the industry as well to really understand what TradFi guardrails are necessary for them to operate in a compliant and regulated manner. So we're not talking about OSL, but we've seen applicants that have submitted, perfect policies and procedures on paper. When we actually go in and look at them, they haven't actually implemented them, or they've implemented it completely differently. So it's these things that has taken so much time for us to, work with them, rectify the issues, and then hopefully they understand where we're coming from and they know how to, be compliant and regulated in the future. So what we're doing right now in Hong Kong is that we've issued, 2 consultations with the government to further complete the ecosystem in Hong Kong. We're looking into licensing virtual asset dealers, virtual asset custodians, in order to, make sure that every part of the ecosystem is regulated. Because we think that through regulation and through compliance with regulations, we can create a sustainable market in Hong Kong. So right now, for our dealing consultations, we've actually received quite a lot of comments that maybe we should also extend to regulating virtual asset advisory services and also virtual asset fund management services. So we're now working very closely with the government to see whether we should also, do these pieces to fully complete the ecosystem. And I think once we do have this fully complete ecosystem, we'll be seeing, more overseas players coming to Hong Kong, getting the license, bringing global liquidity to Hong Kong. And I think this is what is very needed in Hong Kong to further grow and develop the ecosystem sustainably.
That's why, I said at the outset that, my job is very easy. Because, I just deal with research, look at what's on the paper, and then, just say something to the government, and, the government take it or leave it. Well, luckily, they take it most of the time, but it's still very easy. Elizabeth, and the team has been doing a fantastic job, even though, it took a while to understand. And, frankly, we all took a bit of time to understand it. So kudos to you, Elizabeth. Now, I want to look at what we can do in the future. So, how does ADGM ensure that cross-border transactions, capital flow would be seamless, and how can we brush up the efficiency in that regard going forward to ensure that all those transactions are going to be safe, cleaned, and traceable of sort?
It is particularly challenging if you try to be a first mover. And in a way, ADGM has always been a first mover only because we think that it's bound to happen. Why wait? You might as well do it now, start engaging early. So most of the things that we do tend to be we are alone up there. We don't really have a reference point. So all these things about interoperability, efficiency, so on and so forth, most of the time, the thing that sort of guides us through is to really think TradFi and see how we can apply into NewFi. Right? I would say the way to future-proof is continue to engage the industry very, very closely. Right? We find ourselves learning most of the time with the industry, and they tend to be our connection and nexus between the various jurisdictions as well. Right? In fact, most of the time when we develop frameworks, it's because they come to us with a particular product, with a particular business model. We don't have a framework yet. We will then work with them. So look, please help us understand what you try to do. And we actually develop a particular framework just catering to them to begin with. And they are our guinea pigs. Right? And once it works with them, we then formalize it through consultations and so on and so forth. So that was how our stablecoin framework evolved. That was how our staking framework evolved. That was how our borrowing and lending framework evolved. It all started with like-minded players who want to be serious about compliance, want to embrace compliance in the long term. They come from another jurisdiction. They sort of tell us what are the constraints in other jurisdictions. So when we work with them, right, it is being mindful of what's happening elsewhere as well, the constraints that they face, because we need to future-proof. We are part of an international standard-setting bodies, IOSCO, so on and so forth. So we do need to be a responsible global citizen, because if we decide to depart from the mainstream too much, eventually when the firms and business models try to scale, they will have difficulty scaling overseas. So I think one of the key success factor is really to be grounded at all times with the industry and also be part of the regulatory engagements at all times. So, you know, we are, for example, we have various roundtables from FSB to the stablecoin associations and so forth. So that's how we keep ourselves updated at all times and continue to speak with regulators and learn from regulators like Hong Kong.
I think, you know, while you hit the nail in the head, I think the communication with participants is extremely useful. And also, you know, we can't be an outlier. We should be dealing with the other regulators who are your peers, really. So the communication at IOSCO level or, you know, many other levels, you know, the bilateral discussion would be extremely, extremely useful to make sure that this development in respective jurisdiction will be sustainable. Now, Elizabeth, tokenization has been quite a buzzword here and there. You know, have we seen anything that is successful, or, you know, any examples that we can see or you can show here in Hong Kong?
To be honest, progress has been very slow. So we issued our tokenization circulars back in 2023. It's 2025 now. And we're still talking about, you know, can we find a real-life use case for tokenization? So I think what we've been doing in this space is that we've issued guidance, we told industry, you know, what our regulatory expectations are, basically apply securities laws to tokenize securities. It's that simple, right? And then we're actively participating in HKMA's Project Ensemble. We're actually the co-lead for the Asset Management Initiative, and we're also the core member of the architecture community. So what we do, our role in the Project Ensemble is to really, you know, give regulatory guidance to the industry on how they are structuring their tokenized securities, right? How, what they need, what license do they need, what kind of, if offering to the public, they need to, you know, get our authorization. It's this kind of regulatory guidance that we've been given. Actually, our experience in the tokenization world is actually quite similar to the digital asset market. So when we consulted on our trading platforms, you know, the regulatory guidance, we asked industry participants to give us, you know, more details of, for example, the derivative contracts they want to be able to, you know, trade on platforms. We didn't receive any constructive feedback in this regard. So basically, it's like we're reaching out to industry, but we're not getting back enough. So what we're thinking about is that we want this to be market-driven. We want the market to participate more, to really respond to our requests for information so that we can work together with the market. So as Eric just mentioned just now, we're looking into, you know, how to accelerate the growth. How can we make the market, you know, innovate on their own and work together with us? So we're looking into launching an accelerator program within these few months, the next few months, and hopefully we can drive more real-life use cases, whether in tokenization or whether in the digital asset, other digital asset space.
This is fantastic. I have one more question for you before we come to a close. Now, my question is, you know, interoperability is quite a challenge to not only practitioners but also regulators. So how do you ensure that is addressed or adequately addressed to ensure that the cross-border transaction is seamless?
Yeah, actually, when you talk about interoperability, there could be the G to G, there could be the industry to industry, and there could be the technology to regulator, lots of various versions. So at the regulator to the regulator, I think I briefly mentioned, the only way is to continue to engage. It is such a digital asset is boundaryless, right? So increasingly, we are seeing firms operating in various jurisdictions. And the only way for us to make sure that it is interoperable is continue to have conversations. We do have a challenge of sometimes convincing or explaining our position to some other regulators because, again, every jurisdiction and regulators have different priorities and considerations. So in our case, we are we believe in the future, the transformative power of the digital assets, and that is the outcome we're trying to move towards to. So we are very selective in terms of making sure the industry players that come to us believe in this journey and vision and want to do the right thing with us. So engagements at the regulatory front will continue, but there will be sort of, as I think Elizabeth alluded to, there will be cautious progress, which sometimes will take its time, right? Now, even at the industry-to-industry level, you see a bifurcation of some of these different models. Some stick to some chains, some want their own layer one, and so on and so forth, right? Now, I think for us as a regulator, we are thinking of not just at the regulator to regulate interoperability. We are thinking of regulator to industry and regulator to technology or interoperability. So for that, to that end, I think RegTech, SupTech is a very big piece of our strategy, where we actually, because these cryptos are digitally native, it gives us an amazing opportunity to actually be able to connect with them digitally, monitor their processes and circulation and minting process online, right? So in our fiat reference tokens, in our stablecoin regime, we are able to pull, we are seeing the on-chain circulation. At the same time, we are pulling the APIs from their reserve accounts so that we are able to match real-time the sort of backing of the assets. So that's the interoperability between regulator and perhaps industry. Another example is that we actually design, we codify our rules and regulations to be machine readable with a view that smart contracts can in the future interact with our rules and regulations. So when we change our rules and regulations, the smart contracts are able to read what are the nuances in the changes and make the decisions accordingly, right? So I think those are the various longer-term interoperability initiatives as well as the shorter-term initiatives.
This is great. Elizabeth, do we have something to add, from Hong Kong side as to what are some of the initiatives that you may want to hear from the participants here in Hong Kong in terms of brushing up our competitiveness as a virtual asset or a digital asset hub?
Right, so we issued our Aspire roadmap in February this year, and as Eric mentioned just now, we still have at least half of the things that we need to implement, we haven't implemented yet. So read the roadmap, you'll see that we're looking at issues like virtual asset derivatives trading on our platforms, virtual asset borrowing and lending. We're also looking at how to enhance our dialogue with the industry, because we really value that dialogue. We need to be informed of the market trends. We need to understand what the market is doing before we can come up with, balanced and well thought through kind of regulations for the industry. We're also looking at, cryptech. So we're looking at how can we do better monitoring and surveillance, because as and when we have more regimes, as and we have more players, we also will have more market activity, and we need to stay on top as a regulator. So these are the initiatives that the market can look forward to. I can't say that it will be done within a few months, but it's something that we're working on.
Thank you very much. I want to assure you that, with these very communicative and also prudent and also forward-looking regulators, that explains why Abu Dhabi and Hong Kong are two leading international financial hub and also a crypto activities hub. So, ladies and gentlemen, please give it up to Wailam and Elizabeth.
Thank you so much. And let's take a photo together. Thank you so much for this insightful and amazing discussion you brought to us. Thank you so much. Please take your seats. So coming up, we will move on to our next fireside chat, focusing on the topic, Asia's crypto frontier, balancing regulation and compliant growth. This session brings together key regulators and policy advisors from some of Asia's most dynamic and rapidly evolving digital asset hubs. So we will explore each market's distinct regulatory strategy, examine how they are implementing frameworks to foster compliant growth and maintain market integrity, and envision opportunities for greater regional collaboration to strengthen Asia's leadership in the global crypto industry. So now, please welcome our moderator, Ms. Angelina Kwan, Managing Director of Stratford Finance. 掌聲有請主持人 Stratford Finance 首席執行官關慧女士。有請主持人 Stratford Finance 首席執行官關慧女士。And our speakers, Dr. Wang Hui-Qing, Executive Director of Digital Strategy and Innovation of the Securities Commission Malaysia. 有請發言嘉賓。 馬來西亞證券委員會數字策略與創新部執行董事 Dr. Wang Hui-Qing， 馬來西亞證監會數字策略與創新部門執行董事 Dr. Wang Hui-Qing. And next one is Ms. Uli Agustina, Director of Digital Financial Assets and Crypto Assets Supervision of OJK, Financial Services Authority of Indonesia. 印尼金融服務監管局數字金融資產與加密資產監管總監 Ms. Uli Agustina 女士。 印度尼西亞金融服務監管局數字金融資產與加密資產監管總監 Uli Agustina 女士。And next one is Mr. Harry Kim, Chief Business Officer of Kintsugi Technologies. 有請 Kintsugi Technologies 首席商務官 Harry Kim 先生。有請 Kintsugi Technologies 首席商務官 Harry Kim 先生。Please take your seats.
Good morning, everyone.
Morning.
Woo, 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 woo. All right, Finternet, this is fabulous. We've had the most amazing regulators on the panel, and now they're in our audience, and now I have them on my panel, which is great. And I think this has been such an exciting event, and I'm just going to say congratulations, OSL and Finternet, on this great conference. We really got it together. It's really cool. So I have the honor and pleasure to talk about Asia's crypto frontier, balancing regulation and compliant growth. And what we've done is we've been able to assemble an amazing panel of regulators, and the discussion will analyze those markets, their particular markets' distinct regulatory strategy and focus on what they're implementing, because we want to foster compliant growth, collaboration, and cooperation. So we are one Asia. You've heard what Elizabeth and Eric are doing. Now you're going to hear what, let me introduce Dr. Hui-Qing. Dr. Hui-Qing is the Executive Director of Digital Assets for the Malaysian Securities Commission. And Uli Agustina is the Director of Digital Financial Assets and Crypto Asset Supervision for Oritas IESA, otherwise known as OJK. OJK, which is what I call them. And Harry Kim is an old friend of mine, as well as advising certain very, very high up people in Korea. And I would want to say that he had a lot to do with some of the new legislation that's coming out in Korea, which we will be talking about in a minute or two. So without further ado, we've got an amazing panel here. So I'm going to start with Harry first. I just came back from Korea Blockchain Week. If you have never gone to Korea Blockchain Week, you have to go. I'm serious. I have never seen so many people in my life that were so into crypto. And if you're not in Korea also with Hong Kong, oh boy, you really need to see it. So that's a plug for Korea. I learned so much in that week when I was there. So, Harry, you've got a new president in place, and it's a very big change in Korea. I also sat through the Korean Stock Exchange conference where everybody was telling the Korea Stock Exchange, you must launch ETPs. See, Hong Kong is ahead of Korea. You must get them out so we can catch up. And of course, the poor Korean exchange guys are like, oh my God. So what is happening with now your new president? He has immediately passed the Digital Asset Basic Act, which is DABA, and we're seeing legislation being formed around us. Tell us what are some of the plans that are happening in Korea. And Korean investors love crypto. So how can Hong Kong get a piece of the action too?
All right, thanks for the introduction. I'm 大家好，我係 Harry. Yeah,
He speaks fluent Korean, Mandarin, and English, by the way.
yeah. So I'm in Hong Kong, right? So I have to say hello in Cantonese. Yeah. All right. So yes, Korea, as you've seen from the KBW a month ago, we have a very big retail market in Korea. And the new president, he has a national task of the digital asset, digital finance innovation plan for his next 4 years. Yes, the market is really big. We are trying to, make a clear definition on digital asset. That's why before we call it virtual asset by the law, but now we change it to digital asset, which means they're trying to make a clear definition what is the digital asset and how to regulate it. Yes, it is a big market. Everybody loves Korean market because we have the largest retail. However, the government side, they are always the guy who trying to regulate people. And all of you guys are from the government side, but I'm from the private sector side. From my perspective, I think Korea is trying to protect. This government is trying to protect people, not only from the security of the human being itself, but also from the financial side. So that's why they want to regulate more detail on the digital asset regulation. So for example, the previous law that they passed, this is the phase one. The phase one is just they try to regulate all those exchanges in Korea. And the recent law has been proposed is the phase 2 one, which is they want to regulate from the custodian, the stable coin, and all the other like advisory, marketing, and all the other industry people who are involving in digital assets. So yes, the law is, the regulation is becoming like more and more specific and more in detail, but still it's under review. So I don't know what to say for now. It's because it's not actually passed. Yeah.
It's not actually passed yet, but it's already in legislation, and they're discussing it right now.
Yeah. So when you initiate a new law or updating a new law, they have like at least 1 year to review it, and then 1 year for testing it, and then after that we will announce it officially. So it's gonna take a year or two.
Well, we still have time, Elizabeth, to keep ahead for Hong Kong, which is very good. And for those of you who are in Hong Kong that want to expand into Korea, this might be an interesting time. But I also think there's a lot of infrastructure that still needs to be done. We are ahead because we have licensed exchanges. And if they were to launch ETPs now, or exchange-traded products in Korea, they still need to have exchanges be able to break them apart like we have in Hong Kong. So we are way ahead, luckily, in terms of this area. But actually, my fellow panel members, when we were in Korea, we estimated and we said within a year, we believe that KRX will start launching ETPs, or less than a year. And I think the Korean regulators are going to really move fast. So we cannot delay.
I mean, Korea, we have a 빨리빨리 culture, which is we have to do quick. But the regulation side, I'm not sure. So, yeah.
Well, let's hope they are faster. In our case, maybe they'll be a little slower now. Thanks, Harry. In terms of exciting, Malaysia is very exciting, Dr. Wong. Do you want to tell everybody what's happening, some of the new things that you've just promulgated in terms of empowering your regulatees to step up, and talk a bit about that?
Okay, thank you. So in Malaysia, for those who don't already know, we actually brought crypto within our securities framework much earlier on, around 2019. So we've had a good 5-6 years understanding the exchanges that have been registered and regulated as securities within Malaysia. And we're increasingly more comfortable with them. So 5 and 6 years on, we did a checkpoint and said, look, what are we going to do with this market? Right? So we realized that it is increasingly part of everyone's asset in their portfolio. Right? And recognize that there's a lot more demand in the sophistication of the product. Right? So we made a conscious decision, and we've reviewed our guidelines, and we'll be releasing our enhanced guidelines soon, beginning of next year. A couple of things which we have already sort of tested with the market and we've also announced. It's just about having the guidelines issued. Once we will allow exchanges to be more empowered. I mean, to Angelina's tune, growing up. Right? So we're no longer going to baby them. We're going to allow them to list the products that they want, the tokens that they want, based on their own governance process, right? So we won't be stepping in anymore as nannies in that respect. But obviously, it comes with accountabilities. So in doing so, then we expect exchanges to step up their control measures in terms of investor protection, like wallet arrangements, like capital requirements. All in all, we expect the market to be more institutionalized, right? In fact, at our doorsteps, we have quite a few large players and institutional players that are looking to serve the crypto space. And we expect that, in turn, will build credibility with the broader banking sector. So together with our central bankers, we have actually brought compliance groups from both the banking side as well as the crypto market, and they sat down together. So the idea is to look at how they can better align the appetite. Obviously, the first meeting had a lot of issues brought up, right? And we realized it stems from the fact that credibility is an issue. Understanding is another issue. So both compliance network from both the banking sector as well as the crypto market are sitting down to better understand each other. And that's another way forward for us, right? So all in all, market's growing up. We're seeing more and more offerings beyond exchanges. We already have like 21 players within our ecosystem offering a range of products from crypto funds all the way to crypto derivatives, all the way to crypto trading and soon broking as well. So we allow our brokers to be able to tap onto global markets or global liquidity pools to be able to offer our clients better price from a market perspective. So these are a couple of things happening on the crypto front. Like what Hong Kong, I think, mentioned earlier. The other aspect most regulators are exploring would be tokenization. So how do we bring the benefits of what we see within the crypto market into our traditional security space? And we too have spoke with many of the industry players, and we realized that there is a need probably to set up some guidances or guidelines with respect to tokenizing assets. So we've consulted the industry on that, and we too will be issuing guidelines of obligations of issuers as well as intermediaries dealing with tokenized capital market products that we hope will sort of spur more conversations around tokenization. I was just having a chat with a couple of Malaysian industry players the other day, and to be honest, within a year, when we spoke about it last year, it was very quiet. Nobody talked about it. But this year, based on our surveys, our consultation paper, and the central bankers have also issued our discussion papers on this front, responses have been very, very encouraging. So we expect to see more happening on the tokenization front. The idea is to allow people to look at tokenizing assets and settling tokenized payments. And both Bank Negara, our central bank, and ourselves have come up with sandboxes and allow pilots to happen whereby both parties come together to allow a more holistic experimentation of tokenizing end-to-end. Yeah.
Although this is not your area, it's in the area of Bank Negara. Stablecoins are the hottest thing since sliced bread over here. Everybody's talking about stablecoins. And because if you're going to use tokenization, you're going to probably use stablecoins to pay for them. Are you working with Bank Negara to come up with a stablecoin regime? And we talked about other stablecoins that may not be licensed yet, but are still available. So those are other concerns or opportunities for payments. And what's your view in Malaysia? And I'll ask Uli about that also later in Indonesia. So let me just let you answer first.
So we've had a great many discussions about stablecoins in Malaysia amongst the regulators. And at Bank Negara, to be fair, is very, very supportive of stablecoins for MYR-backed stablecoins, right? In fact, within their sandbox, which they've announced a couple of months ago, they welcome participants to bring use cases to their sandbox to test out MYR-backed stablecoins, right? And I've always urged our capital market players and our crypto market players even to explore that. If you could make MYR stablecoins use case work and show that there is demand for it, I think it's a lot easier to have a conversation around other foreign currency stablecoins. But the reality is, use case is important to us. Yeah.
So, I'm going to move forward with Uli, if that's okay.
Okay.
Uli, can I just say that I need to come to Indonesia and see what's going on, because Uli, in the time that I haven't been in Indonesia, has now grown out a huge market for digital assets. So for those of you who have not gone to Jakarta lately, they've got a very thriving digital asset ecosystem, which I'm so excited about. And we were talking about some of the legislation that you've put in place and all of the new things that are happening, which I'm going to let you talk about. So tell us how the Indonesian market has grown so much in the last few years. Can you share some of the key regulatory strategies being implemented in Indonesia to foster this compliant growth in the crypto industry? And I'll ask you more questions after that, but I'm so excited for you.
Okay, thank you. It's all thanks to the government support because according the recent reform for our financial stability, categorize crypto asset or digital financial asset into financial assets class. In here, we also having a very great transition period, moving the supervisions of the crypto asset exchanges and an ecosystem from before under the Ministry of Trade, now under OJK, where under OJK, all the financial services sectors all together being supervised. In here, we are promoting what we call it stable environment for all the exchanges having a good risk governance, how to supervise, and the other one is regarding the consumer protections. All the principles established in one ecosystem, where in Indonesia we have a very unique ecosystem. We have boards who oversight and also doing a classification for the transaction itself. We have one clearinghouse doing the financial clearing and settlement for the crypto asset transactions. And in here, we try to collaborate and interlink the role of traditional finance, the banking system, and our crypto exchanges, that all the transaction have to be done through banks. And then the other one, we have already our own place a custodian, whereas at least 70% of the ecosystem or the wallet must be placed there to ensure the customer protections, and not all the exchanges comply with that, to make sure that there is the trust from the consumer that their wallet will be managed well. The other things that we have a lot of new regulatory framework to strengthen, especially to move forward, that the crypto asset not only as speculative for profit taking, but not only for investment, but towards more role into our national economy as the backbone of our national economy, digital economy. We have a lot of new use cases that are undergoing under our sandboxing innovations, such as yesterday, we have just recently in October, we have the use cases on the breeding of the dairy cows in Java, which also having supported by ILO, in which using the blockchain technology, they interlink enterprise risk production system towards that, so that the breeders that before they are unbankable, then they can be predicted their production, and then they will then link into our credit scoring alternative agency who given them good feedback and then can transfer into the banking system from unbankable into the bankable. We also have other use cases under our sandboxing like real property, tokenization, and the last one, we are also expecting the new creative industry, game industry, property rights, project-based tokenizations. So this is something that we are looking forward, and as a regulator, of course, we are asking all the exchangers, we do the licensing process quite thoroughly, and we are expecting that all of them will maintain a good capital requirement, good governance, in order that they can not only as a part of the spot trading or secondary market, but later on they can become the agents for the IPO or ICO, something like that. Thank you.
Just as a follow-up question, Uli, what are some of the regulatory challenges that you've had in terms of when you've encountered in Jakarta supervising these digital financial services companies and crypto assets? Have there been difficulties, and how did you overcome them?
Yeah, of course, because this is technology, regarding the technology, we have a lot of incidents happening, theft, cybersecurity problem, the infrastructures. That's why we work together, not only from OJK side, we are together with the relevant agency and ministry to provide with certain education, certain capacity building, especially for the human resources. We are also have the collaboration with the university in Indonesia to provide with HR, what we call it, the new generation for coding, for blockchain engineering, something like that. And the other one is that we put our regulatory framework for the cybersecurity as a part of the infrastructure. Incident response time, we make our own collaboration, not only OJK, but also with the Bank Indonesia, the central bank, who supervise the payment gateway, because all the transaction done not only through banking system, but also through the payment gateway. So we do the supervision together, we do joint audit together to make sure that infrastructure, there is no loophole for the incident, and if there is an incident, then how we mitigate and how to, for us to do what we call it, immediate feedback and action plan towards it.
Got it. So it's really, really quite amazing. And I think all of your countries, now what we're seeing is traditional finance moving into crypto assets. So outside of this, I didn't tell you this, but I was at a meeting just recently, and the head of a major exchange that is in Southeast Asia that's very close by just made an announcement that he's going to be launching for his regulated exchange, perps. For those of you who don't know what perps are, they're digital asset futures contracts on a licensed exchange. So you're seeing government response, you're seeing now traditional exchanges. And when I was in Korea, KRX held a 5 to 6 hour conference in Korea just on exchange traded products that will be traded on a traditional exchange. So you're really seeing exchanges that are regulated and government muscle in on this whole digital asset area. And I think you're going to see more and more movement together. But the big area, Harry, just to ask you, Korea has cultural assets, boy bands, girl bands, Blackpink, and Lawrence talked about it today. Guess what? KRX wants to tokenize Blackpink. They want to tokenize all of the boy bands. They want to tokenize the cultural assets. What do you think about that? And Indonesia, are they doing some of your cultural assets also for tokenization? And same with Malaysia. What do you think about that?
I mean, yes, we are under discussion, opening up the tokenization market in Korea. However, the fundamental law, right, for the institutional to participate in the digital asset market, it's still we are still lack of the law to support them to, and then also to protect them acting in Korean market. So I think the first one is we still have we still don't have tax related law. So if you cannot tax companies, then how you can trade or having assets? So I think that's the first thing.
Well, tell them Hong Kong has no taxes.
Unfortunately, we're gonna have tax around like 20 to 25%. So, yeah, but that's gonna become in the next year, maybe.
Yep.
I think that is the first step to finalize how to tax people and then tax the companies on digital asset. I think that's the first thing. Second thing is the new law, the Basic Act. We are still under reviewing of custodian. So I think custodian is also important. Wallet is also important. So exchange is already done. I think after those laws are completed, and then I think KRX can do something else.
Well, we're looking forward to that. So I'd like to ask you all, now we're moving from 2025 to 2026. So many things have happened. You can see Elizabeth has been swamped, and all of you have been swamped. What's your prediction for next year of what you want to do, and what do you want to achieve for your particular market next year? So we can come back and meet in Finternet next year, fill up early. We'll start planning early. But let's, a prediction of what you would like to launch or what you would like to see done in your particular market. You want to start first, Wei Jin?
Yep, sure. I think for sure what we'll be able to see is more products.
More products, yeah.
That's within the short to medium term. And it's not just tokens on exchanges. We have very encouraging response from traditional intermediaries, from brokers to fund managers, in terms of offering tokenized products or crypto. So that's something we're looking forward to see for next year. A couple of people have already come to us. We will also expect to see larger players enter our market. So that's also something to watch for. And on the tokenization aspect, we have been for the whole entire year working with our sovereign wealth fund, Khazanah, to tokenize their bonds. So that's expected to come live next year as well. So interesting things happening. A couple of public-private partnerships are happening as far as tokenization is concerned. Conversations at this juncture, but conversations that are picking up, yeah.
And you've got the first regulated custodian license in Asia Pacific, so and
as it turns
we're following
out.
too.
As it turns out.
Yes.
So we do have a regime for digital asset custodians in Malaysia. We have licensed about 3, and we have been having conversations with our local banks to be able to offer digital asset custodian services as well. That's been very positive. Many of them are putting plans to do so. So we expect the digital asset custody business to grow in Malaysia, to be able to support the development of the crypto market, as well as the tokenization aspect of things.
Got it. Uli, a prediction and what are your plans for next year? And you need to leave enough time so that we can all come over and visit you and have some nice Indonesian food. But also, what are you planning in terms of new products and services or things for Indonesia?
Yeah, next year we are enhancing our, what we call it, the performance of the exchangers. We are expecting that there will be a new regulations or requirements for what we call it the risk and governance for the exchangers. We are hoping that it could boost the performance, the sustainability and ability for them to cater the consumer, especially the consumer protections. The other one, next year we also, within this year, we have the new regulatory framework, not only for the spot trading, but also for the derivative trading. And then we will yet, moving aside the licensing, because prior the derivative transaction done by the commodity traders, and we are expecting that it will be in the same platform with our crypto traders. And the later one is, as I mentioned just now, about innovation is something that we encourage through our sandbox regulatory framework. Within those control environment, we inviting many projects, and there is actually some projects that will be within our assessment in this year, and then going to be fully launched maybe next year, as I mentioned to you, regarding the property, regarding the gold tokenization, regarding the security or government security organizations and other projects coming through. In a way that we are hoping that the role of the digital economy as the backbone of our national economy will be in line and also have the interlinkage with our traditional finance, especially the role of the banking system, the role of the payment gateway, and another enabler, the custodian, and especially we are expecting also more and more issuer for the tokenization, ICO. We are expecting also the capacity enhancement for the financial reporting assessment because we're not yet having what we call it. Just now we already have one bulletin under Indonesia principle for the accounting treatment. We are hoping that it could be also in line with the standard principle. And the last one is regarding combating, as I mentioned to you, the anti-money laundering. And we are hoping that we have harmonized rule to prevent any regulatory arbitrage, and hopefully with all other nearby country neighborhood, we can together strengthen our what we call regulation and assessment, and especially a response for the cyber incidents that happening, and how then if the theft going and bringing the wallet or the money outside our jurisdiction, and how then we can tackle and then solve the problem together.
Wow, okay. Fabulous. I can't wait to see Indonesia. And last but never least, Harry, I'm not going to put you on the spot for a prediction, but what do you think is going to happen? You've said you think the licenses will come in a year's time. What's a prediction that we won't hold you to that you think in Korea, will there be more adoption of crypto over the next 6 to 8 months? Are people trading offshore because nobody's going to stop them? What are some of the things that you predict? Just one or two for the audience.
I think basically the market going to be more regulated. And once it's more regulated, the institutional players can participate more in Korean market, such as like DAT and stablecoins. So yeah, it will be very exciting for 2026. So yeah.
I think it's one of the most exciting markets, and one with a lot of possibilities. And I think you're going to really need to help them out. So, audience, thank you very much for being a great audience. Can we thank our panelists here today in terms of coming all the way over to Hong Kong and sharing what's going on in their markets. And I really encourage you all, you got to study what's going on out there, because it's amazing of how digital assets are growing throughout all of Asia Pacific. And you know what? We're better than the US. We are much better. We are Asia Pacific. And we got to work together, right? Anyways,
thank you.
Have a great rest of the conference.
Thank you.
Thank you so much. Thank you. Let's take a group photo together. Okay. One more picture, right? Okay, thank you so much for bringing us such inspiring and insightful conversation. Thank you so much. Please be seated. And now we will move on to our first panel discussion of the day, focusing on the topic, empowering the real economy, unleashing new potential of digital finance in cross-border payments. As we all know, the efficiency and cost of cross-border payments remain a major pain point in global trade. So, in this session, we will explore the potential and challenges of digital finance in this field and discuss how improving payment efficiency can empower trade and other industries by providing reliable, convenient, and cost-effective payment solutions for enterprises. So now, let's welcome our moderator, Mr. Sean Heng, Vice President of Global Payment Products of OSL Group. 讓我哋掌聲有請主持人 OSL 集團全球支付產品副總裁商恒先生。有請 OSL 集團全球支付產品副總裁商恒先生。And our speakers, Mr. Nishin Sanghavi, Head of Digital Currency, Asia Pacific of Visa。有請發言嘉賓 Visa 亞太區數字貨幣負責人 Nishin Sanghavi 先生。有請發言嘉賓 Visa 亞太區數字貨幣負責人 Nishin Sanghavi。Let's welcome Mr. Yan-Ki Chen, Vice President, Asia Pacific of Circle。有請 Circle 亞太區副總裁 Yan-Ki Chen。有請 Circle 亞太區副總裁 Yan-Ki Chen。Let's welcome Mr. Jonathan Wong, Chief Financial Officer of Sunrate。讓我哋掌聲有請 Sunrate 首席財務官 Jonathan Wong。有請 Sunrate 首席財務官 Jonathan Wong。And let's welcome Mr. Tim Fu, Market Leader for Hong Kong, Korea, and Taiwan of PayPal。有請 PayPal 香港、韓國及台灣市場主管天父先生。有請 PayPal 香港、韓國及台灣市場主管天父先生。So, gentlemen, please be seated.
All right, good morning, everyone. I know it's going to be lunch soon, so I'll try to keep this panel discussion really short and efficient. But, it's great to see everyone at Finternet 2025. Today's panel, it's called Empowering the Real Economy, Unleashing New Potential of Digital Finance in Cross-Border Payments. And we have a fantastic panel with us today. So we have Jonathan from Sunrate, we have Yan-Ki from Circle, we have Tim from PayPal, and we have Nishin from Visa. So thank you all for joining us today. Let's start with a quick introduction of everyone's roles and responsibilities so that we can sort of set the context straight for the audience here. Cross-border payment is a very exciting new topic for us, and I think everyone in this room is talking and thinking about how do we use stable coins, how do we use crypto to empower the new economy, how do we use stables and crypto to drive cross-border payments. So I think this panel here is probably the right people you should talk to. So let's start with a quick intro and then we can take it from there.
Okay, I'll go first. Good afternoon, everyone. My name is Nishin Sanghavi. I head Visa's digital currency business for Asia Pacific. Great to be here. Again, I think when we look at Visa and the digital asset space, not everyone is aware of what we are doing. So I thought I'll spend a couple of minutes on just giving an overview, especially on the cross-border payment side of things that we are focused on. So firstly, I think there are 4 things that we are really working on today. The first one being, modernizing our treasury infrastructure, integrating stablecoin within our existing payment rails. So when we look at our partnerships with people like Circle, PayPal, and other stablecoin providers, we are adding stablecoin capabilities to our existing settlement flows with our issuers, acquirers, and then throughout to the merchants. We are adding and integrating stablecoins to our existing fiat-based flows. So we have a great payment rail called Visa Direct, which is primarily for fiat today, but now we are adding stablecoin capabilities to add especially for cross-border payments, and that's something we're really looking forward to. Thirdly, I think programmable finance has been a buzzword for a long time, and we're looking at how we can support the big financial institutions on their journey towards either creating the stablecoins or creating tokenized deposits and other forms of digital fiat. We've also been working on the EHKD pilot phase 1 and phase 2 using our product, the Visa Tokenized Asset Platform. And then lastly, we have our on-ramp and off-ramp rails, which helps customers to buy stablecoins in crypto, as well as spend stablecoin in crypto at any Visa merchant globally. So hopefully that will give you a perspective of all the things that Visa is doing.
Thank you, Nishin. Yamki, do you want to go next?
Sure. Well, first, thank you to Sean and OSL for inviting me to join this session. It's really good to see so many people sitting in the seats with so many events happening in the city. My name's Yamki, and I run Circle's Asia business. Circle is a full stack global internet financial platform. We're probably most well known for the USDC, but really we have everything from the blockchain layer. We just announced ARC, which is in testnet as of last week. We have our tokenized money, USDC, EURC, as well as money market fund, USYC. And then when you move up in the stack, we have different sort of Web3 services, middleware that help companies transition onto Web3. And then at the application layer, we have something like the Circle Payments Network that helps connect financial institutions to pay one another using stablecoins cross-border. To put some of this in perspective, there are about $75 billion worth of USDC in circulation today. And since USDC was created until end of September this year, there have been about $40.5 trillion of on-chain transactions with USDC.
Jonathan?
Hi, everyone. Thank you, Sean, and thank you, OSL, for this invitation. So I'm from Sunray Group. So we are a global payment service provider headquartered in Singapore. So obviously our main product is helping our clients with treasury management, FX, and hence money movement. So great to be here and to share with everyone what we learned about Web3.
Right, Tim?
Hi, so I'm Tim from PayPal. Thank you, OSL. Thank you, Sean. Thank you, my fellow panelists as well. So PayPal, I think it's about 440 million users, including 40 million merchants on our digital platform. In Hong Kong, we've been here for 20 years, which I had to research and look up. We've been licensed under the SVF regime since 2016. So PayPal, very much a trusted network for B2C payments, but beyond that as well. I think it's trad, but it's also digital. But for PayPal, many good things, given that we're headquartered in the US, start in the US. So we have a stablecoin, PayPal USD, PYUSD. And in the US, a number of use cases have been enabled in terms of hold, buy, sell, but also pay at merchants from a US wallet standpoint. So I think for PayPal more broadly across the globe, one of our purpose would be to enable the bridging across the digital business that we currently do into the new world. And as our merchants and consumers start to kind of like look into this much more, the enablement of that is something that we take at heart in terms of something that we need to encourage and help to grow. Thanks, Sean.
Awesome. So maybe let's start with a quick sort of, big picture and set the context for today's panel discussion. Sending money across border is still slow, expensive, and frankly, a lot harder than it should be, right? Some transfers still takes, many days and costs more than 5% for some of these transactions to happen. At the same time, I think you probably heard from Mr. Lawrence earlier in the opening speech, more than $200 billion of stablecoin is currently in circulation today, right? And so I think, and especially even in the panel discussion earlier, you probably hear from different Asian countries, whether it's Singapore, Hong Kong, Indonesia, Malaysia, even Korea. I think everyone is sort of thinking about regulations and how do you sort of engage with the private sector to create new innovative ideas. So I think the question first today, and something that we want to take away from this panel discussion, is how do we now turn this momentum? How do we turn this sort of, 0 to 1 into, and let it go mainstream? What does it take for us to drive real incremental change or step change in this stablecoin space itself? So let's start right at the foundation, right? I think we are moving from legacy banking rails to on-chain finance, on-chain settlement. Cross-border settlement times are shrinking from days to second, through on-chain finance. But beyond speed, what's the real business impact and challenges of moving from legacy rails to on-chain? Because not everything gets, it's that straightforward, right? I think there are real challenges, there are real meaningful impact as well. So, I think the question for the panelists is, does on-chain finance, on-chain settlement fundamentally change trust, counterparty risk, or working capital efficiency? Jonathan, let's start from you. What has changed so far, right? What have you observed, with on-chain finance, on-chain settlement, and what are the real impact and benefits to businesses today? And obviously, I think panelists, feel free to jump on afterwards, after Jonathan has shared his thoughts.
Sure, I'll share my view probably more from a Web2 perspective, and obviously our friends here can share more on their latest development on Web3. I think for us, the traditional, probably the G7 or the G10 market is fairly efficient. I mean, with what our capability right now, we can do T+0 settlement across different level of banks layers that would be on top. Where we've seen there's a lot more opportunities, probably in the emerging market, whereas, for maybe a lack of liquidity, like in many African countries, or maybe there's, less clear rules on what sort of impact of the local tax regimes changes it may have. So I think that's where we have seen there's probably more opportunities where we can leverage the latest infrastructure to do that.
Thanks, Jonathan. Anyone else want to add?
Just quickly add, I think we always talk about the 24/7 nature for stablecoin payments. And of course, that brings a speed element. But I think what is more importantly behind that is it provides you settlement facility on weekends, public holidays, which today is a big pain point. Where I think, especially if you're a large fintech or a small fintech, the amount of pre-funding that is required for holding that money over the weekend and even longer for public holidays is pretty large, and it can add up very fast, especially in a high interest rate economy. So that's where I think we do see a lot of efficiency gains on a working capital level for many of the fintech, small businesses, and other players in the market.
Yeah, I would highlight a couple areas. One is definitely the settlement of money cross-border on weekends and holidays, and we see a lot of our customers that are using USDC to supplement their banking rails and also have resiliency vis-a-vis their banking rails, right? Banks are not going away. They're still going to be around. However, banks have banking hours, and rails have rail hours, and blockchain does not. So what we're seeing is companies moving money from whether it's Latin America or Europe to Asia and be able to move that fund a lot faster back to their home treasury location. That's one. The second piece, to Jonathan's point, it's around payments to emerging markets. Lots of companies, particularly here in Asia, have supply chains all around the world, in Southeast Asia, in Africa, in Latin America, and with de-risking happening at the global macro level, many firms are setting up subsidiaries and shops around these different places and are finding ways to move goods and supplies through these various emerging markets. One of the challenges that they face is the slowness of the banks or the hurdles in terms of settling across some of these jurisdictions. It could take T+3, T+5 to be able to send money to Africa and have it settle on the other side. And for some of these businesses, the margins are so thin, it's not only about the speed, but also the certainty and SLA that they can get from a blockchain versus traditional banking rails.
Awesome. So I think that sets a great baseline in terms of where the difference is between legacy rails and also on-chain finance. Let's talk a bit about where this transformation is happening. So I think Asia Pacific, Middle East, Latin America, everyone is sort of moving in this direction. I think there's a lot of adoptions in the emerging markets itself. Nishin, from your role at Visa, right, which regions actually do you see lead adoption and why? Right? Is it more regulations, digital wallet infrastructures, or just the sheer volume of SME trade that wants to jump onto this boat because it solves a very particular pain point that they're all facing? Like what you guys were mentioning, going from T+5 to T+0. So where are these regions that people are looking out for?
So again, I think you mentioned all the regions pretty much, but I think if you look at Latin America, I think has a region is more retail oriented, especially because of many of the markets having hyperinflationary environments, and so it's a very different use case. US in particular, of course, after the Genius Act, there's a lot of excitement and adoption across financial institutions, even banks today. Again, my focus is on Asia, so I'm going to be a bit more biased. But let me also give you some reasons why I think Asia is going to be at the cusp of a lot of the adoption. Firstly, we are one of the highest remittance receiving markets in the world today. I don't know the exact statistic, but it's more than 50-60% of the entire remittance market is in Asia. So that is a big focus on how stablecoins and other forms of blockchain-based payments can improve this efficiency and reduce the cost of payments. It is a big focus for everyone. Secondly, Asia is a massive export market. So on the retail side, we talked about remittance. Now on the business side, with all these exporters selling into different jurisdictions and selling into Africa, Latin America, where sometimes receiving payments is a bit hard, stablecoins expected to play a big part of that. And when the money comes back in stablecoins, it also comes with a lot more speed, much more efficiency. So those are the areas which I feel will drive a lot of adoption towards Asian markets. We also have forward-looking regulators. Right? We had regulators on the stage today earlier on, and they were talking about how their markets are looking at it. And we've seen Hong Kong, Singapore, and many other markets which are expecting regulations in the next 6 months, whether it's Korea, Taiwan, Vietnam. And I think there are a bunch of consultation papers and legislations that are pending. So I think in the next year itself, we're going to see a massive shift in the regulatory environment within Asia Pacific. So I think all three together, I think we do see Asia Pacific poised to become one of the leaders in adoption for stablecoin and digital assets.
Awesome. What about Tim? So from PayPal's perspective, which regions are you seeing that actually has a lot more interest in, whether is it on-chain finance and settlements and stuff?
I think the context is that in Asia Pacific, the SMB or the SME scene is very vibrant. And I think what you mentioned earlier, Sean, is very correct in terms of a deep interest in solving for particular use cases. But I think everybody's on a journey in terms of some of them want to dip their toes, some of them are more ready in terms of, hey, let's make this real. I think the panelists earlier mentioned the flexibility needed in terms of whether it's a CFO, treasurer, in terms of how many different options they need to have on hand to be able to fulfill. I think we're still on that journey. We still definitely see from a PayPal standpoint a lot of interest in this area. So when I'm in the market speaking to merchants who are selling to the US, selling to the UK, a lot of them are now asking about, hey, what are my options in terms of having to settle but also to pay for, etc. On-chain, off-chain, how does that work as a combo? How do we bridge these two pieces?
Awesome. Yamki, I think there's probably a lot of questions around Circle as well. Where is the adoption coming from? Whether is it USDC or even the Circle payment network? Curious to hear your thoughts around this.
Well, I think, first of all, at the risk of generalizing, the regions around the world are using stablecoin for slightly different reasons. Again, very, very broad statements. In Latin America and Africa, it's out of necessity. And it's out of necessity because their home currency are highly inflationary, the banks are not as stable, the rails are unpredictable, and people are using in particular dollar stablecoins because the existing infrastructure hasn't been able to evolve and grow with the demand of the economy. In the case of Asia, it's entrepreneurial, it's innovation, and it's efficiency. I mean, you look around this room, and you can probably find 500 plus founders that are here trying to figure out how do I create the next new thing, and they're using stablecoins to build a more efficient business, a faster business, to be able to move money quicker, and to be able to buy goods to drop ship or do other things. Very, very different mindset, right? They don't need dollar stablecoins per se for inflation purposes. Over in the Western developed world, and to some extent, in the Singapore and Australia, it's institutional adoption, right? Because the banks are good enough. There's certainly things that can get better. The domestic payment options are pretty good, and frankly, they dominate in the terms of trade, right? They dominate in the dollars, they dominate in the euro, and they issue it, they have it, they can move it. That's not the case for everyone else. So for them, it's the regulatory development that has now shifted the conversation, and it's shifted to large financial institutions that are using. So as an example, we have announced partnership with ICE, the Intercontinental Exchange, that runs the New York Stock Exchange, on how do you use stablecoins and digital assets to make them more efficient. We did the same thing with Deutsche Börse, German derivatives exchange, on leveraging some of our technologies to be able to facilitate trading. That's not yet happening here in Asia. It doesn't mean that it can't. But the mindset here is, how do I build different types of businesses and how do I leverage this technology, as opposed to large institutions picking it up.
Awesome. Jonathan, what about you? From Sunrate's perspective, what were some of the insights or conversations you're having with your partners, around the different adoptions in the different regions?
I think it's probably very similar to what you just mentioned there, right? I mean, we see, for example, with most of our clients, if you like, the supply chain coming from the APAC region, right? Whether you like it or not, the APAC industry or the GDP setup is still very much the manufacturer base, right? So obviously, with the trade war, with the tariffs, they now have to start selling into different regions where, for what the reason we've discussed, because of lack of infrastructure, lack of liquidity, or lack of real settlement times, right? So the clients are not demanding this in some ways, instead of us asking them to say, hey, would you like this or not? So this is probably slightly different from PayPal's case, where we've seen the other way around, to say, hey, do you have this? Can we have this?
Awesome. So now we have the rails evolving, right? The technology is improving over time. Specific regions are driving momentum. But of course, I think none of this really scales without the right regulatory green light or the right regulatory framework. So let's talk about regulations next, because I think that's also something top of mind for a lot of people. How, what are the do's and don'ts when you think about, cross-border payments using on-chain finance or on-chain rails? So, I think we heard from earlier speeches and earlier conversations around Hong Kong, Singapore, Asian countries sort of rolling out frameworks for stablecoins, for digital money. Yamki, I'm curious, what are you seeing? Are we seeing regulations sort of align across different markets? And do AML, foreign exchange rules and licensing gaps still slow down the general adoption?
That's a leading question. Well, first of all, who thought, a year ago today, who thought that we would have legislation in the United States, in Europe, in Hong Kong, and Japan? Right? I don't think any one of us had predicted that on our bingo card for 2025. But this is the world that we're in today, right? In the United States, the president has signed into law clear legislation of what a stablecoin is and what a well-structured stablecoin look like. In Europe, they passed MiCA several years ago, came into effect last year. We're the first global issuer to come into that framework for both USDC and EURC. In Singapore, there's been a digital payment token framework. They're upgrading that or adding a stablecoin specific framework. We're already regulated as a DPT service provider. And then, of course, sitting here in Hong Kong, the government passed this law, and in August this year, that came to effect. And according to some of the press reports, over 70 companies have indicated an interest to apply for a stablecoin license. So the legislation is definitely driving a lot of interest and driving a lot of certainty. Now, your question around AML and capital controls are very, very legitimate. It is really important to have proper AML controls in place. And it's also important to, in the same way that not all stablecoins are created equal. There are many things that call themselves a stablecoin, but the government very clear what makes a well-backed, well-regulated stablecoin, what that looks like. And what it does is that it creates international standards. It allows well-regulated stablecoin to be recognized in different jurisdictions and to move beyond them. And that's really important because that's what facilitates liquidity, the interoperability. It's a useless token if you can use it in Hong Kong, but you can't use it in Europe and you can't use it in the United States, and vice versa. That if you can get into it in particular countries but not out in the other, all you have are vouchers or reward points. You don't have a stable coin, right? So all of those rules have to be harmonized. There's quite a bit of work there. And we're working with regulators to refine that. On the capital control piece, I think it is an important conversation. So right now in Korea, there is an active debate on development of a stablecoin legislation. There's a whole conversation between BOK, FSC, the Ministry of Finance, and the Blue House around how to set up the rules. Capital controls will be one of those conversations. But it's important to keep in mind that stablecoins in and of itself doesn't work around those. There are intermediaries on the ground that are properly regulated, the same way that there are banks and PSPs and others that are properly licensed that are essentially doing the local FX and can handle various controls as needed.
Any other comments from the other panelists in terms of regulations? I know it's a tricky topic for a lot of people, but I think what I'm also curious to understand is, where are we seeing regulations align? Because end of the day, we are talking about cross-border payments, right? So one border doesn't, one regulation, or rather multiple regulations needs to align to allow for cross-border payments to happen. So Nishin, not wanting to put you on the spot, but from Visa, while you guys are talking to different partners and, different businesses, where are some of the challenges in terms of regulatory alignment?
Yeah, I think on the regulations, it will take some time to evolve, right? I think it's not just one piece of regulation. I think Yamki mentioned about like some of the stablecoin regulation that has come up. Now we have Genius. There is also the idea of it's still a cross-border payment, so it will have to follow what you have legislation for cross-border. From a KYC ML perspective, you still have to follow the regulatory environment, whether it's travel rules. So again, it's not just one aspect of it. There are multiple aspects. And again, you will need eventually more regulated firms. And I think we also think this is going to be a partnership-driven thing because not everybody will be able to do everything. So we have to partner with the right players who hold the licenses, who have the right setups. And I think that's how we think the ecosystem will thrive.
Thank you. So I think we have discussed payment rails, we have discussed corridors, we have discussed regulations. Let's widen the lens a bit. So let's think about, end of the day, cross-border payments is not really just about moving money, right? It's about reshaping how value flows globally in trade finance, in treasury operations, and just in a lot of other different use cases. Tim, maybe I'll direct this question to you. Which real-world economy use cases have you seen work well, and which verticals do you expect to scale in 2026 and beyond?
I think from a PayPal business perspective, clearly we have a lot more kind of like history on the B2C piece. So I think maybe I'll start there. And I think the context is, to a certain extent, if I go all the way back to the pandemic, where we had like an acceleration of kind of like digitization of payments, especially in the B2C space, I think that really gave the whole kind of like cross-border transaction B2C space a bit of a boost. And I think that's still growing massively. And I think that gives a good context to what I would call, from PayPal's standpoint, a key kind of like real economy use case, which is how do I get my trainers from the US? How does somebody in the US get their fidget spinners or whatever from Hong Kong or from China, etc.? And I think I would go all the way back to kind of like e-commerce fundamentals in terms of conversion rates, etc. And one example would be around kind of like cart abandonment rates. So very real, I'm sure we've all put stuff into our shopping cart at a marketplace and then abandoned it. Apparently in Asia Pacific, it's around 70% of carts which are abandoned. One of the factors behind how carts are abandoned relates to the choice of payment options when you go to the checkout. So the feedback is that 1 in 5 of consumers who don't see the preferred payments method to check out would abandon the cart. Does it mean that if we have mass adoption in the consumer space for a certain payment method, inclusive of on-chain devices and tools and coins, etc., we would be able to improve our conversion by 20%? I think that's a question, but I think it's definitely worth exploring for a world where cross-border trade is heavily disrupted by tariff, de minimis, etc., which is gathering a lot of interest. So I think it goes hand in hand in this whole kind of like, and apologies for the rather long storyline, but consumer adoption and also institution adoption, but in the middle there, the SMBs who are selling and actually selling the trainers, etc. I think all of those moving forward is something that I see starting to happen, and in many cases already is happening, and I think will be accelerating. So hopefully that's a good context for the real economy.
If I may kind of bring the question that you asked, Nishin, with the question you have with Tim kind of together on the policy, regulatory, and on the use cases. And for those of us who've been in payments for a long time, or for some time, some more than me, I'm sure, it's important to think about what type of payments and what's the use. Meaning, people often jump straight to consumer because that's what we've been trained to think about in the last 20, 25 years of tech. Right? Consumer tech is cool. But it's in a financial regulation point of view, that is the most risky and most complicated. So what we see at Circle are actually companies that are using stablecoins, first of all, internally within their treasury movement, what they're doing, because that's your choice. There's not a whole lot of, there may be in some places, but generally there may not be regulations around that because you're choosing to use one type of asset.
There's no counterparty angle.
Exactly, account-to-account movements. It's you're able to make those decisions. Then you get to third-party payments where you're paying others, and then now you increase a little bit of risk. But there may be a reason why you want to do that from a regulatory perspective, because now you're able to buy goods a lot faster. Then there's the accepting piece where you're a marketplace and you want lots of different options. And having worked at other companies, when you turn on acceptance, to turn it on in the US and Europe is fairly straightforward. You turn on a card, maybe a local banking account transfer, and then you have access to lots of markets. But when you look at the emerging markets where a lot of businesses operate, it's really hard to figure out the local payment acceptance. Complicated gateways, a lot of API integrations, enormous amount of cost. That's where PayPal, I think, has really thrived, is because they have a bunch of stack there. And this is where the Stripes, the Checkout.coms, everyone else are moving into. And you've got companies like Shopify that are in ShopPay bringing in crypto payments as well. Because their merchants are like, I just need to be able to convert that sale. And the person happened to sit in Brazil. I don't want to figure out my payment gateway and all that. I just want to click a button, have them pay, and then I just ship them the good. So it really depends on where you want to go. And it's important as businesses think about where are your pain points? Where can you start? And which part are low risk, less complicated from a regulatory perspective? And then how do you then increase its exposure? Because if you can figure out the core, it's actually quite easy later on to add the other part and the consumer-facing part.
Thank you, MP. I think that's a great point. I think the tech, the infrastructure needs to scale alongside regulations. And maybe for Jonathan as well, from Sunrate's perspective, what kind of use cases have you seen work well from your payments within the business itself?
We think it's going to be a sort of a unified or hybrid going forward, right? I mean, again, looking at our clients that more and more start setting to different geographies, so it's not just dominated into the US, the typical Amazons in the UK, so it's not moving start to different e-commerce platforms, right? So I think both of you mentioned there, we've seen the technology leap developed actually much quicker in these developing countries. Taking Brazil, for example, they've got the Pix, right? So it's surprising to see how many people used to use boleto, what they call checks, and now everybody's doing Pix online. So if you're not doing that, then obviously you can't sell to local customers, right? I believe I've read somewhere, I mean, there's obviously a different data set. The use of stable coins already in sort of volumes of trillions, right? One data set is Visa and Master combined. One data set is if you remove the bots, it's probably still below each of them. But you can start to see the increasing level of adoptions, right, with consumers. So I think one way or another, we would actually see the market would actually to follow the adoptions, right? So hence it would become another sort of payment tools that I think all of us have to think about how to embrace that.
Yeah, to put a statistics on it, in the first half of 2025, there was $12 trillion of USDC on-chain transactions. Yeah. 12 trillion. right? And the velocity of money on chain is just a lot faster.
Awesome. Nishin, anything to add on that?
I think I'll just say, I think in terms of statistics, I think so what we've done is we've got a dashboard, online free dashboard, everybody can look at it. It's called Visa On-Chain Analytics, where we take all of this data for different stablecoin providers and put it onto perspective. We've also done some methodology working with one of our partners, Allium, to see how we can adjust this data and get it to a more real level, even removing some of the internal transfers, the bot transactions, all of that, I think, which is what he was talking about, right? So I think that the 40 trillion, I think Yamki mentioned, it still comes down to about 8 trillion, which is also still pretty large, even at an adjusted basis, right? So this industry has been growing leaps and bounds, and we do expect it to continue to keep growing, right? So, I mean, if you're not part of it, I think it's best to start reading about it pretty soon.
Awesome. So I think it's coming to 12:30. I know everyone is probably thinking about lunch right now. Let's close off this panel with one bold prediction from each of you, right? By this time next year, what's the biggest change we'll see in cross-border payments? Nishin, maybe we'll start from you again.
Maybe instead of prediction, I'm going to say what I'm most excited about. But I think the way we are moving on cross-border payments, as we talk about small businesses, fintechs, we're really excited to see how this moves to the institutional level. And that requires a lot of things to happen in terms of liquidity, but that's one thing which I'm really excited about. And second thing is the regulatory environment, right? As we look at Asia Pacific again, as that opens up, it's going to open up many new opportunities for all of us.
Thank you. Yamki?
Well, first I have to be careful because we're in a quiet period for Circle. Our earnings call is next week. So I won't make any predictions related to us, but I would say that this industry is going to get larger because rules are coming into place. And we're going to see implementation rules for Genius. We're going to see legislation coming out of Korea. And that's really going to bring into the conversation some of these institutions that have been sitting on the sidelines. And frankly, the institution volume will shock, I think, a lot of different people because the numbers are going to be so much bigger with institutions than it is with retail.
Mine is probably going to be a little bit boring. I think that there's a lot of discussion on the pros of whether it's stable coins, RWAs, decentralized technologies, but there's less discussion on the cons, right? I mean, I think for really business or end user to adopt it, I mean, people need to understand what risk they might be taking, right? Whether it's being KYC, whether it's being AML, or whether it's basically knowing where's your private keeping held, right? So I think there is a lack of knowledge. I'm not necessarily saying there's additional risk, but I think people need to make that more aware and be able to mitigate that risk, right? Like everything else, there's always risk involved, right? But how do you control that? So taking some maybe more concrete example, there's people who've been talking about the harmonization of the AML policies, right? In terms of the KYC, the travel rules. I think that's one of the talk we has been greatly discussing Hong Kong, right? So how do we actually deal with that? How do we actually deal with it? Imagine if you got a global business, like all of us have. How do you actually cope with the data privacies? I mean, that each different region, even that alone would actually, interrupt your business, right, for your expansion. So I think there's a lot of things which is more on the con side. How do we actually address that properly? I think that's probably one of the keys I think would need to happen in the next 12 or 18 months for us really to scale up.
And I think that's, in the coming 12 to 18 months, I think consumer adoption, I think I can predict that it will go up. But I think if we dive in a little bit deeper, it's kind of like related to what Jonathan was saying. Underlying usage of payment is to an extent based on trust, quite a large extent. And I think the credibility which is brought upon by the different regulatory regimes in the different markets, not only does it benefit for those specific markets, but from a cross-border, multi-jurisdiction perspective, and the interoperability between all of those different markets on both sides of the transaction is to an extent in the trad space what PayPal's been doing for a number of years, but which we're now seeing movement on from the on-chain side of things. So my prediction is based on that trust building, consumers seeing that, and therefore choosing to pick this as well.
Thank you. And with that, let's close off the panel discussion. Could we give the panelists a round of applause? And great insights. Thank you all for joining us today. Enjoy the rest of the summit and do enjoy lunch. Thank you.
Thank you so much. Let's take a group photo together. And once again, thanks to all the guest speakers that are bringing us wonderful and meaningful sharings in this morning. And thank you so much for all the participants here for joining us for this Finternet journey with us. So now this is the end of this morning's schedule, and we will be back at 1 p.m. Please remember the time, 1 p.m. So now we can go out, visit the booths, and connect with one another and have some lunch. And remember to go back to this ballroom at 1 p.m. See you guys later. Welcome back to our Finternet Summit 2025. My name is Wayne Kong, your MC for today. So after an exciting morning filled with insightful sessions, now we will continue with another fireside chat on the topic of Solana ecosystem trends. Built on a high-performance public chain, Solana is actively expanding and diversifying its ecosystem. So in this session, we will explore Solana's core ecosystem development strategy, including its latest breakthrough in network performance, the evolution of its financial infrastructure, and its deployment in emerging scenarios. So now, let's welcome our moderator, Mr. Eugene Chen, Chief Commercial Officer of OSL Group. 讓我哋掌聲有請主持人 OSL 集團首席商務官張英華先生，有請。有請 OSL 集團首席商務官張英華先生。And our speaker, Ms. Lily Liu, President of Solana Foundation。现在让我们掌声有请 Solana 基金会主席 Lily 牛女士，有請發言嘉賓 Solana 基金會主席 Lily Liu 女士，有請。
Good afternoon.
Thanks, Eugene.
Welcome to Hong Kong.
Thank you so much. It's always great to be here.
Yeah, I hope you enjoy the crowd, the food, everything here.
Absolutely.
Yeah, so I know you've been traveling extensively for the Solana Accelerator for the past week. I've been to many cities. I was there with you in Shanghai, Hangzhou, and Shenzhen. So any interesting discovery, insight, want to share with everybody here?
Sure. So we decided back in May that we wanted to do some events, not just in Hong Kong, as we've been doing for the last couple of years, but wanted to be more directly engaged in mainland China. So we did, over the course of a week, we went to Beijing, and then we held 3 events in Shanghai, Hangzhou, and then Shenzhen. And I think that we were maybe first in the industry to be able to make that type of investment and engaging directly with the community. Gosh, we learned so much. One is that just the degree of interest up and down the stack of blockchain is really, I would say, like overwhelming and very, very 热情, okay? And so there's a tremendous amount of excitement. And I think that there is an interest in the ability of this technology to really be a technology platform and to see beyond many of the, obviously very retail-oriented use cases of the last 15 years. And now that infrastructure in the industry has matured, potentially more technologically oriented interest in this idea that Web3 is really the third phase of the evolution of the internet to move beyond information, move beyond mobile, and add sort of this native financial layer to the internet. And that's something which is deeply interesting to people really around the world. And I think that's part of it. And what we've also observed around the world, and here is no exception, is now that in the United States, they've been very clear and really went all in to say that stablecoins are a topic of economic national security. That has obviously got everyone's attention really around the world and has put blockchain infrastructure front and center, I think, on everyone's fintech roadmap, tech investment roadmap, capital markets roadmap, payments roadmap, tech company roadmap, and that's been really transformative around the world. So that's great for us because fundamentally we're a technology platform, open source, serve developers at the end of the day. And so that is what has been our core purpose from the beginning, and that's never going to change.
Well, it definitely looks a lot of things going on.
Yes.
Yeah, crazy schedule, but you still look very energetic. You must build something differently, or you have some secret to share. How to keep up with everything going on with Solana, with the market?
Well, I think it's honestly just a lot of fun. I'm going to be honest. I think it's really energizing. First of all, you got to be an extrovert. I think that if your personality is an introvert, like this type of position might really just be the end of you. So you've got to be an extrovert. But it's really just energizing to be around people who have sort of like a very, very optimistic and positive a relationship with what blockchain can do, see the technological possibility, and also really have the skill sets to help some of that come to bear, right? And I think it's no secret to people that if you talk about payments, I've been of the conviction for a very long period of time that the most sophisticated, deepest pool of payments talent anywhere in the world is here. And now that that has really become also front and center in the blockchain world, then I think it's something, that's one of those things that is deeply known and appreciated in this part of the world, but the rest of the world doesn't fully understand how deep and how capable and how mobile first and how web native the payments sort of product engineering ecosystem is here. And so I think that's actually a really perfect fit for where blockchain is developing right now. And that's one of many things that I think are really interesting about being in this part of the world. I think that's one. Clearly, when it comes to hardware and AI, those are also really hot themes right now, and also the intersection of those when it comes to payments. And so for us over the last 2 weeks, look, we always just want to focus on the things that you can do. And there are so many of those things. So we can focus on building real use cases around that. Last year when DePIN was really hot, that was also a vertical that we as Solana really were sort of the leading chain and still are the leading chain on. And so those are some of the areas that we think are really value added, really interesting, require really deep talent. And there's a large category of things that you can do. And that's the stuff that we're focused on.
Yeah, that sounds like also a group of people who want to get a job in Solana Foundations. I think you guys are hiring.
We are every so often. Although I was actually just on Twitter right before I came here, and I saw that ecosystem jobs, which is actually the metric we care about more, a lot more, is there's 513 open jobs in the Solana ecosystem. And one of the ways we've always thought about sort of the relative growth of the ecosystem versus the foundation is, because after all, what you want to do eventually is you want to, like the community, it's community-led growth. So we actually do look at the ratio of open jobs in the ecosystem versus open jobs in the foundation. And over the last year or so, that's been about 100 to 1. That's the way it should be.
Great. Yeah, I think a lot of people pay attention to that. So yeah, let's talk a bit more about Solana, the whole ecosystem. So Solana has the most active wallet on the chain, especially compared to other chains. So actually, I looked up this morning, it's about 2 million something. It's probably 4 times compared to the second one, right? But we all saw the recent news. First, congratulations. There's a big news about your collaboration with the West Union, Franklin Templeton, right? So it also seems like you're also shifting the focus from getting more active wallets into like building more TVL on chain, right? So so I wonder, is a big major strategic shift, right? What's the reason or consideration behind that?
Yeah, I think that our perspective on the purpose of blockchain is that it's tech that serves finance. And if you think about what the needs of financial systems are, they're actually pretty simple. Number one is liquidity, and liquidity, in order to make it maximally accessible, has to be fast and cheap. Those are the core requirements of financial infrastructure. Of course, there's more than that, but those are some of the core requirements. And so that kind of core profile is something that can serve all sorts of different markets. And as is true with new technologies always, you start off maybe at some tail end, right? Even if you look at Bitcoin, if you look at what the narrative around Bitcoin was, the uses around Bitcoin 10 years ago, they're wildly different from today. And that's just a part of a natural evolution. And at no point in time has Bitcoin been, I remember when I first got started in Bitcoin in 2013, people thought that Bitcoin's primary use was laundering drug money. And we've moved hugely beyond that. And so with new infrastructure, with new technology, even with the original internet, I remember in the very early days, it was seen as being a little bit of like this shady thing that people would do online with dubious types of content. So this is not new that when there's new technology which comes to market, it's used for, let's call kind of like tail use cases for some period of time. That does not mean that that is what its end goal, what its end purpose is. In fact, one way to think about it is that it's, even if it's high-risk content, it's actually a low-risk way to mature the technology. And I think that that is what we have seen in all experience and participated in over the last number of years with regards to sort of the non-Bitcoin rest of the world, meaning the sort of blockchain as infrastructure part of this industry. And so I think that when you look at these, let's call it crypto native markets, yes, there's certainly a lot of activity and engagement in those asset types themselves, but what is it also doing? It is providing a live market to test and mature the underlying infrastructure. And when you think about internet capital markets, that's about trading. The internet is open, markets are open. The ability to handle huge surges in demand and flows over weekends, overnights. And what you've seen with Solana the last couple of years is its ability to do that. You saw that in the beginning of the year when there was like a huge token drop over a weekend in January. You saw that even a few weeks ago when there was a really crisis of exchange infrastructure in this industry, and yet the Solana dexes were doing just fine amid, just a lot of like traumatic infrastructure breakdown. And so I think in this early stage, I focus less on exactly what that asset type is, and I really see it as sort of this longer-term building of this core financial infrastructure that can support any asset. And so the work that we as the foundation are best suited to do when it comes to sort of commercial development of the ecosystem is we have the unique ability to be that counterparty to large institutions that come from a certain perspective and want to have a counterparty to work with to really help articulate what is the value of this ecosystem, what is the capability of the blockchain, and be a partner, a thought partner, execution, strategic partner in that. And so I think we've seen a number of those over the last couple of years. Certainly, we were really excited about Western Union last week, because for someone who's been in this industry for a while, for basically the better part of a decade, Western Union has been seen as the white whale of blockchain. So it's been super exciting to have that come to the fore, and I think we're going to see a lot more of those as well.
So yeah, I mean, we've been to you a lot of a presentation. You definitely mentioned about this word internet capital market, right? So how might the capital market you see going to be evolved? Let's say in 2030, right? Is like everything going to be on blockchain, or is there any particular asset you think shouldn't be on blockchain?
The way we see it is all of the assets and all of the use cases all in one environment. That's effectively what happens with the internet of like TCP/IP, bring internet and all the content onto the internet. That's what we already experience, and that has been so transformative in so many ways because you have this total fluidity of access to information, even when that is being filtered through many different applications, whether it's mobile or desktop, but that kind of sort of shared liquidity, if you will, of content and shared liquidity of information being kind of the base assumption of the internet has been so transformative. And we see that also, that analogy carrying over pretty well to financial markets as well. This infrastructure should be asset neutral, and that means, yes, the range from anything which is all about price rather than value, such as meme coins, all the way to traditional finance assets, which are a lot about value and less about kind of price action. For example, a money market fund. And it's this neutral infrastructure is meant to be available for that whole range of assets. And also use case-wise, the way that people use money today is such a range between the simplest, which is not latency sensitive, is something like a payment. It's the broadest use case for money, which is medium of exchange and being able to settle an exchange of goods and services, number one use case. But then on the other side of the spectrum in terms of how people use money, engage in markets is, I would say the very other extreme is high frequency trading. And these are not isolated use cases, they're actually all part of a broader economy. And I think, given that these are sort of the two top of mind areas in crypto, payments versus trading, and also on the opposite sides of the use case spectrum, they actually support one another in that if you looked at the last cycle, what happened after, I'd say, after the 21, 22 kind of NFT era, What you saw and what happened was crypto obviously had a downturn, and you also had the rising of interest rates, T-bill rates. And so at that time, a lot of the stable coins that were on chain, the actual amount of value on chain dropped because the interest rates in a regular bank account were higher than what you could get in a down market DeFi environment. And there wasn't enough of a reason to keep your stable coins on chain for any other use case. There was no real payments infrastructure, so it's kind of like the only reason you would keep money on chain was to earn a yield from it, and that yield source was essentially borrowing from leverage trading in a bull market environment. No bull market, no yield. Okay, then folks will take their dollars and put it back in their regular bank account, especially when you're getting 4.5% over there, right? And so if that's what we saw in the last cycle, well, the only way that you can have people continually keep their assets on chain is if you have some sort of value proposition. That value proposition is either going to be utility or it's going to be yield. Last cycle, there was yield, and then there was no utility. And so what's happening now is payments are coming on chain, and that provides base level activity because that is one of the most useful things that anyone can do with their assets. And so I think that helps create a sink, a utility sink for stablecoins on chain. And if that kind of base utility is present on chain, then that also creates a liquidity pool of assets that, not all of it, but some portion of it also starts to underwrite deeper markets on chain for more speculative use cases, for perps, for options, for more sophisticated market structures. And so that's how I know a lot of folks think about payments and thinking about trading as kind of isolated and separate things, but in the broader view of the economy, they're actually deeply related to one another. So we don't think about Solana as being, Solana is only for payments, Solana is only for trading. Like if your ambition is to create financial infrastructure that serves the entirety of the internet, well, definitionally, you have to be able to accommodate the full range of assets and also accommodate the full range of use cases. And so when it comes to internet capital markets, that is sort of the network that we want to build around Solana, period. And what I think is going to be some of the most exciting future developments is one thing we'd really love to do is to do fully native IPOs on chain. When we say that, people chuckle, laugh, okay, that's not going to be possible. But I actually think there is a pretty good chance that's going to be possible in the next couple of years. And when you think about what a big unlock that is, I think when people think about capital markets access today, most people's minds go to going public, right? Ringing the bell, the confetti. Some people in our ecosystem recently experienced this in New York at the stock exchange. You stand on stage and it's like this fantastic celebratory moment. But really what's happening is you have, especially now with globalized economies, you have great entrepreneurs, you have great businesses, and you have productive capacity everywhere in the world. But yet there is really one A-tier capital market in the world, and that is sitting in New York with all of the various country barriers, regulatory barriers, all of the many things you need bankers and lawyers to help you mediate in between here and there. And so it's a really interesting situation where if you are at the apex of success as a business builder, as an entrepreneur, like, okay, great, I'm going to go public in New York. And you hire a banker. So first, it will cost you at least $15 to $20 million. And then you give 5% of your IPO proceeds to a banker who's going to help you with three things. They bring their brand, they do price discovery, and they help you with distribution. But both price discovery and distribution are, the way they happen today, they're really antiquated. Okay, so the way price discovery works, this is a loving observation coming from someone that used to work in an investment bank, is you've got your young analyst that builds a really sophisticated model late at night with all of these, fancy little variables around CAGR growth. Here are and then comps against public comps, private comps, whatever it might be, and they say, okay, here's your pricing range. And adjust a little bit depending on what the direction of the market it is, whether it's hot or not, so on and so forth. And that essentially is how price discovery is done. It is somewhat theoretical, it is an art, it is judgment. There's a lot of judgment that's put into that. Okay, so that is how capital markets work from the price discovery standpoint. From the distribution standpoint, really the way that these products, right, like your IPO, for example, gets distributed, it gets distributed largely in the same way that got distributed 100 years ago. It's just the difference is that now people send emails to one another rather than send a telegram message, meaning not the app, but the old, telegram wires, or place a phone call. And what that is you've got your equity capital markets desk that calls their various asset manager distribution partners and wealth management partners and kind of cascades down to being that product that you then sort of do a roadshow on, create interest for, and then do allocations. And if you're lucky enough to be like a really hot IPO or something like that, then what happens is that there's an allocation decision and there's scarcity, so who gets what? And 9 times out of 10, what happens is that the allocation goes to the friends of the reputable institution, and or what also happens is that there's a lot of money that's left on the table that actually ends up going to the day one IPO pop, right? None of this is necessarily criticism, it's just an observation. Everyone knows this is how it works. So then the question is, should it work this way? Does it still need to work this way? Should the company, the issuers, be better served by being able to capture more of the pricing that the market will bear? And actually, a number of these mechanisms can really be improved upon if you use the internet. And so again, I think going back to some of the price discovery mechanisms that we've actually played with in crypto before, called them ICOs, we called them, IDOs, whatever. And so again, if you take away sort of the specifics of the assets and really just look at the underlying mechanism, there's actually a lot of interesting mechanisms there when it comes to transparent price discovery. Things are just more transparent on the internet. It's more accessible to anyone. You can put KYC around it if you would like to, if you need to. It's flexible in all these different ways. And what we've even seen people do in the past is they would have do a reverse auction. They would have different phases where phase 1 would have a broader pricing range, day 2 would have a narrow pricing range, and then from there, they would narrow in on a pricing range that would maximize proceeds for the primary issuer. And so on the price discovery side, there actually is room for innovation on capital markets access. And on the distribution side, it's even more so. I mean, we all inherently see how powerful it is for the ability to directly distribute assets to buyers. Because that's fundamentally what technology does. It shortens the sort of access required or the access time between sort of one side of the market and the other side of the market. And so I think when it comes to, we talk about internet capital markets a lot, that I think is now the new white whale for this industry.
Yeah, I mean, it sounds like a scary story if I'm still working for the TradFi and the VC firm. We switch a gear a little bit, okay? We did a little bit role play, okay? So I'm the CCO. Yeah, that's my job actually. So I'm the CCO for the OSL, right? We are the global license exchangers. And then our vision is to be a global payment and a stablecoin infrastructure, right? And then you come to my office, try to pitch me, say, hey, Eugene, how are you able to move all your OTC trade, all your settlement to Solana, right? We did this kind of role play, so you start pitching me.
Oh, you mean you want me to pitch that to you?
Yeah.
Oh, got it. Okay, well, that's an easy one. I feel like I do this all day, every day anyways. Okay, so no one likes to pay more than they have to for anything. Even if you're very deep-pocketed like OSL, if you could pay 0.001 cents and wait a fraction of a second to settle a transaction versus pay $1 and wait 1 minute, why would you choose the latter, right? And so if you're looking for long-term stablecoin and really financial infrastructure, you've got to look for a couple of things. One is performance. The second is that it's got to be actually decentralized. Because if you are using the infrastructure you can be open source but also centralized, and that's actually what we see a lot of corporate chains out there. Then it's half of the way there, but you got to ask yourself whether that is truly a long-term kind of like neutral financial infrastructure that you can rely on. Okay, so that's the second one. It's got to be decentralized. A third one, you've got to have asset breadth. There are a number of options out there, but they don't have the full breadth of all the stablecoins that have now come to market. And I personally see stablecoin liquidity as being almost a public good for builders in the ecosystem, right? Anyone who's building on blockchain eventually needs to access liquidity through stablecoins in one way or another. And builders should have the full range of stablecoin options available to them so they can choose whichever one they want. They could issue their own, they could work on the existing one, cut deals with this stablecoin to the other one. I see stablecoin liquidity as being a public good. Okay, so the third one is asset breadth. And then the fourth one is you've got to start to have sufficient asset depth as well, right? If you've got a stablecoin, but there's only 100 million of native issuance, and it's one of the larger ones, then you can do some stuff, but you can't do as much. And then lastly, you want to be on a platform that actually has a very organic, large, and native smart contract builder community. So when you add all of those things together, then I think that those 4 or 5 filters alone lead you with a choice of one.
Yeah,
Are you convinced?
I'm almost convinced.
Almost convinced.
Yeah,
What's missing?
Almost I mean, we're in Asia right now, right? The problem with Asia is that the majority today, they get used to trading USDT on Trump, right? I'm not saying that Trump is the best, but it's just like, basically a customer behavior, right? So what can we do? How can we do together to change that behavior?
That is the number one thing about money. Money is a network effect business first and foremost, and so you have to provide a better value proposition. And the way I would segment that is there is the retail usage side, there's the enterprise usage side, and I would put DeFi trading from hedge funds and firms as in, let's call it the more broadly defined kind of like company or enterprise side. And so the way that one goes about those, as in any other industry as well, is different. The way you do a 2C market and a 2B market is always different. And so I think of the 2B market, better pricing, because you can talk individually to people, does go quite a long way. And then for the 2C market, you pretty much have to compete on yield, right? Because you have to, one is you can push a little bit and the other one is entirely based on pull. And so I think there's different things you can do on both those sides, but absolutely one of the stronger things, money is the strongest network effect business out there. Yeah.
Okay, let's sign.
Okay, so you're sold. Okay, great. Everyone bear witness, so.
Yeah, we got 4 more minutes, so this is going to be my last question. And I actually asked the question on behalf of a lot of audience here who are doing a startup or entrepreneur, right? I think there's a lot of people want to build on the Solana, right? They want to, of course, also get support, get funding from the Solana. So I believe a lot of people are interested to understand, like, what do they need to do in order to demonstrate in order to get your attention, right? What kind of metrics you guys evaluate most so that you will promote this project or fund this project, especially promote to your Solana communities?
The first thing I would say is that you do not need the foundation. I think a lot of people think that they do, but really you don't. And I think that if you were to go down the list of the most successful projects out there, the number of them that got official support or something like that, and I'm not talking about just retweets or things, we do that all the time, and we try to do that as broadly as we can to support everyone in the ecosystem. Now the ecosystem is very large, it's harder to do. But number one message is you don't need the foundation. We as the foundation, we liken ourselves to being a foundation which is here to sort of build a startup city. And so our role is to attract talent and attract capital. And every so often there are certain things that really need to be built as kind of like a pillar of the next industry to ensure that you continue to be strategically relevant on one front or another. So that is something that is our job to sort of look after and ensure that we stay competitive and stay relevant and continue to attract and retain talent and capital in the broader ecosystem, not in the foundation. And so that is, I think that might be true in other ecosystems that do have a culture of kingmaking. We do not have a culture of kingmaking. We may have a culture of shortlisting from time to time, but we're actually philosophically, very explicitly, we do not support kingmaking. We think that that is actually a bad way to go about building the ecosystem, because in order to build a long-term healthy ecosystem, it has to be something which is built on merit. And so the culture that we try to encourage is one where your value to the ecosystem is a reflection of what you contribute. And because blockchain is inherently an economic system, there's inherently a very liquid and a very performant market, which is not to say all contributions are only valued as much as what someone is willing to pay, but it is one way of valuing people's contributions. And so if you look at the way we built Super Team starting about 4 years ago, the primary criteria for whether someone would become a part of Super Team, initially in India and now 20 places around the world, is could you contribute something of value that someone else in the community would value, measured by what they pay you for it. It could be writing a blog post. It could be submitting a pull request. But the philosophy we've always had is to be a part of the community, you just have to contribute something. And you should actually not look to the foundation to validate that. You should, the purest way to evaluate that contribution is whether someone else in the community is going to pay a market rate for it. That's, I think, representative of kind of like a core belief system that we have. And we as a foundation here are here to support builders and ensure that we stay strategically relevant, continue to accumulate resource, human and financial, in the ecosystem. And by doing that, then we can also create a much more robust ecosystem that then sort of has the follow-on effects of serving all of the others in it. So thus far, I think it's working out pretty well. Can always do better. Yeah, that's how we think about it.
Thank you. Yeah, I mean, Solana is definitely the fastest growing and I would say one of the most successful layer 1 chain, right? We have been seeing the industry, right? Definitely, I think credit to Lily, your leadership, and also bring a very, very healthy culture to grow the whole ecosystem, right? So once again, thank you for your time to join us.
Thanks, Eugene.
Yeah, thank you. Let's give Lily a round of applause.
Thanks, Eugene.
Thank you so much. So since we have this great opportunity to have Ms. Lily Liu in our event, later we can take a selfie. Okay, so now let's take a group photo first. Okay, then let's take a selfie. Mr. Eugene, can you help us take a whole selfie for all of our participants here? Oh, you can join us together, yeah? Yeah, all together, let's look at here. Okay. 好，我们往后一点点。Okay. Okay. 3, 2, 1, cheers. Let's give a thumbs up, okay? 我们一起点个赞，好不好？一齊點個讚嚟 3, 2, 1, yay! Okay, thank you so much. Thank you. Thank you for Ms. Lily Liu and Mr. Eugene for your wonderful sharing and share with us a lot of updated information about Solana's ecosystem. Thank you so much. Please visit it. So up next, we will have our second panel discussion on the topic of from ETF to DAT, cracking the growth code for digital asset investment. So as digital asset investment continues to mature and attract more institutional participation, this panel brings together leading investors to discuss the latest strategies for building institutional portfolios. We will cover tokenized securities and digital asset treasuries. explore the key drivers of returns in today's market, and assess both the major opportunities and potential risks that lie ahead. So now please welcome our moderator, Ms. Rebecca Sin, Head of ETF Research APAC of Bloomberg Intelligence. 讓我哋掌聲有請主持人彭博行業研究亞太區 ETF 研究主管 Rebecca Sin。有請彭博行業研究亞太區 ETF 研究主管 Rebecca Sin 女士。And our speakers, Mr. Freddie Wong, Head of Product Asia Pacific of Invesco。掌聲有請發言嘉賓，景順亞太區產品主管黃家成先生。有請景順亞太區產品主管黃家勝先生。And let's welcome Ms. Giselle Lai, Associate Investment Director of Digital Assets, Fidelity International。有請富達國際數字資產投資副總監 Giselle Lai 女士。有請富達國際數字資產投資副總監 Giselle Lai 女士。And then let's welcome Mr. Marco Lim, Independent Non-Executive Director of Boya Interactive。掌聲有請博雅互動獨立非執行董事 Marco Lim 先生。有請博雅互動獨立非執行董事 Marco Lim 先生。Let's welcome Mr. Jaden Chan, Investment Manager of Digital Assets of Flow Traders。掌聲有請 Flow Traders 數字資產投資經理 Jaden Chan 先生。有請 Flow Traders 數字資產投資經理 Jaden Chan 先生。Please be seated.
Thank you so much for that very warm welcome. So there's a lot of people standing in the back. If you guys want to come in, there are seats in the front. If you have an empty seat next to you, move your bag, let someone else sit, because there's tons of people standing in the back. But we're so very excited to have everyone join here. Just so we can get a feel on the audience, if you know what an ETF is, this panel is called From ETF to DAT. So if you know what an ETF is, Exchange Traded Fund, raise your hand, just so we can gauge the audience. We don't have many people that know what an ETF is. Okay, if you know what a DAT is, raise your hand. Okay, also not very many. All right, we're gonna have to go through some of the basics. So before we get to that, maybe we'll do some fun icebreaker questions for our panelists so you can get to know them first. So we'll just start from me and then we'll go down. Favorite cryptocurrency?
I used to run money, so I run fixed income, anything with a yield, and now with all the staking, anything linked to a crypto that earn yield, I like that.
Giselle?
Personal view only.
Bitcoin. Oh yeah, sorry. This is
Yes,
everyone's
it's all
personal
personal
view and not their investment or the firm that they represent. Personal views only.
Bitcoin.
Bitcoin. Can't hate Bitcoin. Marco?
I'm biased because the company that the crypto that we buy is Bitcoin, so it have to be Bitcoin.
Also Bitcoin. Jaden?
Yeah, I mean, as a trading firm, basically the most important is capital efficiency. So yeah, I'll vote for stablecoin.
Stablecoin. All right, we have a good mix. What is your favorite crypto narrative?
Closer to the industry would be stable coins that is evolving, big things that are coming up.
As a portfolio diversifier.
I'm biased again. Web3 gaming, which nobody look at nowadays, and I'll talk about it later on.
DeFi, decentralized finance. Yeah.
Also, we have a pretty good mix in the audience. All right, best crypto investment.
Bitcoin.
Bitcoin. Can't go wrong with Bitcoin. That seems to be the standard answer, Giselle.
Bitcoin.
Company who own Bitcoin.
Companies that own Bitcoin, that's a good one.
I mean, we're pretty agnostic, but I would say Bitcoin, yeah.
Jaden loves everything because ultimately they're market makers, so they provide liquidity on everything. And then best crypto tip.
Hold.
Buy and hold.
I'll say crypto assets cover a wide range over 1,000 of tokens, so understand the risk-return profile difference and prepare for the worst.
Understand the risk profile.
Yeah, I think understanding the risk profile is also very important.
Yeah, I mean, I would say under this market, try to reduce the leverage that you guys are doing. Yeah, spot only will be the safe.
Reduce your leverage. I know a lot of people like 2, 3, 10 times leverage. Okay, with that, we're going to go into the panel session. So I'm going to break it down. What is an ETF? So first off, an ETF is an exchange-traded fund. It's ultimately can be a basket of stocks, like for instance the S&P 500. It tracks that index. There's also mutual funds. It's in essence a group of things. So for instance, on Hong Kong exchange last week, China AMC launched the first ever Solana ETF. And so one of the main reasons as we were preparing for this panel was people were talking about, why do we need an ETF versus the traditional crypto finances? We do have a presentation here, but it doesn't seem to be, where is it? All right, we need to go back. Okay, so we prepared a presentation to kind of like walk you guys through it so that you guys don't have to take pictures. If you scan the QR code, we will email it to you. So all you need to do is put in your phone number. So while you guys, your email address. So the background is ultimately, why have people started investing into an ETF as opposed to traditional Bitcoin? And the rationale to it is ultimately, instead of having to open a wallet, open a separate trading account, crypto account, and having to have it be worried that you're going to be hacked, the exchange is going to be hacked, your money's going to be stolen, you're going to lose your wallet. People thought that by having it in an ETF, which is a regulated format that's listed on the exchange, it would be a more efficient way to trade. The other thing is that the spreads on it are much tighter. So to trade an ETF, you often pay less than 1 cent in bid-ask spread. And so the cost is a lot more efficient. So the main things are safety and cost factors, because ultimately if you trade on some of the crypto exchanges, the spreads can be 1 to 2%. You're paying a lot in execution cost. And so with that, this is the overall Asia-Pacific ETF landscape. Ultimately, mainland China has just surpassed Japan in assets under management. This is the league table of everyone. And you can see that we have a pretty good mix across the region. But the other thing is, BlackRock is ultimately destined to be the largest holder of Bitcoin. And this is why. BlackRock's Bitcoin ETF is called IBIT. It listed in the US, and it was the fastest ever ETF to reach $100 billion. So we kind of give a comparison to some of the traditional asset class, S&P 500. It got there much quicker in less than 1 year, only 435 days. And so something that you may not know is that BlackRock is going to be the largest holder of Bitcoin by next year. That's an amazing stat. And so that's why a lot of fund managers are now getting into launching ETFs, because ultimately there is money to be made. And of all of that's being poured into options off of these cryptocurrencies. I'm going through this very fast, but the main thing is you need 3 things for an ETF to be successful. It's ultimately 1, low cost, brand name, and liquidity. If you have those 3 things, you're bound to be very successful. So in the US, when they first launched, there were more than 12 different ETF issuers that had launched the exact same product, but you can see that the fees are different across them. And so why were people interested and interested into this? Ultimately, Larry Fink went on TV and said, if you don't trust the government, trust us. Buy our Bitcoin ETF. And ultimately, it, in essence, brought the adults to the cryptocurrency world. It made it safe, it made it regulated, it made people not have to worry about all the things that you sometimes do have to worry about in the cryptocurrency space. And the other thing is that with the ETF now, it's also brought down the volatility of Bitcoin. And the correlation between Bitcoin and the stock market is now a little bit better. So the thing is, as you know, there's a lot of different currencies within the market. You know, there's Ether. But ultimately, the other currencies are kind of like crypto stocks in the 90s. So we think as we looked at Ether as well, Ether also got to 10 billion faster than any of the other coins. And so there is a lot of growth potential for the other coins, which we'll talk into for a little bit into detail of that. But ultimately, the market is still very heavily into the Bitcoin compared to Ether and the other cryptocurrencies. So you can see that the split is ultimately a lot of people prefer Bitcoin as the largest one. And I think if we look at our panelists, everyone did say, you know, one currency they'd invest into, most of them did say Bitcoin. So that gives you a very high overview. And the thing is, now there's pretty much a coin or someone has registered for a lot of the other coins, Dogecoin, stable coins, pretty much any coin you can put it into a ETF wrapper. It's ultimately just another vehicle to invest into. And so in the US, there's more than 80 cryptocurrencies that have filed for it. And then we have a podcast called Tiger Money that goes into more detail about why and how you can invest into that. But maybe we can talk about the crypto landscape. What are you seeing from your perspective and what's your outlook? We'll do Marco and Giselle. Oh, Freddie and Giselle, sorry.
Thank you. I will go first. I think it's less about our view. It's more about our client view, overall speaking, when it comes to crypto. And We also were part of the game plan overall with those crypto ETF launches. Since last year, we have a Bitcoin ETF. We also have an Ethereum ETF. And when it comes to more like staking technology, obviously those would add on with more new product coming through. And I would say to look at that, the powerful equations actually come with additional component is the scale. So anything that can come with that scale up with the liquidity, that become a very powerful argument for us to look into how to serve the client ultimately. But of course, all the regulations, I would say Asia is probably still the early day for us to really look deeper into that because the scale become the question mark here, but US is much deeper market. So you're seeing the ETF market within the crypto space been growing above 150 billion size, but it's still growing. But that would actually filter through to Asia soon, and that is just the beginning, I would say.
Yeah, maybe I'll just begin with how we get into the space first. And actually, I think Fidelity is one of the lists as well. And we have been an early adopter actually in digital assets with Fidelity Investments in the US, who already started this research and development effort since 2014. And they start mining Bitcoin in 2015. And they further separate a separate entity which kind of focus on custody capability to really serve the client's needs. And of course, to launch a crypto ETF strategies in the US. And we, Fidelity International, also launched a Bitcoin strategy in Europe. And generally speaking, there are different investors viewing from a different lens. Some investors view crypto assets more from an emerging asset class that come with high volatility yet high potential return. Some investors look at it in a different value drivers that is driven by crypto. For example, it's influenced by regulatory development, technology innovations, as well as size of adoption. And these unique factors are quite idiosyncratic and makes it potentially having a low correlation compared to traditional assets. And of course, we are also seeing great demand when it comes to the market with all the net inflows we're seeing in the US. And just drawing some insights from one of our latest investor survey in APAC, there are already around a quarter of APAC investors hold digital assets. So for Fidelity, we really want to make sure that we evolve alongside with the market landscape as well as investor demand, bring the best of Fidelity across a wide range of capabilities we offer to service their needs.
So for both Invesco and Fidelity, they were one of the first, if not the first, to launch the spot Bitcoin ETF in the US. So they've had tremendous success in terms of gathering assets. And to Giselle's point, a lot of investors in Asia are already investing into cryptocurrencies. So an interesting stat is the BlackRock Bitcoin ETF. The second and third largest holder of that fund is actually a Hong Kong-based hedge fund. And so there's a lot of demand coming out of Asia. But maybe we'll turn to Marco and shift the gear. This panel is called From ETF to DAT. As the DAT expert, perhaps you can tell us, one, what is DAT, and what's the narrative that you want people to know about DAT?
Yeah, so I guess DAT is a new concept, but it's actually not a new concept. It's a new name. It's called Digital Asset Treasuries. So it's Digital Asset Treasuries Company. So obviously, it's listed company who hold crypto asset as one of their main business. But it's not a new concept. If you guys have known, there's a company called MicroStrategies, which was on one of the slides, and now they changed their name to called Strategies. And they is one of the biggest holder of BTC in the world as a listed company of 600,000 BTC. Over 600,000 BTC. And if you look across this, another company, you guys do not call them DAT, but they actually have Bitcoin, and they are one of the earliest, but they're not as early as MicroStrategies. That company is Tesla. So everybody do not know that Elon Musk, Tesla, is the second public company in US that start buying BTC. But nobody called them a treasury company. So today I just want to, trying to explain that the digital asset treasuries company is not purely, a lot of companies not purely buying crypto for the sake of buying crypto. A lot of the time they need crypto to expand to different business. And we are seeing that we have different companies, take Boya for instance, that we do have a lot of Bitcoin, but we have started the purpose of accumulating Bitcoin, not because we want to become a treasury company. We want to transact a company into from a Web2 company to a Web3 company that allow people to see us that we are actually transiting into Web3. And that's how we started the journey of buying BTC. So going back for the story, how Boya started us, in 2022, we have about, our market cap is about 200 million Hong Kong dollar. That's how small Boya is. But on the cash front, we actually have $1 billion of cash sitting on the balance sheet. But nobody actually give us any, good comments or ratios, given that we have so much cash. The market haven't given us any value, reflecting on the capital market value reflections. So in the end, our board decided to say, hey, maybe we should transit our company into a Web3 company. But how? By doing that, the first thing is to actually start buying BTC. And today, Boya is not, we don't want people to see us as what we call DAT. I think the regulators have been quite, a bit negative about, people using the terms DAT. We want to show people that DAT is not a pure treasury company. We actually have a big operation business that we are doing Web2 gaming, and we are trying to transit our Web2 gaming business into a Web3 gaming business by using the Bitcoin we have, and we have example on that.
So remember, Boya is more than a DAT company. They're transitioning to a Web3 gaming company. So let's turn to Jaden. He works at Flow Traders. Who's here that has heard of Flow Trader? Raise your hand. Oh. Jaden, you have a lot of work to do. Okay, perhaps you can tell us first, what is Flow Traders? What do you do? And then talk about, the pros and cons of, you own everything from ETFs to DAT to tokens.
Yeah, we can start with quick intro about Flow Traders. So Flow Traders is like a global market makers for the whole financial market. So we are headquartered in Amsterdam. We're also listed in Amsterdam. So we for sure have a traditional finance business line. We also have a digital asset business line. So I'm more on top of the digital asset perspective. So we do provide liquidity for different type of crypto ETFs. We also provide liquidity for different type of tokens across different exchanges. And apart from it, we also have an investment arm. So we invest in both, the equity market and also the token market. In terms of, or say, pros or cons across different type of financial products, we are talking about ETFs, DATs, and for sure, the tokenized equities. So, maybe we can just give away the tokenized equity first because it's a little bit different. But in terms of DATs and ETFs, the similarity across two different type of products is we provide some kind of exposure for the retail market or the institutions on the digital asset. But ETFs, technically it's a very standard product. So there is a very standard way for market makers to provide liquidity to make sure, the value of the ETFs is corresponding or packed with the digital asset. And there's also very standard, operational flow, how to do the creation, redemption of all those kind of ETFs, such that market makers can be very easily do their job, keeping the price in line. But in terms of DATs, theoretically, it's a relatively new concept. So when we are talking about how to keep the price in line, let's say there's a DAT who is holding majority in terms of Bitcoin. But whenever there's kind of a price depack, there's no standardized way for us to keeping the Bitcoin price to be corresponding with the DAT price. So there's a bit of thing that the DAT companies have to do in order to further optimize the whole structure. Especially towards the liquidity. For tokenized equity, it is simply a tokenized version of equity because currently we are trading Bitcoin, Ethereum, different tokens on chain, right? But the equity market is still not yet on chain. So the very obvious advantages of moving the equity markets on chain first is on settlement efficiency because by now, the way you're trading equities, you have to through brokers or wherever. Basically, the settlements may be T+1 or T+2. But if you're doing tokenized equity trading on chain, then basically you can use stablecoins to do auto settlement. Then basically it becomes instant settlement or at least it's going to be T+0. The other features including 24/7 trading, and then you can enable programmability for the tokenized equities as well. So yeah, that is why we are actually very bullish into tokenized equity, and then try to work together with different type of stakeholders, regulators, and the government to push these initiatives forward. Yep.
So ultimately, Flow Traders is a liquidity provider on all of these different products, ETFs, DAT. And so they are the ones providing the prices to the exchange for investors like yourselves to buy. And so if we look at the whole ecosystem, ultimately ETF is just one form to wrap the product. A lot of people are considering tokenizing different cryptocurrencies, and that's just another wrapper for it. So if we go to you, Freddie, from Invesco, you guys are traditional asset managers. You guys have institutional clients around the region. What flows and trends are you seeing?
Thank you. I think one is first asking investor that they need to know what they are buying. And right now we have seen obviously trend that there are more tokenized product here in the town, in Hong Kong. A lot of them predominantly in kind of tokenized money market product to begin with. And even it's almost like a barbell strategy. A lot of people talking about like money market fund, what's next? With that private credit, private equity being tokenized in different format. And it's also back to my questions earlier, or my point earlier, is like how that scale could really help serving some of these investors. Because we are not talking about just retail investor here. A lot of them would be including a lot of major institutional investors who would have a big ticket coming into buying some of this underlying. And second to that, was also linked to earlier point on that kind of settlement cycle. I think in a TradFi world, we are talking about from a T+5 to T+3 to T+1 world now. And what would that 24 hours trading means? Even in a tokenized format, we can arguably be talking about like real-time trading. However, the TradFi industry, including the exchange, are working extremely hard to really move that settlement cycle much shorter now. And just to put the number in perspective, all this like tokenized, say ETF, in the town in Hong Kong, or globally, we are talking about like over 150 billion size. But in Hong Kong itself, the wealth industry and the asset management industry in combined, we are talking about $4 trillion US. So there's so much asset hasn't been really in the tokenized format. But if you move these two settlement cycles closer to each other, that would mean all this traditional T+1, even T+ same date, could then really move into the tokenized format much easier. That will really unleash a lot of opportunity set, allowing us to whether present that in an ETF or ETP format, or even a dual share class that are on offer, and they can really interoperable as a result. And that on-off ramp negotiations or that mechanism would just become much easier in that regard.
I think one question that we get asked a lot, since I do funds research, is everyone's like, what's next after ETF? And can you tokenize an ETF? And I think where the tokenization will come in helpful is ultimately the back end for the settlement cycle. So for a lot of these ETFs that trade on the exchange is often a T+1 or T+2 settlement cycle. By having it tokenized, you can have a T+0 settlement. So it's definitely potential for making the ecosystem more efficient. But maybe from your perspective, Giselle, having, Fidelity was one of the early beginners. You guys have research in this. What are you seeing from investors? And you mentioned that, most people are already holding these coins and do allocate to this asset class. What are some areas what are some thoughts that you can share for us?
Yeah, I think generally speaking, especially over the past years, we do see a significant uptake from clients asking more questions around these crypto ETFs products. One of the key drivers is essentially the approval of the US, and following the approval, you start to see some regulatory clarity across different jurisdictions. For example, for professional investors like in Hong Kong, Singapore, Taiwan, or Thailand, they can now access to some of these foreign crypto ETFs. And if we look into these crypto ETFs holding in the US, for example, we do see a gradual increase from institutional participation, with investment advisors being the fastest growing segment. So by saying the high net worth individuals, investment consultants, for example. So these are some of the key trends we see in the market. And beyond that, I think, and you also mentioned earlier around the rise of the options trading with some of the crypto ETFs actually allows option tradings. That's an actually trend to watch as well, given there are more institutions now, they can finally express a view to formulate a more complicated and sophisticated strategies. And a lot of Asia institutions, they also start to leveraging some of these options to create the structured products and bring some innovations for Asian investors who search for yield.
So I think with a lot of investors, they do hold physical Bitcoin. Hong Kong was one of the first where they allowed the conversion of spot Bitcoin, where you can hold swap your Bitcoin for an ETF. And so that brought a lot of new investors to the marketplace. But perhaps, Marco, are you seeing the same things from a DAT perspective? What's your outlook and what are your investors doing?
Yeah, so when I look at our cap table for Boya, for instance, the highest demand of actually for last placement is actually from institutional. There was no retail who come to us and say, hey, want to buy a stock. I see DAT is actually a institutional allocations to this market. Before I joined this DAT Boya, I used to run a crypto hedge fund as well. We have been using strategies, or we have been using Coinbase as a proxy hedge sometime against Bitcoin. So I'm now seeing, because the liquidity of DAT have increased, and also ETF market have grown, a lot of trading strategies around some of the hedge funds. I'm talking about these big international hedge fund names that come to Boya and come to some DAT and say, hey, I want to own your stock because I'm using your stock to pledge against maybe shorting the ETF and create some kind of arbitrage between. So there's some trading strategies that the institutional market is developing into trading some of these DAT, using it as a proxy hedge. And I also see another batch of clients is before, I think people already have, one of the biggest questions is people already can access to ETF. Why do they still buy DAT, right? From an institutional perspective, I think one of the key questions that I have done some research on is, if you look into strategies, cap table holding, one of their biggest holder is actually Vanguard and then Capital Group. Same for Boya. We actually have Capital Group on our cap table, and we have Fidelity as well. We have Bitwise, which are some of the big institutional funds. And I look at why they need to allocate to DAT when they already have access to ETF is a lot of the time, all these fund mandates can only do equity investment or debt investment. So it's like bond, fixed income investment. They do not have the mandate to actually go directly into investing in crypto, even with the ETF. I'm very surprised. Recently, I've talked to a very old family office trust in Hong Kong, and they said they really wanted to allocate to crypto, but because when they written their trustee agreement, it was written that they could not touch commodities, a crypto asset, or even ETF that is dealing with crypto assets. But because they have been a couple of generations old, now the new generation wanted to do allocation, and the only way that they can allocate as a family trust is to buy crypto-related stock. So they have been buying OSL stock, they have been buying Boya and a few other stock. And when I have talked with them, and I realized, oh, actually, we are very lucky. As a retail investor, we have all these instruments to choose from. We can do options, we can do perps, we can do ETF. But actually, for some of the family trusts or the older equity funds set up, it's very difficult for them to change the mandate halfway in between, and then they realize, oh, through DAT, they actually can get some exposures in crypto, and that's how I see recently the trend is.
I think when you think of investing into crypto, there's lots of different ways that you can invest into, whether you hold the coin directly, whether you hold a fund or you hold a DAT. Ultimately, it's just another asset class for you to invest into. But perhaps, Jaden, as the market maker that provides liquidity on everything from tokens to ETFs to DAT, what are your thoughts around it? Can you share some insights into how you guys do this, or what investors should be cautious on?
I want to actually mention about a misconception for majority of people towards market makers. So for sure, market makers, the key role is to provide liquidity to all the digital asset, which people or retail or institutions can have more, liquid market to trade. But then we can't create a demand. So for us, what is the most important is, it's always like a problem of chicken and egg. So previously, for sure, we are trying to provide liquidity across all the different products. No matter on spot market, on, let's say, perps market, if we were to talk about tokens, or option market, crypto ETFs. But the extent on how much we can provide in terms of liquidity is rather restricted. So the most fundamental reason is we don't see that a lot of trading demand. So that is why, if you compare with the current liquidity provision with let's say 4 years or 3 years before, the current ratio is at least 5x or 10x compared with like the previous times. But still, I would say the liquidity of the whole crypto market, there's a lot of stuff we need to improve. Because let's take a look. I mean, if anyone here trading like digital asset tokens, I mean, there is like a very, I guess, serious market crash back to I think it's like the 11th of October. So a lot of like altcoins basically dropped by like 70%, or some of them even dropped by 99%. So I guess the major issue here, for sure, is due to the liquidity. But what is exactly causing the issue for all this kind of liquidity, I guess it's also about the infrastructure of all those exchanges. So what we are currently seeing is like, for sure, we already see like trillions of like trading volume happens on all the global crypto exchanges. But I mean, the whole infrastructure is not that perfect enough to handle the increasing demand of the trading in terms of like tokens. And also like there is a lot of different type of infrastructure. For example, like there is no kind of like a prime brokerage in terms of like the crypto market. And also like we can't do something like centralized margin or whatever in the crypto market. So all those kind of stuff is what we see should be improved or have to be improved in the next 5 or 10 years. I mean, such that there's got to be like more and more innovative financial products, I mean, to come up into the market.
I think if we use the baseball analogy, crypto is still only in its first inning. I'm from Toronto, and so I was rooting for the Blue Jays in the World Series, and I was very disappointed that they lost. But one of the things is that ultimately, crypto still has a long way to go in terms of development, whether that's on the trading platform, the back end, the settlement cycle, and there's still a lot of products that are out there that hasn't been launched yet. So if we look to the future and the outlook, Marco, what are some of the regional developments that you're seeing on your side?
I think right now, we think Korea, Japan have been doing DAT as well. From the DAT's perspective, I'm seeing Thailand also upcoming as well. Before, most of the DAT are based in US, right? Hong Kong obviously has some crypto company like us, but we are seeing regionally have been growing demand as well. And I think going forward, if the same company are using the same strategies or just accumulating Bitcoin, I think it will be very difficult going forward. I think DAT is now gone into the second phase, which we call DAT 2.0 now. So DAT 2.0, what we see is people are not giving that premium or only on the MNAV to the stock price, right? So more they were looking forward as how the company actually can use the DAT to actually have a strategic view with their operation business and actually come up with something new to try to grow that ecosystem within the DAT, which is a listed company. I think because in the end, the listed company is still an operation company. It still need to have a business. It cannot just be one business which are accumulating crypto.
Freddie, what are you seeing from your side? Are you guys broadening out to other regions?
Yeah, actually, even on the DAT topic, when I was preparing for this panel, I actually looked into it. There, in the making of DAT ETF, that is definitely interesting, and would be interesting to see if Boya has been part of the underlying constituents at the end. But I would say for these regions, clearly we also defined firm-wise, we have a number of different pillars in focus. First of all, how the use case of the stable coins, which will be rolled out in different markets, and the crypto linkage to any products that would be also part of the regional focus, how would that means to any of us that we just talk about. Well, importantly, how that tokenizations linking to the blockchain would be allowing us to really tokenize what kind of product going forward. And this is really just the beginning, given a lot of infrastructure talk that we need to either incubate, but also educating our staff to be ready, preparing for discussing with the client potentially. But I think very importantly, and this is also open up for everyone here, is firm like us, or maybe for Giselle's side, is like we need strategic partnership. And this is very much undergoing to really search for who could be partnering with us as part of this overall journey. And that would be a very deep understanding and knowledge to really negotiate and discuss, okay, If anything that is big globally, how does that apply to this region? If anything that more regional focus, how could that bring into the global stage? In fact, we just last week make an announcement to really go into an exercise looking into the blockchain technology, how tokenized product will come in the form of very secure and compliant way with one of the global player. And definitely this exercise has become like global, which serving a lot around potentially with like 2 trillion assets that are under our management day in, day out. So those would be all the day in, day out area that we focus, but I only cover 3 of those areas of the pillars that we've been focusing within this tokenizations or crypto journey.
Giselle, what are you seeing from your side and from your investors? And what's one thing people should be, one thing you want a key consideration for investors?
Yeah, I think as I mentioned, the past 12 months, especially for Asia, we see rising inquiries from different types of investors like private banks, family office, digital platforms. They either want to meet their end client demands or start to thinking about a long-term strategy when it comes to the crypto allocation. And like throughout this journey, we really want to be partner with them, leveraging our capabilities to guide them through this journey more broadly. And when it comes to the crypto ETFs now with a broad range of products available, we always get asked around, oh, how should we consider these ETF differently? I think earlier you already mentioned a couple of key ones. Who are the issuers? Where they come with a both traditional and crypto assets background? What's the liquidity, fund size, fees? One thing I want to highlight, and we haven't mentioned, is about the custodian. So who is the custodian of these ETF? Especially custodian would be a critical role to safeguard these client assets. Whether they come with clear asset segregation, whether there's insurance policy in place, touch wood if anything happens, and these are key considerations that investors need to look at it when they're evaluating a crypto ETFs.
I think in Hong Kong, you only have OSL and Hashkey as the custodians, but in the US, because there's so many more funds, the option is, there's a lot more, and Fidelity is obviously one of the, I think of the 12 ETFs that launched in the US, half of them used Fidelity as a custodian for their Bitcoin ETF. And so that just sets the precedence where, you know, they're very trustworthy and reliable. So we have 5 minutes left for the panel. So 1 minute each on outlook, things the investors should be cautious on. What's your outlook? Start with Freddie.
Outlook, I would rather not say outlook, but it's really the weather is getting cooler, right? And I think within the crypto space, what would be the next winter time and which would be the winner out from that kind of winter market corrections? And obviously that also linked to DAT, right? And with what happened with company like MicroStrategies and all the others, right? These all have to come through cycle. And we are right now in sort of like a bull cycle, putting in day-to-day volatility. But what does that winter mean to us and also means to our investor at the end? Would they stick with the crypto world, buy more of those, or they would like to think that, okay, this is something that I can't stand, but I rather diversify my portfolio from the crypto back into the other part. So this would be the big part that I think would be important to focus.
He's hinting at maybe a crypto winter. Ooh.
I'm not saying that, but I just say be prepared anything that could come.
Yeah, I'll say 3. First is look out the market penetration. As fast as this crypto ETF grow, for now, it only accounts for around 5 to 6% of the whole crypto universe. In terms of market share, it's way lower in terms of how the traditional funds penetrate in the traditional markets, like 30 to 40%. So there could be more room to grow. Another area of trends we could be watching will be the product innovation. Majority of the net inflows coming to these days have been on Bitcoin, but as more regulatory clarity progression have been coming through, we could see more product innovation coming beyond Bitcoin, for example, stake ETP solutions or multi-crypto. And finally, I think there will be also trends as cryptocurrency like Bitcoin and Ethereum are getting more legitimized. There are more financial institutions start to look into the collateral use case in these cryptocurrencies, in the likes of security or lendings. That also comes with a key considerations is in terms of how these financial institutions incorporate proper risk management in the entire process.
For myself, don't go with the traditional way. Watch Trump, right? I think the whole crypto bull market started by Trump being elected, and then you see with the whole trend of stablecoin, RWA, DAT, because SEC used to be very against it, and then it was open up the door. So I think one thing to really watch is how Donald Trump has his next move on the crypto market, what's next going on. Also the Fed new chairman that's going to be appointed by Donald Trump. I think that will be something that need to watch for, because that will have a huge impact on how the macro market will move. I think now crypto is a inevitable asset that tie very closely with the whole macro market interest rate as well. So we have to watch closely on how the interest rate develop, and also geopolitically how China-US relationship will play out as well.
Sure. I guess like from a market making perspective, to every single product, what basically is most important is, I guess there are 4 things. One is like product market fit. The second part is the distribution channel. The third part is the regulatory clarity, and the fourth part is liquidity. So I guess like what we're seeing in terms of both, I guess, native crypto or DAT or tokenized equity is, I mean, in terms of like tokens, we're seeing like the new narratives coming. No matter we're talking about like agentic payment, or we're talking about like all those kind of like tokenized equity stuff. I mean, in terms of ETFs, I mean, for sure we're seeing all those kind of like standard ETFs in terms of like Bitcoin, Ethereum, or Solana. But I guess soon in the future, there may also be like index ETFs coming, or there will be like inverse ETFs coming, covering different type of like digital asset. I mean, in terms of like liquidity, that is what we're trying to improve. We're definitely, I mean, investing or working with all the different type of like new companies trying to improve the liquidity that we can do in terms of like capital efficiency. And for sure, I guess one important stuff for tokenized equity is we working very close with different regulators, try to understand what we can do or what we can do, and what does tokenized equity means to everyone if they own the token. So these are all the stuff that we are trying to focus on.
Okay, so let's get a pulse on the audience. We've just spent 40 minutes talking about from ETFs to DAT. So has our panelists managed to convince anyone that it's worth investing into a DAT or an ETF? Raise your hand. Moment of truth for you guys. Oh, so no one? We only have a few in the back? Oh, it's kind of sad. All right, I'm going to give you guys all 10 seconds. Your last pitch. One thing you want investors to take away from this panel. Freddie.
Do it before too late.
Do it before it's too late.
We've been in the market for more than 10 years, so please reach out to us if you look for any education content, when we are here to help.
They do have a lot of education content.
Buy and hold.
All those people that didn't buy Bitcoin or any of those cryptocurrencies, and then it's too late, it's never too late. Buy and hold. I like that one. Jaden.
I mean, it's low lever, but low leverage.
Now, he's very anti-leverage. Mine is ultimately, if you need funds research, come to find me. We look at everything from ETFs to DAT. So with that, please give a round of applause to my panelists here today, and thank you very much for their time.
Thank you so much. Let's take a group photo. Okay, thank you so much. Thanks for sharing different perspectives on digital asset investment. Please have your seats. And next, we will have our first keynote speech today, titled RWA, the Digital Reconstruction of Global Value Storage and Transfer. I believe real asset, or RWA, has becoming the most hottest topics in the digital asset area. So it is also attracting strong interest and recognition from major market players all around the world. So this powerful development marks a fundamental and inevitable convergence between the trillion-dollar traditional finance sector and blockchain technology, with RWA tokenization emerging as a major force driving the next wave of financial innovation. So in this keynote, we will explore how blockchain technology is unlocking new levels of liquidity and transparency for global assets, and the critical frameworks required to connect the physical economy with the digital frontier, paving the way for a new financial paradigm. So now, let's give a warm round of applause to welcome our speaker, Mr. George Zhou, Managing Director of N-Alpha. 现在让我们掌声有請 N-Alpha 董事總經理 George Zhou 先生。讓我哋掌聲有請 N-Alpha 董事總經理 George Zhou 先生。
Thanks everyone， 尊敬的各位来宾，下午好。我们是 N-Alpha Aurelian， 首家在纳斯达克上市的专注于投资黄金、RWA 代币 XAUT 的财富公司。我们今天非常荣幸有这个机会和大家分享我们对 RWA 的观点和做法。今天我们的题目是 RWA 全球价值储存与流通的数字化重构。我们首先从 RWA 的底层逻辑开始讲起。为什么我们需要 RWA？ 归根结底，是因为它的出现符合人类经济活动数字化的宏观方向。它的出现会给传统的价值储存和转移带来革命性创新。我们从不同的角度来做具体的阐述。第一个角度是经济活动数字化是人类未来社会的重要特征。经济活动的数字化首先来自于信息传递的数字化。人类从发明文字开始，让信息脱离口头交流，可以在不同时间和空间里进行流转。但是我们需要注意到速度，传递的速度受到物理载体移动的限制。一封信在古代需要几十天才可以从北京传递到广州，所以电报的发明是伟大的。它的出现使信息传递首次脱离物理载体束缚，并无视地域限制，实现瞬时远程转移。今天互联网更是让信息交互更加多元化和大众化。这些信息技术推动信息进化到全面数字化流动，并进一步推动经济活动的数字演化，成就电子商务、互联网金融、远程办公等新业态。这个方向目前看只会增强而不会后退。如果我们承认上述观点，那么就可以推断，在未来新经济的活动中，价值储存和转移的数字化也是必由之路。这是因为储存方式决定了财富是否能够跨时间、跨空间保存，转移方式决定了价值能否流向最需要的地方。当信息流转效率提升到一定程度，必然要求价值储存方式和转移效率与之匹配，否则不可能带来经济效率的全面提升。只有通过数字化，实现可持续的储存和便捷高效的转移，经济活动才能不断的循环和扩展。由此，我们得出的结论是，价值转移和储存的数字化必定成为新经济活动的核心构成。那么，怎么才能够实现价值储存和转移的数字化呢？区块链给我们提供了一个目前看起来非常不错的选择。我们需要知道的是，区块链的出现是人类历史上第一次让价值储存和转移脱离物理维度的时空限制。它将价值完全以数字形式存储在网络上，任何人只需要通过私钥进行身份确证，辨人不受地理和物理边界的影响，将价值从一个账户转移到另一个账户。这种方式实现了点对点的价值流动，开创了人类价值交换的去物理化和去中介化新时代。我们可以设想，如果一个国家的难民他要穿越战场，拖家带口前往和平之地，他应该如何选择携带他的财富？所有的实物财富，黄金、现金都可能增加风险，但是只要能记住助记词，所有的财富都将储存在他的大脑里。这无疑是一种风险相对较低的财富携带方式。由此我们可以得出结论，区块链是实现价值储存和转移数字化的基础设施技术，是我们实现资产自托管的优秀选择。我们理解了为什么价值储存和流转需要数字化，也明确了区块链是实现这一目标的技术基础。那怎么通过区块链来实践呢？我们的结论是 RWA。区块链负责记录和管理所有权登记和流通，使实物 资产拥有数字化表达和全球同步能力，让实体经济中的价值以链上通证的形式参与到全球数字经济活动中，从而实现实物资产价值的数字化流转。请注意，我这里说的是实物价值的数字化流转，而不是实物资产的数字化流转。在这张图的左边是传统资产交易中通常采取的链下资产加中心化记账模式，就好比我们在外卖平台点外卖，外卖就是链下资产，外卖平台完成中心化记账，最后外卖还需要进行物理投递。而这张图的右边是区块链原生资产交易，它采取的是链上资产中心化记账模式，就像我们在以太坊上转移一笔 ETH 就是链上资产，公链完成去中心化记账，没有物理转移环节。而 RWA 非常特殊，它既不偏左也不偏右，它将现实资产的价值数字化，在区块链上以去中心化记账方式进行流转，所以 RWA 是传统链下模式和原生链上模式的中间平衡态，是数字和实体的融合典范。讲到这里，我们基本阐述清楚为什么需要 RWA 的逻辑递进关系。这是因为数字经济活动数字化的趋势要求价值储存和流转方式实现数字化，而区块链作为底层技术，可以让现实世界资产实现链上数字化表达，进而让实物资产价值在互联网可达的前提下，能随时在全球范围内被加密、安全、点对点的储存和流转。这也就是价值储存和流转通过区块链实现了数字化。那么具体该怎么做呢？我们认为黄金 RWA 是最好的样本。黄金是人类社会凝聚最大共识、最悠久的价值载体，但黄金的传统持有和交易方式仍然存在一些不足。例如，实物黄金它没有生息收入，而且你很难变现。ETF 有持仓成本，但是难以实物交割；纸黄金无法兑换实物，但价格波动较高。而黄金 RWA 以区块链为底层，加实物黄金进行数字化分割和可验证转移，从而实现了黄金从线下到链上，从票据到数字凭证的升级。这个呢，既是数字化重构，也是对传统财富的区块链映射和程序化管理。将实物黄金通过 RWA 实现价值数字化，是我们目前看到最具有认可度的方向，也必将成为价值储存和转移实现数字化重构的最佳范式。接下来，我们略微先回顾一下黄金市场的演变和现状。可以说，200年来，黄金经历了3个时代的3个角色转换。在1.0时代，黄金就是货币，黄金的产量停滞，甚至可以导致通货紧缩。在2.0时代，黄金是法定货币发行的价值锚定，但是由于布雷顿森林体系的瓦解，黄金从价值锚定物逐步变成由市场驱动的商品，这为黄金成为现在抗通胀标的夯实的基础。在3.0时代，也就是现在，黄金已经全面变成了一种金融投资品，抗通胀、抗风险的属性日益增强。这是因为全世界大多数的央行都实践和奉行凯恩斯主义，把适度通胀作为货币政策目标。既希望通过温和通胀刺激经济，又回避通胀失控带来的系统性风险。那么由此带来的结果就是，黄金已经成为一种最被广泛接受的抗通胀投资品，总市值在今年10月首次跨越30万亿美元大关，成为全球市值最高的单一实物资产。我们可以想象，只要有1%总市值的黄金被投资者选择，以区块链这为市场参与者降低了门槛。它还可以通过智能合约很方便地进行链上的质押借，愿意长期持有黄金的机构，它可以有效降低配置成本。未来在全球配置合资格金库可以实现投资者交易效率和自由度增强的市场底层支撑下 ，XAUT 的话即时交易带来新增的需求。那么未来的黄金市场会变成什么样呢？我们从3个版本来进行说明，它们之间的关系并不是递进替代，而是共同壮大。1.0版本就是实物黄金和黄金投资品时代，已经延续了数千年时间，并还将继续延续下去。而过往的经验告诉我们，如果降息，黄金会表现很好；如果市场欣欣向荣，黄金也会表现很好；如果市场不确定性增强，黄金还是会表现很好。在我们当前可能会面临持续的贸易不就会表现很好。在我们当前可能会面临持续的贸易不确定性、财政不确定性和利率不确定性的情况下，因此黄金长期会表现得越来越好。 黄金市场发展的2.0版本就是黄金 RWA， 继续以 XAUT 为例。黄金 RWA 可以实现实物底仓存在安全可靠的金库里，并完全可追踪、可验证，采用最严格的机构标准，价值由底仓100%提供保障，并以伦敦标准金形式进行储存。它既可以在主流交易所开展二级市场交易，也可以在链上去中心化协议进行流转和质押。所以说，黄金 RWA 作为实物价值的数字化表达，它既能够提供实物黄金兑换，又可以让投资者零成本持有头寸和方便的进行全球交易和转移。所以，黄金价值储存和流转的数字化重构是我们的未来，而不是选择。3.0版本只是我们的 Aurelian。作为纳斯达克首家 XAUT 的财富公司，我们致力于为投资者提供更新、更好的黄金投资选择。特别之处在于，我们可以为投资者提供 XAUT 的生息收益。在最低限度下，安特阿尔法能够以抵押模式支持 Aurelian 通过抵押黄金带来相应的年化收益，这是其他黄金投资方式目前都不具备的。当今投资者获得黄金敞口主要有3种方式：购买实物黄金，通过 GLD 等黄金 ETF， 还有投资黄金矿企股票作为间接敞口。第3种，我本人认为本质上是企业经营的估值逻辑，不一定适合所有人。但是 Aurelian 为投资者提供了更优质的黄金投资解决方案。投资 Aurelian 本质上是投资持有可生息的黄金资产。目前 Aurelian 已经完成了大概1.5亿美元的融资，该轮融资中投资者表现得非常热情 ，Tider 投入了1500万美元，融资所得用于集中购买 XAUT 作为公司全部国库资产。Aurelian 目前收购 XAUT 金额已经达到1.34亿美元，我们现在已经在纳斯达克上市，未来将继续扩大 XAUT 持仓，还将与优质的投资人洽谈低成本的融资渠道。这意味着对股权投资者而言，每股持有的 XAUT 黄金资产只会更多。我们还采取 DAT 管理策略，并用持有资产进行抵押来获得收益，利用收益再购买更多的 XAUT。当我们的 MNAV 高于1的时候，会考虑通过增发股份来继续增持。所以我们的目标有3点：第一是持续提升每股拥有的黄金数量，让投资者享受黄金价格的自然表现，为投资者带来额外的生息收益。关于黄金 RWA 的潜在规模以及我们可能达到的体量，我们有3组数据来做展示，而不做结论。第一组数据是美国国债规模38万亿美元，而使用美国国债作为底仓的 USDT 和 USDC 稳定币总市值是2350亿美元，在估值上Circle300亿美元，然后 Tether 是5000亿美元。然后呢，第2组数据呢是比特币，比特币的总市值高达2.2万亿美元，比特币 ETF 总市值是1700亿美元，微策略的市值是比特币 ETF 的2/3。黄金市场规模高达30万亿美元，而当前的数字化形式此处特指 ETF 的总市值高达4720亿美元。那么，作为目前唯一持有黄金 RWA 产品的上市公司，借助安特阿尔法和 Tider 的支持，我们还应该有巨大的成长空间。Aurelian 的业务构建将围绕实际应用展开，随着 XAUT 储备市值的逐步增大，应用场景的进一步增多，流动性还会进一步增强。我们将着力推进 XAUT 成为机构广泛接受的抵押品，为其生息创造更多的落地场景。市场上还会新的结构化产品发行，从而进一步为投资者交易增强流动性和降低交易滑点。Aurelian 作为上市公司并受到 SEC 的监管，意味着投资者享有高标准的保护。我们的黄金目前安全地存在瑞士的金库里，我们的链上流转符合 FATF 标准的 AML 要求。我们使用经过安全审计的智能合约，并采用多签钱包保障链上安全。我们每天都会发布 NAV 报告。我们认为符合 SEC 合规要求非常重要，也期望 Aurelian 在运营安全和风险管理方面的生息收入。我们有行业头部机构的全力支持，建立了行业最高标准和级别的基础设施。我们将与所有的市场参与者一起，共同致力于黄金 RWA 市场的长期发展，并为投资者提供更好的回报。以上就是我们分享的所有内容，感谢大家的时间，谢谢。
好的，非常感谢周先生为我们带来的精彩分享，谢谢您，请就坐。Thank you so much, Mr. Zhou. Please be seated. And next, we will proceed to our third panel discussions today on the topic of the digital bridge, stablecoins, commerce, and the future of payment experience. So stablecoins are regarded as a key digital bridge connecting the digital economy with real-world commerce. So in this session, we will explore their potential in transaction and payment applications, looking at how stablecoins can enhance the payment experience for end consumers and small to medium-sized merchants, especially in cross-border e-commerce and B2B settlement scenarios, while examining the challenges that need to be addressed for broader adoption. So now let's welcome our moderator, Mr. Zhou Xin, tech editor of South China Morning Post. 跟住落嚟，讓我哋掌聲有請主持人南華早報科技新聞主編周恩先生，有請南華早報科技新聞主編周鑫先生。And our speakers, Mr. Henry Chen, Chief Operating Officer of Interlace， 有請發言嘉賓 Interlace 首席運營官 Henry Chen 先生，有請 Interlace 首席運營官 Henry Chen 先生。Let's welcome Mr. Colin Gotra，Chief of Morph， 有請 Morph 首席執行官 Morph 首席執行官 Colin Gotra，and let's welcome Mr. Holger Arians, co-founder and co-CEO of Bensa。讓我哋掌聲有請 Bensa 聯合創始人兼聯席首席執行官 Holger Arians。Let's welcome Mr. Peter Chen，Institutional Expansion Manager APAC of Tether， 讓我哋掌聲有請 Tether 亞太區機構拓展經理 Peter Chen 先生。And let's welcome Mr. Avery Chin, Chief Executive Officer and Co-founder of Aptos Labs， 讓我哋掌聲有請 Aptos Labs 聯合創始人兼首席執行官 Avery Chin 先生。Please be seated。
Okay, thank you. Good afternoon, everyone. I'm very happy to be here to moderate this very interesting session on stablecoin. I'm Zhou Xin from S&P. S&P is a very old organization compared to stablecoin. This week, we are celebrating our 122nd anniversary, this week exactly. So let me start from one obvious question. Why the year 2025 has seen such a hot concept of stablecoin? Is that simply because Donald Trump did something called Genius Act, make it more popular? Or the whole world just wake up and finding like this really huge utility for this stablecoin? Maybe we'll start from Henry.
Absolutely. Hello, everyone. It's a pleasure to be here. I'm Henry, part of Interlace, and we do card as a service and banking as a service, connecting stablecoin with traditional financial rails. So to answer your questions, I think there are two parts to this. Number one is obviously the increasing regulatory clarity, right? There's a Genius Act, there's the Hong Kong Stablecoin Ordinance on the issuing side, but on top of that, there's actually clarity on virtual assets as well. Hong Kong, in the TCSP, or the VASP license in Hong Kong, Vera in Dubai, etc. So that is a clearly increasing trend of regulatory clarity. The other part is actually the underlying demand of stablecoin usage. So Interlace has been around since 2019. We started dabbling in stablecoin as early as 2021, serving cross-border businesses. And these needs are really coming from the day-to-day commerce that these merchants need. So in our view, it's really the combination of macro view regulatory clarity as well as the underlying needs that are slowly growing over time.
Very good. Colin?
Yeah, so I believe stablecoins are really just an idea whose time has arrived. Is certainly the regulatory clarity, but we have marketing in the form of a giant circle IPO. We're in a period of relatively elevated rates compared to just this massive ZERP era that we were just coming out of. And suddenly there's margin for stablecoin companies to become quite profitable, very famously so, right? And so I think that's created this huge demand, or this huge rush of people trying to create stablecoins and create hype around stablecoins. That's certainly a big part of it. But I think 2025 relative to years prior, there have been cohorts of people that have been using stablecoins for years now, and I think that the idea has already kind of proven itself out, and the right conditions have sort of come around this year to sort of take it mainstream.
Okay, very good. Okay.
Yeah, look, I'm co-founder of Banksa. We've been around for 10 years, and in the last, let's say, 18, 24 months, we've seen the narrative shift very much from crypto as a speculative asset to much more utility. Stablecoins is driving that narrative. And I would say certainly the administration change in the US with much more clarity and certainty, less risk has contributed. But another key event was the bridge acquisition by Stripe for $1 billion, where I believe everyone thought, wow, that's a lot of money for a company like that. I looked at it as the Facebook acquisition of Instagram for $1 billion, which at that time might have been high, but looking back today, it was a steal. So it's certainly, like Colin said, it's a narrative. It's the public companies that are now surfacing at huge valuations, because I believe the next trillion-dollar companies are being built now, and stablecoins is that key element that we've been waiting for.
Thanks. Peter, you are the biggest fish in the pond. I mean, you're from Tesla. You should have all the more confidence to talk about the stablecoin.
Hello, everyone. My name is Peter Chen. I in charge for institutional expansion in Tether for APEC. My main job is to interact with the banks, supply chain company, and also commodity trading companies, basically to bring the USDT into their business. Okay, so to answer the questions that I would like to share one of my experience. Before Genius Act, when Tether go to meet with banks, they will always say, okay, you are not a priority. Okay, so during that time, I think that you guys probably aware that checkpoint 2.0 from the US regulations. So without any regulatory change, I think that the situation will not be changed. Okay, so during that time, let's say digital asset, cryptos, probably the least industry they don't want to touch for the banks. But after, let's say, a certain of time after the Genius Act, I find, let's say, the change has been, let's say, come in a big wave. So every time you've been there is in a VIP room. So personally believe that, let's say, regulatory change is definitely the key factors for this move.
Okay. So Avery?
I'm Avery, CEO and co-founder of Aptos Labs. And when I think about the changing landscape for stables, we started back in building Libra in 2018, where stables were not popular, where we faced a lot of headwinds. And so it's a great journey for us to see the transition from the old administration to now. And I think all of our panelists here have said it very well. The regulatory climate has changed. The financial markets are coming in. The IPOs have been really great. And I think that's given a lot of clarity to the fact that stables are going to be a very important part of the kind of economy going forward. And also here in Hong Kong, we see the EKD program taking off very big time, and maybe it hit some bumps and roads in the way. But I think now the program is moving forward much more expanded, and I'm really excited about that going forward.
Cool. So now I come to my second question. So stablecoin, if we attend these forums, we always hear stablecoin as a payment is cheaper, faster, safe. So what are the challenges or obstacles preventing institutions from using stablecoins? Is that purely because of regulatory? Is that because of the technical issues? Henry?
From our perspective, there are two parts. Number one is the existing payment and financial rails are extremely complex. So what we do is we help merchants accept and spend stablecoins, but also connecting to financial rails. Now, through that very process, we actually need to help them interact with 7 different institution clients that are external to us. So a lot of the work that is going internally for us as a product is taking all of that away, right? Abstracting that. Until we fully get to that point where a couple API calls or a couple of lines of codes, which we aspire to get to pretty soon, this remains an extremely difficult problem to solve simply from a product and operation and compliance perspective, just because current payments is already so complex. The second element to this is, of course, as any innovation goes, the business use case, the innovators drives for progress. Regulators will come in and share their points of views. And then finally, the institutions feel comfortable enough to jump into play. So there's a little bit of a patience game that we want to be able to influence, share points of views, but really wait for all of the ecosystem partners to be ready to join us.
Colin, you have the same challenges?
Yeah, so there's regulatory clarity. There's a clear desire to try it out. Like I think there's a clear appetite that people want to be improving their efficiency with stablecoins and improving their cost structure. And the technology works really well. The part that actually is seamless is we've built this huge multi-chain world, and it actually plugs in together and interacts quite well. Where we find frictions are kind of obscure parts of how it interacts with like the legacy system. Accounting treatments on a native versus a bridge stablecoin. Like all of these things are really weird edge cases that we're proving out for the first time now. And I think this is kind of the sort of in the trenches work that people on the stage here are doing to actually bring forward adoption, right? It's kind of obscure edge cases that about the two systems interacting for the first time.
Yeah, I totally agree with the points you've made. The regulation is still slow. It's fragmented. So even in the US, the Genius Act is great, but if you look at the different states, they all have different regulation. You need a money transmitter license for every state. The banking system is usually fragmented as well. And they are all legacy systems. While on the other side, we in technology like to move very fast. So it's a cultural shift that we need to overcome, and that takes time and a lot of focus and trust. The other thing is infrastructure. The infrastructure is not fully built yet. It takes time to connect the old world and the new world. So that's going to take another 5 years to really get to solid, trustable systems that the large enterprises are happy to use. And then finally, user experience. We're still very technical, and we just need to hide that technical part and make it just as easy as your day-to-day applications, an Uber app or an Amazon checkout. I think that's where we need to get to overall, and that's going to be a journey that takes a few more years.
Peter, you're already in the VIP room, so I guess you don't have to wait for another 5 years.
Thank you for the questions. So I'm trying to, I want to make myself clear. So I'm talking about the traditional finance. I'm talking about the supply chain company. I'm talking about the commodity trading companies. I'm not from the Web3 perspective, because that everybody aware the benefits, the good stuff for the stablecoin in the Web3 industry. So no point to emphasize anymore again. But I see there are still some challenges which that everybody mentioned about the regulatory and also the forex policy kind of factors, which I'm not in the right position to comment too much. But I would like to share some experience which that I, let's say, ground experience, talk to these supply chain companies. Normally, when you talk about the stablecoin settlement with the let's say the CEO and also the chairman for the supply chain company, they would like that because that it helped them to collect money very fast. Okay, but they also have a concern because that on the general public, if you read the newspapers, you see a lot of the scam, you see a lot of the fraud cases related to let's say cryptos. So that's one of the biggest concerns. But I think that that can be removed or can be improved through the education, let's say through the general public. The second stuff is related to the this CFO, when we talk about the CFO will say that what is the clear rules for the accountants, and that also makes it even more difficult for that. Even the CEO and even the chairman would like to adopt this stablecoin, but because thinking of the clear rules for accountants, that still prevent them to touch the stablecoin payments. So that's something which that my experience directly with this supply chain company and also commodity trading companies. But I think in some point in time this can be fully, let's say, removed and then pushed directly to the big wave for the stablecoin adoption.
Okay, very good. Avery, from your own experience, like in the last 7 years, ever since the Libra project now, what are the key challenges?
So in Libra's case, it was really about regulation and also, I guess, the fear of new stables coming out to market that would disrupt, I think, governments. But now we see that the fiat to stable kind of movement, the first kind of real world asset tokenization that's really taken off, is not really risky here. And I think we're very pleased to have all these stables: USDT, USDC, USDE, PYUSD, USD1, all on Aptos. I think one of the biggest challenges actually now we face is actually having customers understand which one to use, or how we can actually seamlessly provide access to these stables behind the scenes without having to expose customers to swapping from one to the next, to the next, to the next after that. Also, the infrastructure challenges I think people brought up are very valid, and so starting to build out the systems, like for instance supporting tap to pay with NFC chips across different terminals and providing that experience to be seamless and super instant and also very cheap, so that you can demonstrate the value of stables over existing payment rails, where rather than authorization, you get settlement instantly. You reduce that credit risk, you reduce counterparty risk. All that is to be also educated back to the customers and also to the clients, who are going to understand the value of stablecoins going forward in the future.
So my next question is, I have been attending a few of these stablecoin forums, and I heard some very ambitious claims. Some people will say, we are, making the stablecoin, all these financial institutions are dinosaurs. We are going to overthrow the traditional financial system. But it seems you gentlemen are quite nice and saying, we're here to help you to make the payment more efficient. So, Henry, tell us, stablecoin and conventional or traditional financial services, are you more of like challenger or are you more supporter?
I am absolutely a supporter in this stance. So we'll look at a couple of statistics. Currently, the daily volume of stablecoin is $30 billion. That's less than 1% of global money movement. Now, I do think there are particular use cases where stablecoin has an outsized advantage that they will rapidly get use case and volume in. And that would be some of the huge growth vectors for stablecoin. But if we think about our day-to-day use, more than 60% of consumer spend is still through cards, whether it's cards directly, physical cards, or digital wallets. Visa MasterCard networks spend dozens of years building these rails, 150 million POS machines. So these are all progressions that takes time, right? And I do think stablecoin will have unique advantages in some of the use case. Existing rails will remain advantageous in some of the existing networks they've already built. And Interlace for us is really trying to play the humble role in bridging those.
Yeah, I think Henry made some great points. I think the existing payment systems need to be respected for their just pure scale and distribution, right? I think, so to your question on sort of challenger versus supporter, I think it's both. I think I'm both, really. I think stablecoins are here to stay. I don't think that's something you can put back in the box. But at the same time, I think the current market for stablecoins, or the kind of market of stablecoins as we know it from the past sort of few years, it's kind of this internet native economy. And I think that caps out in the tens of millions of users, right? I think the market for global payments is billions of people, right? And so there's existing players that are already serving billions of people, and they're going to adopt. I think a lot of where stablecoin adoption will come from will be institutions that are progressive in their technology stack, adopting stablecoins and serving that market sort of for existing users, right? So it's a bit of both, yeah.
Avery, you must have something to add, because when Libra was first launched, the most kind of concern is the authorities and the central banks, because you're virtually creating a virtual central bank to replace their job.
Yeah, I think the tricky thing there was we were creating like a new currency, Libra, which would have been from a basket of currencies, but or also based on other different kinds of mechanics, and I think that was a very scary thing. This is, again, we're not doing that here, right? The stablecoin world is not creating new currencies, it's just really taking the existing currencies and tokenizing them on chain and making them available and accessible to others, which is just better distribution. I think that's something that the U.S. is very excited about because it's better distribution of the U.S. dollar, for example, right? But I think there's no serious threat to governments when it comes to taking their existing rails and tokenizing them going forward in the future, versus what maybe perception of Libra was in the past.
Now, also, we are increasingly seeing that a number of traditional or conventional financial institutions, or MasterCard, etc., they're also trying to do their own stablecoins. And how this ecosystem is going to evolve, I mean, from like pure stablecoins and these stablecoins from these conventional institutions. Start from you, Henry.
I think the traditional institutions we play slightly different roles, right? For traditional institutions, it's about leveraging their existing networks. So the payment networks I mentioned earlier as a very good example, the banking relationships, the customers that they already have. Whereas for stablecoin issuers right now, the problem they're solving for is how do we use technology to make global money, digital money better? How do we solve for the liquidity issue? How do we build a vibrant ecosystem of partners, such as this panel today? So I actually don't think it's a competition relationship, but whereas it's an ecosystem of players, each in its respective roles, and then we're each looking for a special way to create value and connect with each other.
Maybe you can explain a little bit about your card as a service, say, compared with Visa and MasterCard.
Sure, and thank you. And for us, what we do is very straightforward. We help companies accept stablecoin, and we help them spend in fiat, whether it's through traditional banking routes, pay and payouts, or through card networks, Visa, MasterCard networks. So why it's important is for cross-border businesses, if you're operating in an emerging country, you want to get efficiency gain in your working capital, you want to hedge against inflation, you want to hold your currency against US dollars, against euro, against Hong Kong dollars, etc. So that's how all of that connects. So it really is about connecting the advantage of stablecoin, which is quick settlement, against the current financial rails that's already built and in place.
Okay, Colin, you're talking about the competition between stablecoin and also the traditional payment services.
I think it's traditional services are going to adopt. I think traditional services are going to adopt stablecoins. You need to sort of respect their distribution, and I think.
Okay, so Peter, Tether has lots of pressure. You have 500 million users globally, so you must face lots of questions. Are you going to replace the traditional payment systems or not? These kind of questions.
Okay, so I think that we are not going to replace. I think the terminology need to be very careful used. So we are to support that, increase the efficiency, and everybody knows that it's 7/24/365 round-the-clock tradings, and then the blockchain transparency is also help a lot the understanding about when and how your money flows. So all these are the lacking features of the traditional finance. So we're just trying to support the existing payment rails to be better, to be more efficient.
Could you give us some specific use examples of how they used Tether to improve supply chain and also the payment efficiency?
Yeah, I like this February questions because this is linked to my job scope. So actually, I'm from Taiwan. So Taiwan is famous in terms of the hardware manufacturers. So we ship a lot of the hardware to the emerging countries. But we also know that the let's say the financial stability is not that sound in the emerging countries. So if you look at Argentina, if you look at the Turkey, their annual inflation rate probably go up to 60%. Think about it, 6% annual inflation rate is something you will not experience within these rooms. Okay, I bet most of people do not have this kind of experience. So, and then they create a lot of the problems for the, let's say, manufacturers, because that when they ship out the hardware there, normally they will have a payment term roughly around, let's say, 30 days or 60 days. And once that let's say the maturity comes, and normally they will give you the answer, I'm sorry, I don't have money to pay. It's not because I don't want to pay, it's because the government or the banks did not give me the budget. Okay? And then you will need to, let's say, apply, and then for another, let's say, 3 weeks or 1 month to wait for the payments. Everybody knows that the cost of money in supply chain probably 1 to 1.5% a month. So it rank about the 12 to 18% annual. So think about the hardware, let's say, gross margin or the pure margins is less than 10. If they can not collect money, let's say, in a very efficient way, that's kind of lose money for them. So we have several cases which that ship out the hardwares to Argentina, and then use the stable coin through the different rails to collect back, and then just in less than 3 days. And it helped to increase the efficiency. And let's say from the let's say supply chain company and from the payment companies, they are all happy about it. Okay. The only concern is that still, as what I mentioned before, there must be a clear rule for accounting so that the finance department, CFO, can welcome to these solutions. And this is on the way, and then which we expect that can be resolved in the near future.
Thank you. So as we just discussed, for this year, there's so many stable coins and there's so many issuers, and also there are lots of companies providing technologies, supporting services to them. But we're also starting to see signs of consolidation in the industry. Maybe from Hogan, you can talk about what's the trend of mainly industry consolidation in this field, and will this accelerate? And how about the industry pattern in the future?
Yeah, maybe I'm a good example because our company Banksa, as you might know, was just acquired by a company called OSL Group, which hopefully everyone knows here. It's printed everywhere. OSL has been an amazing partner for us. We're very excited to join them. In terms of consolidation, like I said before, I think the foundations for the next trillion-dollar companies are being laid now. It's still going to be a long journey. It requires a lot of investment and resources and time. But the large fintechs, the large traditional finance companies, let's say like MasterCard, they need to move now. They need to make their investments now and lay the foundation for their future. MasterCard has just announced, or there are rumors that they're acquiring a company called Zero Hash.
It's announced, yes.
It is announced, yes, but it's not done yet. So not completed yet. But they intend to acquire Zero Hash in the US for $2 billion, so even bigger than the bridge deal. And this is just the beginning. I think we all know that it's a race. When I look at my LinkedIn feed, it's all about stablecoin. Everyone's building, and everyone really wants to have a portion of that future. But I believe that consolidation is happening because it requires a long-term vision, lots of resources, and that's how we can see these businesses really making a change in the future. And you have those large companies today that need to make a decision right now: do I make or buy? And I think we're going to see much more M&A activity.
So, Colin, do you agree that do you also see like a clear trend of consolidation in the industry?
Certainly, I think that legacy players need to bring in talent, right, in order to sort of navigate this in a native way. I do think kind of the shot clock on consolidation is maybe rate cuts, right? Because I think a lot of the stablecoin sort of boom has happened as rates have increased, right? Sort of post ZERP, and as rates come down, I think you'll see the margins of these businesses kind of change. And I think there will be founders that kind of see the writing on the wall and these sorts of things and probably need to sell for that reason. And so I actually think that could be a driver of consolidation. And so, yeah, I think the rate environment is kind of an underrated sort of meta force in the stablecoin market.
So, Avery, I would ask you, what's the key differences in perception and also the industrial pattern compared to now and then when you first launched the Libra in Meta?
So actually, when we launched Libra, one of the things that, Colin mentions the rate cuts. That was actually, I don't know if you guys remember, but it was actually almost a negative interest rate environment, which led to some very interesting outcomes because if you imagine a kind of managed stablecoin that has to deal with negative rates, you would actually have to take money out of people's balances in order to pay back like the kind of negative interest rate to the issuers of the kind of basket of currencies. So that doesn't seem to be an issue right now, but maybe in the future again that could kind of crop up. And then all those thoughts about how do we kind of deal out yields from stablecoin issuers back to the customers could be like how do we actually take money back from them in some sense to pay for the kind of holdings of those assets. And I think that's going to be very, very different. The other thing that's different I think now is that we found a way to make the cost and the speed and the scale immensely fast compared to what we were doing back in Libra days. And that opens up new possibilities. So, we think about the new opportunities as like, for example, DeepIn. If you have a really, really fast payments network, you can start to put out kind of these different kind of services where I provide storage or you provide compute or you provide kind of the wireless infrastructure and then a way for a consumer to kind of essentially all just pay each other for those services at very, very high rates. Or support even things like if you want to have betting markets where you bet, with those funds immediately, it can reward creators and reward others that are kind of in this economy right now. So I think we're also very excited is just not about, the changes of the interest rates and things like that, but also the technology has improved so much that you can actually use stablecoins and payment mechanisms for very new use cases that just aren't possible with traditional payment methods today.
Okay, thank you. Also, one obvious question for stablecoin is that if we look at the global stablecoins, I think over 98% are backed by US dollar assets. So what are the chances for these non-dollar stablecoins? I mean, every country is doing that. Singapore, South Korea, Japan, and Hong Kong is going to be giving its license early next year. So what are the chances of these non-dollar stablecoins? And also how they can play their role in cross-border payment, starting from you, Henry.
I certainly do think there is an opportunity for non-US dollar stablecoins. We've actually started conversations with some of our clients, understanding their business flows, understanding their spending needs. They're not all in USD, right? Some are spending British pounds, some are spending Hong Kong dollars, etc. And those use cases become natural scenarios for the use of non-USD stablecoins. I think the tricky question there, and I don't have a good answer to solve that, is the liquidity problem. For them, for us, because we're the infra provider layer, we're kind of a service provider. We need the coins to be extremely liquid for us to provision those services. So I think that would be an interesting problem for kind of everyone in the room to solve. But the business use cases are there, especially in cross-border payments.
Colin?
I think it's not our fault. I think it's an exacerbation of if you have a good currency, people are going to want to use the stable coin of that currency, and if there's structural issues with it, it's going to just be exacerbated by this sort of technology thing. I'm half Filipino and I spent a lot of time in the Philippines, and I think people there flock from the Philippine peso into a USD into USD stable coins because there's inflation, there's dollar savings accounts for a long time were sort of a status symbol. It means you had not just a bank account but kind of an elevated bank account, and so it's related to kind of the natural structural issues of the currency, and having a stable coin for that doesn't necessarily just fix it, right? And so I think currencies that are well managed and and really strong, like the Swiss franc or the Singapore dollar, probably will do very well in a stablecoin environment, and currencies that maybe like the Philippine peso or the euro that aren't very well managed are going to have a tough time.
Okay.
Yeah, I think there's going to be no real difference to what we have today in fiat currency, the traditional system. They will all coexist, and stablecoins will find their way to solve real problems, which is cross-border commerce, really fast remittance, much more efficient than we know today, or open up those corridors that are currently taking 6 days to get your money to with high costs. And I think that's probably what we want to focus on first as well, because we still have not solved this. We still haven't connected the world for money. We've connected the world for traveling, for communication, for everything, for logistics. If I want to get an iPhone case from China, I get it in 2 days delivered to my home in Australia. But if I want to send money to the other side of the world, to specific countries, it takes 6 days and costs me an arm and a leg. So it's really these big solutions that we need to focus on for stablecoins to really have to really make a difference in those markets.
Peter, you have anything to say of the scale?
Yeah, I think that we'll welcome that to see more and more attraction to the stable market from different countries, from different regions. And especially that to make this stablecoin market to be robust, to be growth in a big wave. But I'm not in a position to comment on the specific countries currency. Thank you.
Every?
Actually, I'm pretty excited about it. I think every country is going to have to launch their own stables on chain. Does it lead to dollarization? I don't know. But I think the thing that changes for the most part is that now we'll have these Forex markets that weren't available before. They're super fast. They're effectively, instant, swapping euros for US dollars in your pocket for like a fraction of a cent instantaneously. Like that's an amazing product that just doesn't exist today. Like how hard is it right now to go ahead and withdraw a local currency in every place you go to? It's so challenging. So I think it, in some sense, just kind of, we'll have a very interesting market effect where people will just kind of, at the point of when you need that currency, just convert. And that will lead to some very, very cool behaviors with the technology in the market.
So this comes to our last question. And this year, 2025, should be remembered as the year of maybe the stablecoin really take off. And so could you describe what will happen in next 3 years? 3 years later, how's stablecoin adoption? How big is the market? And how's the institutional use of the stablecoins? Start from you, Henry.
I think from my perspective, number one, extremely vibrant as an ecosystem with traditional players, with kind of the native Web3 players, DeFi protocols, with technology providers, all tightly integrated and looking to solve customer problems. Right? That's point one. It's going to become more and more integrated and vibrant. From a product perspective, I don't think we know the form yet. It could be cards, it could be scan to pay, it could be this dynamic Forex experience, which would be awesome. It could be many, many different things. So I think at that point it becomes what is the consumer experience that we want to deliver, of which stablecoin is the how, not anymore the what.
Okay. Colin?
Yeah, I think crypto natives have had stablecoins working for a couple of years, or several years now, really. And I still, if I do a DeFi native transaction or if I send money to myself across accounts, I think I take for granted sometimes just how amazing of that an experience that is, like how magical that is, and that for the most of the world, it's just totally arcane, or it's a totally incomprehensible concept. So I am looking forward to sort of mass adoption of this, right? Working with an ecosystem of partners and having these experiences kind of proliferate to billions of people. I think that's in the works for sure.
Okay. Maybe some people, some places can limit their money within seconds, 3 years later at least.
3 years, yeah. Given that we're trying to change the world here and making, having a big impact, and we're dealing with governments and banks, legacy systems, which is very complex. I think we're going to make great progress on the technology level, on the infrastructure level, and on the regulatory level. We need to harmonize the fragmentation of the systems and the regulation. and that will eventually really lay the foundation for the next era of payments.
Peter?
Thank you. Actually, I would like to quote the reports from Citigroup. So, Citigroup published reports related to blockchain adoptions and stablecoin adoptions in April this year, and he specifically mentioned about the 2024 likely to be the GPT moment for the blockchain adoption and stablecoin adoptions. And he mentioned about the let's say they divided into different cases, okay? Bear case, base case, and then bull case. And I'm personally quite, let's say, bullish on the bull case likely to happen in coming years. And this is a very big numbers.
Every?
3 years from now, I think we're going to see a massive explosion in number of stables. I think it's going to be very confusing for people, but I also think that some of the biggest challenges that we'll solve, we already have things like confidential token transfers, but privacy is something we didn't talk about here. Today, a lot of stables are just being transferred from one address to another, and I think that doesn't work for a lot of businesses, a lot of customers and their privacy aspects as well. So those technologies will advance quickly, and I think what people also don't realize is that technology is still yet to be kind of developed in full. Right? You have Zcash, you have other methods of kind of more privately not compliant yet transactions, but they're extremely slow, they're extremely expensive. And for us to kind of even match what exists in today's financial system has to be improved a lot. And I think 3 years from now, we'll solve those challenges.
Okay, thank you very much. Anyway, for now, like the stable coin is about 300 billion. And like the baseline scenario should be like 2 trillion by 2030. So anyway, whatever the number is, it is going to be a very exciting journey. Okay, thanks gentlemen, thanks for this wonderful discussion. Yeah.
Thank you very much.
Thank you so much. Let's take a group photo together. Okay, let's take a picture. Okay, thank you so much. Thank you so much for your meaningful and amazing conversation. Yeah, I believe most of us has learned a lot about the diverse of application about the stable coins in our daily lives. So now we will shift back our focus to RWA. The current RWA market is still in its early stage, characterized by the fragmented landscape across asset projects, participants, and institutional framework. This fragmentation continues to pose challenges to the global liquidity and standardization of RWA. So, in our next keynote session, we will hear from Plume Network about their insights into the RWA section, along with their insight and vision and outlook for building a global RWA industry and community ecosystem with the topic Global RWA Alliance. Now, let's welcome our speaker, Ms. Shuki Ma, Chief Strategy Officer of Plume Network. 讓我哋掌聲有請發言嘉賓 Plume Network 首席戰略官 Ms. Shuki Ma。讓我們掌聲有請 Plume Network 首席戰略官 Ms. Shuki Ma。有請。
Hello, 大家好。My name is Shuki Ma. I'm going to do my presentation in English. So, for those who aren't very familiar with Plume, we are the leading RWA blockchain platform, and we have the largest user base in terms of RWA holders. And Apollo is one of our investors. They actually have tokenized their private credit fund on Plume, and we announced the news around like a utilities and the DeFi ecosystem for RWAs. So for RWA, why now? Hear from the institutions, in the industry. Stablecoin has surpassed 300 billion, I think, a few days ago. And then for the RWAs on-chain, has surpassed 35 billions in total. And look at that, the traditional assets, that's, like over 1,000 trillion. For example, tokenization platform, distribution platform, and of course their own assets. We work with all of the different partners, and some of them, they have been expecting a larger adoption very soon too. So why tokenization? Why tokenizing all of the assets? What's the benefit of it? First of all, it's going to be the faster settlement. For on-chain trading, it's 24/7. You can get BlackRock Buildo assets instantly by depositing USDC or USDT into our vaults. And you can get, as the asset issuers, you can actually outreach to the global capital, and you can actually test out your product. Saving a lot of the time and the payments or the transaction fee in general. And then also for a lot of the investors, especially the retail users, these are the new financial products and the opportunities for them. But what everyone is missing in the market right now is that there's a good go-to-market strategy for the asset issuers. Tokenization is not hard. It's just the technology. You choose the right tokenization standard, and you own the smart contract. It's not that hard. But the GTM, go-to-market standard in terms of regulations and compliance, and also for the infrastructure in the current market, they're super fragmented. So this is how we are solving the problem. First of all, tokenization. For you to tokenize the assets, and we are going to work with you to make sure that the smart contract has been set up well and nicely on Plume. Second part, compliance. For the chain itself, we actually built up the on-chain level AML and whitelisting and modular infrastructure to make sure that we're meeting with the compliance and the regulation structure. Exchanges, including the brokers here in Hong Kong locally and in Latin America. We are also working with the Ant Group's RWA wallets, Topknot. And for tokens utility, that's the most important part, and that's how we're spending a lot of the time on building the whole ecosystem for RWA plus DeFi. It's more utilities of the RWAs. We enable staking, liquidity, secondary market trading, and lending in general. And recently, we have launched a very big news. Wisdom Tree is actually tokenizing 14 funds on Plume, and it's available on Nest right now. So if you go to Nest, our products, you can actually buy Wisdom Tree like right now on your phone. And we have the incentivized APY as for now, as the campaign. And this is the tokenization flow process. For asset issuers, you have to understand what kind of entity you have to set up for tokenization in general. And for the tokenization engine, you can tokenization engine, or you can use securitize. They're all modular. And then for the regulatory filing, you have to choose or you have to follow the different regional and jurisdictions rules to do that. And for the regulated exchanges, we work with DGFT and others to distribute the tokens. And of course, the transfer agents, we also got the transfer agent license that's SEC approved, but you can also work with Securitize, TokenSoft, and finally Custody. We work with the world leading custodies providers, for example, like Kobo, BitGo, Fireblocks, Anchorage, and that's the whole tokenization flow. And all of these are modular, so you don't have to work with, one specific partners. On Plume, you can choose to work with anyone as long as, it's like in the tokenization flow, we can all make it work. And for more details, especially for the asset issuers, the tokenization accreditation checks service provider, you can just work with Plume, and we can do the KYC, and we can do the privacy preserving, all of the features available on Plume. And we are confidently to say that we are the #1 RWA ecosystem because we have over, first of all, 5 billion assets in pipeline, including the Blackstone, BlackRock, Apollo, Wisdom Tree's assets, and we have over 200 plus protocols available for RWA plus DeFi ecosystem, and we have a very big user base map in different countries. For example, we have Vietnam, Indonesia, Japan, Hong Kong, Nigeria, India. All of the emerging markets are our focus. Global and the APAC regulators to make sure that our features, our chain is ready for any sandbox projects. And also at the same time, we are working with the institutional institutions trying to figure out their needs and their requirements, for example, in Hong Kong when it comes to tokenization. What kind of license do you need, and what kind of brokers, platforms that we have to work with. And also, for a lot of the users and the institutional investors, we're trying to make sure that the compliance are matching with the policies locally, but at the same time to ensure, to enable their user experience are smooth enough. So these are some institutional use cases on Plume. We have Apollo, UBS UMint, SuperSafe T-bills, Circle deploy USDC natively on Plume, and BlackRock's tokenization, tokenized funds on Plume too. On Nest, and on Nest, we are offering a very good user experience in terms of the non-KYC and the non-minimum requirements retail investors. That's why we have a lot of TVLs on Plume, on Nest and Plume. And lastly, I want to actually share the quote from our CEO. So we are not Wall Street 2.0. We are Robinhood 2.0 because we want to make sure that our user experience is good enough for the retail market. And we want to make sure that the DeFi ecosystem can be nicely and can be nicely and smoothly to be connected to the RWAs. Thank you. That's it.
Thank you so much, Ms. Ma, for wonderful sharing. Thank you. Please take a seat. Now we will move on to our fourth panel discussion on the topic, Unlocking RWA, New Pathways for Tokenizing Real-World Assets. So real-world assets are regarded as the bridge connecting Web3 with the trillion-dollar traditional financial market. And in this session, we will examine the tokenization of different asset classes in a compliant and secure way, exploring innovative solutions to key challenges such as product instruction and asset on-chaining, market valuation, and risk control, while outlining a practical path toward building a healthy and resilient RWA market. So now, let's welcome our moderator, Mr. Brian Chen, Head of Wealth Management of OSL Group. 掌聲有請主持人 OSL 集團財富管理業務負責人陳滔先生，掌聲有請。有請 OSL 集團財富管理業務負責人陳滔先生。And our speakers, Mr. Dan Maley, Director and Head of APAC Cash Business within BlackRock Global Markets and Index Investments. Welcome. 有請发言嘉宾，贝莱德全球市场及指数投资总监及亚太区产品战略主管 Dan Maley 先生。And then let's welcome Mr. Paul Liang, Chief Financial Officer of N-Alpha. 掌聲有請 N-Alpha 首席財務官 Paul Liang 先生。Now let's welcome Mr. Andrew Scott, Head of Digital Assets of MarketNode. 掌聲有請 MarketNode 數字資產主管 Andrew Scott。跟住落嚟，讓我哋掌聲有請。Now let's welcome Mr. Chadden Karkanis, Senior Vice President of Franklin Templeton Strategic Ventures。掌聲有請富蘭克林頓普頓戰略投資高級副總裁 Chadden Karkanis 先生。Please be seated.
Okay, ladies and gentlemen, thank you for coming to Finternet. I'm Brian Chen of OSL, your moderator today. We are very honored to have our panelists here. In this panel, we're going to discuss or trying to bridge the gap between traditional finance and the blockchain technology. So now let's dive in. So actually, when we talk about RWA in the fourth quarter of 2025, it's no longer a very new concept to us. I think it's widely adopted by institutions. So my first question to the panel will be that based on your experience, in what ways RWA can benefit institutions and what are the biggest hurdles in scaling this integration across different asset classes? Maybe I'll begin from you, Daniel.
Yeah, sure. Thanks, and appreciate you having us today. I think broadly, we see the benefits of tokenization RWA for the financial ecosystem and the infrastructure as a whole. You can see the TradFi benefits that are being adopted in the cryptocurrency and digital asset space, but I think also from the DeFi space, we can broadly see benefits that are transitioning to TradFi as well. So I think it's important to connect those, and I think we're seeing that in Asia mostly. And I know I'm first, so I'm not going to take all the benefits. But I think if I think about just one benefit, if we think about smart contracts, the ability to automate from a compliance perspective, settlement in terms of trading as well as payments, particularly in my space from the liquidity sector, that's something that's we spend a lot of time and also clients spend a lot of money on. So I think, reducing costs and fragmentation is a huge benefit that smart contracts would bring. Now, if I think about hurdles, again, there's definitely challenges in this space, but nothing that's not overcome. I think, the infrastructure uplift, we've broadly been on the same infrastructure for the last few decades, and you've only seen really incremental uplift of that infrastructure. It's going to take, a lot of technology as we kind of see that convergence of DeFi and TradFi, and also some effort and spend at a technology level, but also from a people level. A lot of the time we talk about the benefits of 24/7 liquidity, and if you think about potentially tokenizing bonds or underlying money market fund instruments, there's a human element, and people are going to also have to be probably trading on a 24/7 basis as well. So there's a lot of infrastructure as well as people build that would go into it. So definitely hurdles, but also benefits that we're seeing.
Paul? Okay, thanks. So maybe from my side, I talk about the obstacle first. I think for other ways to have a broader application, maybe the enforceability of the titles or the transaction might be quite critical. I think for the near term, it may be meaningful to have like the transaction to be validated or enforceable through the off-chain like legal title transfer or recognition or something like that. But in the long term, hopefully we can have everything on chain. So all this, everything is directly enforceable on a on-chain basis. So this is very important. I think. So imagine, for example, like if you buy a property in Hong Kong, and so the land registry in Hong Kong does not recognize the legal title transfer, so the transaction is not valid. And well, this is something that we consider this is very important, so that to a broader and participants and roll out this enforceability, which is quite key. From investors or issuers' perspective, and definitely for issuers, gonna have a broader exposure from different investors in where they cannot touch in the past with all this other way, which has the liquidity or governance, which is quite clear on chain, which they can expose to different like investors. And for investors, for them, they can invest in some fragmented like assets, and some assets are not that liquid in the past. So they have a broader choice on that.
Hi everyone, well isn't this lovely? What a beautiful stage. It's sincerely a pleasure to be on stage here today with legitimate experts, and there really aren't that many. Despite tokenization being quite an old industry, it's 11 years old now, there's very few people who are doing it properly and at scale. My name's Andy, so it's lovely to see you all here today. I think the only reason you tokenize anything is to either improve the product or democratize the access, and ideally you do both. From an investor perspective, the advantages, we touched on some of those already, so I won't reiterate those, but atomic settlement, etc., are extremely important, especially to those at the cutting edge of the industry or the hedge fund space, and there are many, many more benefits from a product perspective, but from an issuer's perspective, it's really just broadening the access, so it's more investors, it's more countries, so it's all just more, better, democratized. On the hurdle side, there are an awful lot of hurdles, but none of those are particularly insurmountable. I'd say the main issue that we still have today is people in politics. And I don't mean politics at a governmental level, I mean internal politics. There's a lot of heads of tokenizations on the street. They have extremely different jobs. And so there needs to be a bit more standardization of the focus, but that's just, a function of the readiness of the firms they're at, right? The people on my panel here are very far ahead in their journey. Many of their competitors are not. So I'd say the biggest hurdle is readiness and desire.
Thank you for the honor of being on stage, and I get the benefit of being last. So I think you've covered most of the points, but I'd like to just maybe by way of background, I work for Franklin Templeton. We started the tokenization journey back in 2016. Very proud to announce officially today we launched the Luxembourg domiciled tokenized money market fund available to professional investors in Hong Kong today, along with OSL, and as part of Project Ensemble. So thank you, Hong Kong, SFC, HKMA. We're very happy to be part of the journey. Now, I think my fellow colleagues have already covered the benefits. Cheaper, better, faster, accessibility, access to different types of products. We're still all in day one. So treat this as, even though you said, we've been in the journey for about 10 years, the fraction as the Plume Network persons just showed up on the slide is, we're still not even uncovering 1% of 1% of the total 200 trillion plus of actual assets out there. So that gives you a semblance of the potential size and benefit we can go after. Now, one thing that has not been mentioned is aggregation and holistic portfolio advice. That's missing even in Web 2.0 world. People don't get a view, a look through of their entire financial profile, their holistic portfolio. And I think blockchain will help solve for that, because once you can get assets on chain in a single ledger or even across multiple chains and being compatible, you can actually see where your assets and liabilities sit and be able to compare your portfolio across different asset classes, which I think is still difficult for many institutions today. So hopefully that'll be another benefit in addition to everything that's been said.
Okay, thank you guys. Yeah, our expert has talked about the benefits and the hurdles, and one of the hurdles I think OSL has witnessed during this tokenization process is about liquidity. Yeah, because RWA has promised 24/7 trading and also with fractional ownership, but the fact is that the secondary market is still, market depth is still shallow all around the world. So what do you think should be the incentive or what is required to solve this issue? Maybe this one I will start with you, Paul.
Okay. Yeah. Thanks, Brian. So I think every new category of access or a new market definitely takes time. It's not gonna be ready on day one. So just like Wall Street starts on the street as well, and definitely take time. And also for just like crypto transactions, it used to be like individual arbitrage, and all the way through now like to institutional arbitrage. So Rome was not built on one day, so definitely so it takes time for the investors, for the regulators to be involved in. So everyone should be playing their part to promote during the process. And also positive feedback is very important, and liquidity brings liquidity. So this is something that we can see.
Okay, Andrew?
Yeah, I mean, look, it's a fair point. It's not that difficult to originate an asset, get it seeded, but then the complicated bit is actually having a distribution strategy beyond that, and having two-way markets is very difficult to do in the most popular products, because there's not really a natural two-way market in a credit fund that's private, in a money market fund. So it's a very hard thing to solve, because the product market fit today doesn't lend itself two-way markets. But I think when you start looking at assets like gold, which is becoming extremely important in the tokenized landscape, you can start to see what the future would look like and where secondary markets can really scale. So there's obviously an awful lot of market makers who are very comfortable on tokenized gold because it is, the easiest thing in the world to get price transparency on. And that's started to be used as collateral on certain exchanges now, especially derivative exchanges. I think Deribit were one of the earlier movers in that space. When custody happens on these assets and they're really considered pristine collateral, that's when I think it really, really scales. So I'd say more engagement of the market maker in crypto. It's the most fragmented asset class on the planet. Market maker is the most important role in crypto. So better engagement of market makers and tokenized products, and more engagement of prime brokers and exchanges to start using these gentlemen's products as collateral.
Brian, I'm going to request if you could repeat the question so I understood it correctly.
Yeah, so it's about liquidity. So what do you think? Because RWA has promised this kind of like 24/7 trading and or this kind of fractional ownership. But what we have seen is that still in the worldwidely speaking, the secondary market depth is still shallow compared with traditional assets. So what are the incentives that you think will be required to make this happen?
Was my answer so terrible he forgot the question?
Not at all. It was perfect, spot on. Thank you, because I think the reason we started with money market funds was precisely because it is an asset class that's fairly basic. It is liquidity management, as Dan's going to point to as well, is a crucial aspect of the financial markets, and there's great degree of depth. But there's ways to improve that efficiency, and collateral use case, for example, we have a product as well that is used for collateral for trading. That's the easiest market to go with if you have a money market fund that's backed with pristine real-world assets that actually stand the test of time. So what we're trying to do here is not reinvent the wheel so much that we're creating, I understand the point of lack of liquidity in certain other elements of the market. That is partly because we don't really have mass retail or mass institutional adoption yet of these kinds of assets. And until that comes, and this kind of ties back to your first question, because one of the challenges, or what we haven't seen yet in the hockey stick, is the mass adoption of digital assets. How do we make the story more convincing? And I think education is missing in this element, because most people don't even understand what is cryptography, what is encryption. It's often misassociated with, oh, there were certain scams or there were certain hacks, and that's led to sort of loss of trust and confidence of the system. So I think we have to focus on education and confidence in the system to be able to rebuild that liquidity and the secondary market volumes.
Okay, thanks. Daniel, you have anything to add?
Yeah, I can build a little bit on Chetan's point, but in terms of adoption. But I think interoperability between blockchains, and we're starting to see that, but I think movement on public blockchains to private and private to public will help in terms of increasing secondary liquidity. If you think about it right now, there's lots of almost silos that sit in between them, and you're beginning to see the walls break down on that. But I think as you get more interoperability between chains, then that's going to increase liquidity across the whole ecosystem. I would also say, in terms of trying to grow that institutional demand, not only secondary liquidity, but as you think about liquidity solutions, primary liquidity for institutional investors, they are, again, it's about education. They come in and they think it's 24/7 liquidity that can be provided, but realistically, until the underlying securities that are bought are fully securitized and can trade 24/7, then it's very difficult to provide that instant liquidity, which a lot of institutional investors are quite used to very quick liquidity in fiat money market funds already. So I think that will help increase adoption from an institutional perspective, but that's a long time away. But I also just think that the interoperability between chains would help in terms of the secondary market liquidity.
Yeah, very informative. Yeah. Now, I think our audience not only want to know where RWA stand today, but also as pioneers in the industry, where you guys will be steering this RWA product into. So I will pose a question to each of you. Maybe I will start with Chetan. Yeah. So we know that Benji is the world's first U.S. registered money market fund. So how Franklin Templeton is leveraging platforms like these, and what lessons that you think from the US side can inform Hong Kong's tokenized money market fund?
Oh, great question. Happy to share our experience. We started this journey almost in 2016 when our CEO started asking basic questions. What is a token? What is a blockchain? How does that impact the fund transfer ecosystem? And again, as a prior speaker walked you through the ecosystem, how it works for fund management, I think there's a lessons learned in how to improve the efficiency across the value chain. So, but money markets are not the reason we did tokenization. That was, as I mentioned earlier, a money market fund at a constant NAV dollar price is a relatively less complicated product to tokenize. And then from there, you build on to other products like private equity, private credit, multi-asset portfolios. Perhaps you even need to tokenize an ETF. Maybe an ETF is just basically something you can create in a token form. So that's where I think the direction of travel is going. What we ultimately see for the rest of the markets, so now today we are in the US, Hong Kong, Singapore. We're actually one of the first retail-approved products, tokenized products in Singapore, and obviously Luxembourg in certain jurisdictions. So the lessons are the same. Actually, if you look at the value of decentralization, the only thing that is holding us back is full regulatory adoption for the global regulation, if that can ever come. But let's not hope for that. For the time being, we're operating within the jurisdictional confinements that we have. But the technology is portable, it's the same, the investment teams are the same, the approach to tokenization is the same across the regions. So I think this model has to scale, and it has to be replicable regardless of which jurisdiction you're operating in.
Okay. So for Daniel, we know that BlackRock unveiled its first tokenized fund, Budo, last year. So how are you adapting the RWA strategy for Asian markets like Hong Kong? And one more question is, from your perspective, what metrics, for example, AUM or something else, that you will define as moving, the RWA business is nearly moving from a pioneer stage into the mainstream business of an institution?
Yeah, maybe I'll take the second question first. And it's probably nothing that, like, from a markets perspective, people can really measure. But I think from my own personal perspective, how I kind of interpret the scaling of it is, I have the privileged position in my role of covering, cash, which is a sector that basically every client has, right? It's an asset class that, whether it's a private bank, a hedge fund, a crypto exchange, an official institution, or a corporate treasurer, everyone has cash. So I get to sit in a seat where I get a lot of information from clients, and as a fiduciary, it's really my role to listen to what clients want and provide solutions for them. So, anecdotally, I would say that in the client conversations I've had, even 6 to 12 months ago, maybe 5 to 10% of the clients were asking about tokenized RWA or digital assets in some capacity. You fast forward to the last few months, and obviously regulatory tailwinds have helped that. Probably 90 to 95% of my client conversations across all of those client sectors have some form of question about tokenized RWA. So I think that is, from my perspective, my own way of gauging client interest, listening to clients, and then trying to provide solutions across that. So in terms of how we think about the opportunity set within tokenized RWA, I think from a reserve management perspective for tokenized money, I think we have been a global leader in that space already. And I think the convergence of our TradFi business, which is, has an over 50-year track record for, running money market funds, which is the longest in the industry. I think that, alongside of us being a leader in digital assets, puts us in a good position for other reserves management. Also, in terms of on-chain providing investment yield solutions for investors who are seeking that, whether that's via tokenized deposits or tokenized money. So offering that solution for investors, really again across all those client sectors. And Chetan touched on this earlier in terms of collateral, and maybe more on the crypto exchange side. But if I think just traditional collateral, in some jurisdictions, money market funds are used as a unit of collateral. And that could be a huge unlock if you think about hedge funds today that are posting collateral on an initial or variation margin perspective. That's very clunky and can take time. So if you could get to a point of utilizing the benefits of, say, a tokenized RWA to move collateral instantaneously, that's going to unlock a lot. So I think that there's, really three critical areas that we, are looking at as we're along this journey.
Okay, thank you very much. I think the collateral part is really important because it add another extra layer to the function of the tokenized money market fund, which is pretty useful. Yeah. Now back to Paul. We know that Anti-Alpha is now promoting gold, which I love very much. I store gold under my bed so that I can sleep well. It also reached an all-time high recently, above 4,000. In your opinion, how to make physical gold more accessible and liquid for institutional investors, and what role do physical vaults play in building this trust?
Thanks. Maybe I start with a kind of short introduction first for Anti-Alpha, because everyone around me is with all the big names. For us, we might be not that well. Just a quick introduction. Anti-Alpha is a leading fintech company. We provide financing, technology, and risk management service to the institutions in the digital asset industry. It's not like OSL. They are client-facing to the retailers. Everyone knows about their names. We are mainly working with the institutions, miners. We provide financing to the miners to provide mining supply chain loans and also margin loans, so that they can take loans and originate and manage their loans on our Prime platform. And also they can monitor their collaterals on a near real-time basis. And from start this journey, we start like 3 years ago, and we get listed on a traditional IPO this year in May in NASDAQ. And so we, along the way, as Brian mentioned, we are studying on the other way, and we do some experiment. In May, we invested $20 million in XLT, the Tether Gold. So which, we do see some positive returns on that. And starting last month, August, we actually participate in a PIPE, the 100 million PIPE in Prestige Wealth Management, traditional wealth management company. So we invest 43 million in this company, and after the investment, we hold 32% shares and 73% voting power of this company. So this company is basically the first digital asset treasury company invested in the Tether Gold. And this is the pure play, and which is also the first that in this space. And go back to Brian's question. Well, firstly, we invest in Tether Gold. With this British wealth management, we actually renamed it as Aurelian. So Aurelian by 134 million XAUT. So with this XAUT, as Andrew also mentioned just now, with the digital gold, we are experimenting for the pledge collateralized of digital gold to have the collateralized lending. And on the other hand, we are also setting up partnering with Tether to promote the XAUT, and also we set up a RWA hub so that we are actually plan to building a physical walls in major financial cities in the Asia Pacific, so that every XAUT is is backed by a real physical bar. So I think in Asia Pacific, it's very tangible for the traditional investors. They would like to see something tangible. They hope that, they don't, sometimes they don't really believe on the codes, like something on chain, but so all this XAUT, they can actually redeem in one of the walls, the channels we build out. So this is the initiative, and we are partnering with Tether to do that. And back on the XAUT, maybe a little bit more on that. So XAUT is backed by the one-on-one gold bar, which you can redeem in Switzerland, and Alpha is helping to build a channel in Asia Pacific. And also, Tether is actually engaged one of the big audit firms to carry out audits every quarter, so that to ensure everything is auditable, everything is backed physically by the gold bar. So that's what we are doing, and hopefully we have more recognition in the market. I mean, people will more and more be interested in investing in digital gold.
Nice. We're really hoping we could have the chance to visit your gold vault here in Hong Kong if you finish to complete the building.
Sure.
Okay, cool. Now, Andrew, backed by Euroclear, HSBC, SGX, and Temasek, we know that MarketNode is one of the APAC's most trusted and neutral digital market infrastructure provider. So please tell me, what do you think, which tokenized RWA products are the most enticing to Asian investors in your view?
It's a great question, but I'm not sure I have a great answer. Let me think about it.
There's no stupid answer, only stupid questions. Please.
Yeah, I've been tokenizing assets since the early 90s now. Not a single laugh. Wow. Look, the reality is the demand is not meeting the access. That's actually Asia's problem to solve. If you think about gold's a perfect example. There's an awful lot of demand for gold in China, and we know we can't do tokenized gold in the mainland, right? There's an awful lot of demand for mid-single-digit money market yielding funds in Japan, and we know we can't really tokenize those today. So actually, the product market fit is not an academic question. We kind of know what it is. It's actually getting the right products to the right clients. And I'd say areas where we can focus, where we know exactly what works here, are actually a bit more esoteric too. So some of the things I'm more excited about tokenizing are things like hedge funds. There's a huge universe of hedge funds in Asia that are somewhere between $200 million and $2 billion. They would dramatically benefit from getting access to a North American investor base. That's one example. I think an example in Asia is very much structured products. because we know, I mean, we've been doing structured products in Japan for the better part of 50 years, in Korea for 40. We know how to do that. It is a product that requires an awful lot of improvement because it's a very expensive product and it's not a very inclusive product. And so I think that is a product that will do extremely well in Asia. That we've worked on some of these projects in the past. We'll be able to announce something in the future. So I think structured products are a really good place, and things like hedge funds are really interesting for Asia. But I just think more broadly, Asia has more wallets than any other region in the world. So it is the biggest addressable market with the fastest growth. So if you're doing any tokenization product, you should be marketing in Asia.
Okay, cool. Interesting. Now I have the last question for the panelists, is that stablecoin or on-ramp and settlement layer for most tokenized RWA products. So what do you guys think? How should Hong Kong balance innovation in stablecoin issuance with investor protection, especially as global players like Standard Chartered are entering into the playground? So maybe I'll start from you, Chetan. Yeah.
That's a very tricky question, so I'll give a sort of carefully worded answer, given the regulations that are still being formed. But I think that the first check or first step in any of these, in that regime, is going to be AML KYC. I think you have to pass some rigor and testing of the intermediary who's distributing or handling a stablecoin platform, ensuring that the platform has done adequate checks and has rigorous compliance policies in place. I think we take that for granted, and quite honestly, it's we're not going to win the trust of our clients and our customers if we don't have their trust in how we're running the internal processes. So for a regime to work effectively, I don't think the issue is the stable coins themselves. I think the issue is the actors perhaps using the stable coins and how we're monitoring the movement of that money. So I think the one way to establish a safe protocol and process is to perhaps leverage more tech. I look at a lot of fintechs in the compliance regtech space, deploying AI, deploying maybe the latest cutting edge tools. Maybe that's one idea for everyone to consider in the ecosystem as to, if you want widespread adoption, don't blame the vehicle, don't fault the vehicle, look at how to adopt it within a modern framework.
Andrew?
A very good answer. I've always wondered if I was funny in Chinese. It turns out I'm not. Look, I want to get my license in Hong Kong in the next 12 months, so I'm just going to say they're doing an incredible job here in Hong Kong. The reality is, what they need to do is what they are already doing, which is to remain extremely collaborative. I've been working with regulators all over the world for the better part of the last 2 decades. And in digital assets, especially in Asia and very much in Hong Kong, it is the only time in my entire life I've seen such humility and such collaboration with participants and regulators. So I would just say, continue to do that. The industry will continue to innovate. It is extremely complicated to regulate these markets. Just stay humble and keep progressing. But I think Hong Kong has a great future in this space.
Paul?
Yeah, I think I think in Hong Kong, with the it's kind of quite, we can say quite new, and Hong Kong is embracing. So definitely we can say that here we have a lot of talents from different finance and compliance and legal. So we have many international investors here. So definitely it's a good place to be in, and hopefully, well, it's something. We need a lot of discussion on that, and a lot of maybe consultation going on, and we do see some of the definitions are still not quite clear at this moment. And then we also see the regulators are also consulting the industry, and definitely we hope that with more consultation, hopefully we have a clear picture, and so that everyone can be part of it.
Daniel.
Yeah, I'm not sure I have too much else to say, but I would just say that I think Hong Kong has been good at being at the forefront in terms of getting regulation out, and then not rushing into it in terms of the licenses as well. So I think if I could build on Chetan's point again in terms of what they could do better in terms of regulation, I think we'd love to see global consistency in terms of regulation, so collaboration from across the regulators, but also I think AML, CFT would kind of be at the forefront of the things that we would say clear, concise regulation would be helpful.
It's almost time. As a wrap up here, I think that the future of RWA is here. Let's build with open, secure, and licensed entity, what OSL stands for. So thank you for our fabulous panelists, and thank you for listening. Enjoy the event.
Thank you, Brad.
Thank you so much. Let's take a photo. Okay, thank you so much for your thought-provoking discussion about RWA. Thank you so much. Please take your seat. And next, we will move on to our third keynote speech on the topic, Mapping the Digital World with Real Economy. The rapid advancement of technology has propelled digital assets to the forefront of the global economy. The digital world is no longer an isolated parallel virtual space. It has become a key driving force behind the transformation of the real economy and the creation of new value. So from the circulation of digital assets to the broader digital ecosystem, the connection between digital and physical worlds holds vast potential. As the virtual increasingly merges with the real, it is the time to rethink the digital sphere's significance for our daily lives and the economy, and explore how bridging the two worlds can unlock innovation, efficiency, and sustainable growth. Now, let's welcome our moderator, Ms. Ting Pei Ling, Co-President of Metacom and member of the Parliament of Singapore. 依家讓我哋掌聲有請演講嘉賓，新加坡國會議員 Metacom 聯席主席陳佩玲女士。現在讓我們掌聲邀請演講嘉賓，新加坡國會議員 Metacom 聯席總裁陳佩玲女士。掌聲有請。
Well, a very good afternoon to all of you. Hi, I'm Pei Ling. When I was first told about the topic for today, it seemed like a very broad topic. A lot of things can be spoken about this. And so for today's sharing, I thought that I will approach this topic from a few angles, a little bit from the Singapore perspective, a little bit from the macro, and of course, a little bit from policy as well as the industry angles as well. Instead of me twisting my head to look at the side screens, I decided to hold my iPad with me, so please bear with me. Now, the digital future is here. I think this is a long forgone conclusion. Embracing digital technologies from artificial intelligence to the DLT, these are some of the things that we have now recognized them as not just opportunities, but necessity. And so, mapping the digital world to the real economy, ensuring that digitalization serves the purpose of real-life economy is no longer just a theoretical exercise, but a strategic imperative aimed at improving lives and in many aspects, and of course, contextualized to today's event, definitely in the realm of financial. And so when we talk about digitalization, what kind of problems are we looking to solve? Is this the right? Am I clicking it right? Okay. So there are, of course, a few problems that we are looking to solve here. And many of these things that I've listed here are probably not unfamiliar to you. Number one, friction in trade and finance. For a long time, manual paperwork, fragmented standards and slow settlement speeds have been increasing costs for businesses, especially the small and medium players, delaying settlements and also missing opportunities. So this pain point is also something that that through our Metacom's recent white paper published and co-authored and published with INSEAD this year also attest to this. Now, of course, then with digitalization, we can increase the processing speed and lower the transaction cost. That means the cost barriers for a lot of businesses. Next is fragmented identity and onboarding. Multiple KYC and KYB checks and inconsistent identity proofs become barriers for businesses and workers to participate in formal economy. So if we are able to put in place something that is more interoperable, that is more harmonized across the different jurisdictions, this is definitely something that will help make onboarding, make business processes go a little faster and a little smoother, and obviously lower cost as well. Opaque supply chains and weak provenance. Another thing that we can think about, lack of verifiable origin, custody, and quality data, not just in terms of physical goods, but even for financial products. We talked about RWA earlier. So these are some of the things that we need to make sure that it is tamper-proof, and so that we can have more value-based pricing, and so that we can ensure transactions can take place in a compliant and safe manner. Then obviously, as is now, SMEs face limited access to finance and markets, partly because of size, partly because of the compliance costs that is upon them, and also because they're the smaller guys, sometimes they suffer poor visibility to the market. And so through tokenization, interoperable payment rails, and digital marketplaces, hopefully these can lower the barriers and create more opportunities for these smaller guys. And then there's also risk concentration and lack of resilience. So over-centralized, opaque systems can amplify shocks. And so again, with greater interoperability, standards-based digital layer can help to diversify the risks, improve observability, and enable coordinated responses. Now, these are just some of the problems that I feel that digitalization can solve. The list can go on. Beyond these problems, there are also larger forces at play. So first and foremost, geopolitics and geoeconomic tensions. This is something that is also top of mind for many of us, especially if we have been paying attention to current affairs. Post-Cold War, Pax Americana has been shaping the world order. Building international institutions, setting international rules, and this has ensured stability and progress around the world. Now, but with the concentration of power also carry risks. Abrupt policy shifts, tariff shocks, and weakening multilateralism have increased volatility. Now, these trends reshape sourcing, manufacturing, logistics, and talent flows. In short, a fractured international order and rising US-China rivalry means that we must design digital economic infrastructure for resilience and diversification. And next, rapidly evolving technologies. Now, AI is almost like the new OS for a lot of work systems. And then there are new compute architectures such as quantum emerging. And for DLT, it is also transforming how the financial work. Today is a prime example as we discuss some of these examples. And so these redefine what is possible and what we must govern. Thirdly, would be the heightened threats to trust. Misinformation, disinformation, frauds, scams, And a lot of these other cyber attacks are also happening at unprecedented scale and speed. Left unaddressed, these can undermine the national security and trust that are necessary for digital finance and the digital economy to work. So here, I think with all of these taken into consideration, we need a digital world that solves real problems and that is built on interoperability, compliance, and trust. Now, coming from a Singapore-based, Singapore licensed payments institution offering stablecoin-enabled cross-border payment services, allow me to further illustrate this in the payment context. Now, payment follows trade, and despite the geopolitics issues that I have shared earlier, the World Trade Organization estimated that global trade in goods and services will still reach $33 trillion this year. And since we are now meeting in Hong Kong, I thought it would also be pertinent to talk a little bit about the trade flows between China as well as the regions including Asia Pacific, Middle East, Africa, and Latin America, 就是亚非拉. The South-South trade is creating new corridors across these regions. And ASEAN, where Singapore is a keynote of, remains China's top trading partners. So basically, things are still going strong. There's still a lot of potential for growth and positivity there. China's outbound with these areas, including Asia, ASEAN, Middle East, Africa, and Latin America, have also shown steady growth even during the trade tensions. For example, if you can see from the chart, between China and ASEAN, trade grew by about 9.7% year-on-year as of August this year. And the recently signed in October Enhanced ASEAN-China Free Trade Area 3.0 explicitly also addresses digital trade and the green economy. Now, despite that, friction still remains. So in a lot of the markets within these regions highlighted, these are still emerging, they still face a certain, quite a few challenges, including weaker infrastructure or financial system, limited US dollar supply for settlement, and cash flow constraints. And these will highly impact especially the small and medium enterprises. And let us not forget, SMEs form about 90% of the global businesses and more than half of the world's employment. And so SMEs are central to inclusive growth around the world. So by helping them, we are helping the whole economy around the world grow as well. And therefore, an alternative cross-border payment solution to legacy rails becomes critical to this idea of resilience. I would say that, therefore, stablecoin-enabled cross-border payments will play an important role in facilitating trade, especially with these emerging markets. And with that, the need for a Web 2.5 system, a pragmatic middle ground. To achieve this, we should definitely pursue a Web 2.5 model, a hybrid that bridges the traditional financial infrastructure with blockchain-enabled innovation. I spoke about the pain points earlier, and those would be the push factors. Now, I would also share another 3 more considerations that support this path towards 2.5. First, the pull. Technology and regulations are maturing and gaining clarity. So stablecoins address speed, cost, and transparency. Stablecoins as a market is also growing very steadily. Citigroup, for example, originally projected earlier this year that the stablecoin market would reach $200 billion this year. But in very recent estimates, it has revised upwards to $280 billion. And over the longer term, they estimate that it could hit $4 trillion by 2030. And obviously, as the market grows, use cases can expect to increase as well. And top of the list would definitely be cross-border payments. Now, regulation is also catching up. We know that US moved on its Genius and Clarity legislation earlier this year. Singapore, Monetary Authority of Singapore, also introduced the stablecoin regulatory framework in 2023 as part of the Payment Services Act, one of the first and also one of the most comprehensive to be introduced to date. Hong Kong also introduced its stablecoin ordinance in August this year. And across ASEAN at the regional level, there have been several initiatives to experiment and pilot programmable money. So in Singapore, we have XSGD, now listed on Coinbase. Malaysia also has its ringgit-based stablecoin being launched under sandbox condition. And several other member countries also have their own local fiat stablecoins as well. So now infrastructure readiness, therefore, is also critical and part of this consideration. And this is evident in ASEAN within the region. At the regional level, ASEAN is pushing for more settlement in local currencies. And it's already linking national QR payment systems across the different countries. For example, Singapore's PayNow is now linked to Thailand's PromptPay and also several other markets within the region. And the Regional Payment Connectivity, or RPC, initiative provides a regulatory and technical foundation that, in my opinion, can later also be extended to stablecoin and tokenized assets. Meanwhile, infrastructure projects are also emerging globally. MAS has introduced several projects, many of which have matured over the years. These include Project Ubin, Project Guardian, Project Orchid, and many more. And these will lay the foundation for tokenized transactions and settlements. Project Guardian, for example, has gone commercial. Then the more recent one will be Global Layer 1. And this seeks to create standards for tokenized settlement with compliance embedded by design. Now, Japan's Project PAX and JP Morgan's Onyx are also similar models elsewhere. So the convergence of market adoption, regulatory clarity, and infrastructure readiness would therefore form the pull factor in accelerating stablecoin adoption in payments. Next is that traditional finance will continue to endure. The global FX market trades is estimated to be about $7.5 trillion a day, according to BIS, and that's in 2022. Stablecoin-based payments account for less than 5% of that volume as of 2023. So even with exponential growth, stablecoins will take time to reach parity. Separately, McKinsey also project that stablecoin-powered settlement could surpass legacy payment volumes within a decade. But that still implies coexistence, not replacement, at least in the near term. Also, if you think about it, governments and central banks will continue to trust and rely on established infrastructure. That means that the most practical way forward is not Web3 only, but a hybrid model, where stablecoins and tokenization sit on top of trusted banking rails, complementing rather than replacing them. Third is bridging the trust deficit. Now, 2025 may well be the ChatGPT moment for stablecoins, as Citigroup described, but technology alone cannot solve the confidence problem that I think we still face across this industry. We will remember the high-profile collapses, hacks, and scams. These cast long shadows, especially in the minds of regulators and the broader population. So this is why I think there are 3 pillars of trust that we need to establish and continue to strengthen. First, institutional trust. While blockchain was designed for disintermediation, in practice we still need trusted nodes, and these include banks, regulated fintechs, and custodians, who can validate, safeguard, and provide assurance. And therefore, instead of seeing each other as competitors, the TradFi, CryptoFi players can be seen as cooperators, cooperating and competing at the same time. The second pillar would be the regulatory trust. Now, as adoption increases, I think we can be sure that the regulators will pay a lot more attention as well, because protecting consumers and ensuring financial system stability are core mission to these regulators, especially central banks. And so compliance by design has to be a prime designing principle. The third pillar of trust is industry trust. Now, beyond regulation, we need shared standards for interoperability, verified digital identity, and therefore, stablecoins and digital assets cannot scale if each ecosystem is in silo. So here, purposeful data sharing is critical. Imagine if verified digital identities, transaction attestations, and risk flags can be shared in a secure manner between on-chain and off-chain actors. Now, this would mean that for the bad actors, it will be a lot more difficult, if not impossible, for them to commit AML or frauds or scams. And so, therefore, in terms of building confidence within individuals and institutions, purposeful data sharing is something important, and sharing data in a secure manner can be an anchor of trust going forward. So therefore, I believe that with these three pillars of trust, without which it will be very difficult for the industry to scale sustainably. So where does this leave us? The future of global payments will therefore be a hybrid between the TradFi and CryptoFi, so it's a Web 2.5 as per articulated earlier. And this means that we will need something that is multi-jurisdictional for on-off ramps, integrated with the traditional financial institutions such as the banks, fintechs, and also wallets, regulatory compliance embedded into smart contracts, programmable payments for trade finance and supply chains, and of course stable coins as the settlement medium of choice, because it is not only blockchain native but also backed by highly liquid and low risk assets. Now allow me to use what Metacom offers as an industry example to illustrate this. Metacom's StableX platform is our proprietary FX aggregator infrastructure that enables T+0 fiat and stablecoin conversions. Smart routing, AI-enabled smart routing, allows transactions or allows for cost and time efficiency, and also compliance by design. So StableX is our FX aggregator with AI empowered to it, and able at the point of transaction, smart routing chooses which rail is most cost and time efficient. Now, just as we demand high standards of KYC and transaction monitoring in the TradFi world, the same must also be demanded within the CryptoFi world, especially if we talk about building confidence and imbuing trust. And this is possible. So happy to share that for Metacom's Vision X, it is a risk monitoring tool that integrates multiple databases to produce risk ratings and actions. Now, driven by the StableX and Vision X dual engines, and also a suite of our payment services, we are able to empower our PSP and institutional clients to transact on-chain and off-chain safely and compliantly. So this one is to share with you as an industry example using our company's experience. Now, circling back, I believe that there is a case for an interoperable digital world to support the real-world economy. We need a shared digital fabric that links verified digital identities, interoperable payment rails, trusted data exchanges, and regulated tokenization platforms. Realizing this mapped digital fabric will require thoughtful policies and international G2G cooperation. These include harmonized digital identity standards, legal recognition of how we treat these tokens, and adopt technical and semantic standards so that payments, identities, and data flow across platforms and borders do not lose provenance. And of course, instituting strong cyber, operational, and consumer protections, as well as coordinating cross-border responses. At the same time, industry will also have to innovate responsibly, prioritize interoperability and compliance, and avoid siloed solutions. So mapping the digital world to the real economy is an agenda of national and international resilience, inclusive growth, and regional leadership. It is one that demands private and public partnership. And for Singapore and ASEAN, it is definitely an opportunity to turn fragmentation into a competitive advantage, likewise for elsewhere around the world. And therefore, we should be ambitious but disciplined, pilot boldly, regulate thoughtfully, and collaborate relentlessly. And so with that, I believe that the digital world must serve the real world, and we should therefore continue forth in a purposeful manner. Now with that, I just want to leave some possible factoids with you. If you are interested to learn more about our Vision X, how we integrate the multiple databases to ensure safe and secure compliant transactions, you can scan the QR code on screen and try our Vision X itself. We also have a research paper on KYT, something that we have plowed through a lot of data to come to. And some of the findings include, for example, it's not enough to just rely on one database, but at least an optimum number of 3 databases, and a lot more other findings that you can find within the paper. And then this is our white paper focusing on SMEs within ASEAN and how the current state of cross-border payments cost them a lot of opportunities as well as real capital costs as well, and how if we look towards a more stablecoin-enabled cross-border payment solution, how it can unlock opportunities for them. And so that's it. Thank you for giving me your time, and looking forward to learning more from everyone here. Thank you.
Thank you so much, Ms. Tim Pei Lin, for your wonderful introduction. Thank you. Please take your seat. So next, our discussion will focus on asset tokenization from real world to on-chain. Tokenization real-world assets is a crucial step in connecting traditional finance with Web3. And asset rights confirmation is one of the whole cornerstones of the whole process. So in this session, we will focus on how to achieve clear ownership definition at the legal, technical, and compliance levels when assets migrate from the real world to the chain. Discussing the main obstacles, rights confirmation solutions for different asset classes, and how to build a transparent and trustworthy new on-chain asset ecosystem. So now let's welcome our moderator, Mr. Benjamin Jai, CEO of RoboAI. 依家讓我哋掌聲有請主持人澤斌 RoboAI CEO。 现在让我们掌声有请 RoboAI CEO 翟斌先生，有请。Now let's welcome our speakers, Mr. Rocky Mui, partner of Clifford Chance。依家讓我哋掌聲有請發言嘉賓高偉新律師行合夥人梅家豪先生，掌聲有請。掌聲有請發言嘉賓高偉新律師行合夥人梅家豪先生。Now let's welcome Mr. Henry Zhang, founder and CEO of DigitFT。讓我哋掌聲有請 DigitFT 創始人兼 CEO 張之浩先生。有請 DigitFT 創始人兼 CEO 張之浩先生。Now let's welcome Mr. Robert Lui, Hong Kong Digital Asset Leader of Deloitte China。讓我哋掌聲有請德勤中國數字資產香港主管合夥人呂志宏先生。Now let's welcome Ms. Lily Z. Kin, Chief Operating Officer of Kobo。讓我哋掌聲有請 Kobo 首席運營官 Lily Z. Kin 女士。Now let's welcome Mr. Shan-Chin Yan, Head of Business Development APAC of Polygon Labs. Welcome to the stage.
Thank you very much. It's always good to see a full house, even already close to 5 p.m., right? And I guess our topic is a little bit technical and quite professional. So I like to start giving this because the RW terminology has been around for a few years, right? It's really stirred up a lot of excitement and a lot of passion among both the professionals in Web3 world as well as from the real world, right? So I like to start asking someone professional, give us a legal definition of RWA from the professional point of view.
Yeah, thanks. I think it's a interesting question. Now, legally, I wouldn't say there's an express definition of what RWA is from a legal perspective. It's a developing term. From a legal perspective, we see this refers to tokenizing a real-world asset. and what it could be depending on what we are tokenizing and what the token actually represents. Because there are a lot of possibilities, and it depends on the structure we will go into a little bit. But generally, it relates to tokenization of a right or a ownership from a legal perspective that is tagged to a real-world asset, whether it's actual property, real estate, for example, or it's income stream, or it's other tangible, intangible assets.
Sure. I guess since I'm from a real world, right? So I like to give a little bit more broadened concept of the RWA, right? But go back to the really the professional side of RWA concept. Let's start with the valuation, right? If you looked at how, because in different legal frameworks and different jurisdictions, there will be different ways of recognize the RWA. So tell us, how do you see this world, and what are the mainstream sort of alternatives, valuation method for the RWA? Maybe start from you.
Okay.
Sure. Either you, Rocky, or Rocky.
Because Rocky is a lawyer, and he would like to pass to me as an auditor.
Not qualified to advise on valuation yet.
I just ride on what Rocky mentioned about that. As we're talking about the RWA to tokenize of different kinds of assets, we have many different kinds of assets can be tokenized, right? So Rocky raised some examples, the cash flow, also some assets, maybe some IP, intellectual property right, many, many things. So talking about the valuations method or the auditor's view, the auditor's report from the valuer side, I think it is very critical because the issuers always would like to have a very high valuations, and of course, other than the issuers, the investors, they will see reading about the valuation report, and very importantly, when they choose whether they will invest on this RWA, the most important thing is that other than the legal terms, legal right, value, the valuation is very important. So to me, I think it's more compared to traditional methods. For example, that a lot of our guests would like to know what kind of valuation methodology we will use. I think if we go back to the traditional one, we use DCF, right? The discount cash flows, and sometimes we will use the market approach. For example, if there is any recent transactions of the access that is being completed in the market, and if it is, say, it is a cash flow stream, then we will, for the intellectual property right, we will look into about the discount cash flow. For example, the 3 years, the 5 years, the cash flow forecast of these assets or of these companies that we would like to tokenize the assets. So it's to make it more easy to understand is that for the traditional assets like the IPO, we're always talking about the not the on-chain, it's the traditional finance, the financial product. You acquire the shares, you buy the shares from the stock exchange, you subscribe to IPO shares. We have a methodologies, the valuation methodologies of all these assets. So I think we should back to this simple valuation model if we would like to attract the money from the traditional investors, because it is more easy for them to understand what kind of tokens they would like to subscribe in long run. But if the investors is not the traditional investor, maybe there is some, say, from the crypto side, we have the friends from the crypto, they may not relying on the traditional valuation method. Maybe there is some decentralized methods as well. So I think it's very important is that to make sure that what kind of the investors you choose and what kind of the assets you are tokens, and then we find a suitable way, appropriate method to do the valuations, and then we have the valuer or the auditors and some appropriate professional qualified person to have an endorse on the valuations so that your asset, your RWA, your token can have a better pricing in the market.
Thank you, Robert. And Qingyi, Robert gave us the more from a financial professional point of view, right? You are providing the infrastructure from the product and technology point of view. In your view, how do you do the valuation or pricing?
I definitely will take the experts' advice, right? So Rocky and Robert, I think they share very interesting points. I think at the current, stage of the development in the industries, there's more and more overlap between what we call the Web3 digital side of things, as well as the traditional finance. Going back to first principle around the value and the rights of the assets are definitely important for a lot of the partners that we work with. I think, likewise, when Robert mentioned a very interesting part, because if you look at the digital native, the Web3 native assets, indeed, there's a different mechanism, right? I wouldn't say that the methodology is different, but it is more of how we perceive and consume information. Because if you look at the digital asset prices, we rely on things such as oracles that can actually pull in information from, both legacy traditional sources, as well as, more of the higher velocity data that we see on the blockchain itself to create, a more comprehensive measurement of how we see some of these digital assets itself. And I think that's really depending on what are the class of asset they're going for, what type of rights and what type of investors they're dealing with. So obviously, there's no one straight answer for some of these partners that we deal with, but I think that's the beauty of blockchain itself, right? It gives you a lot more flexibility. It gives you a lot more access and opportunities to explore assets that is previously not accessible by the traditional mechanisms. Yeah.
If we go back to the regulatory, because especially over the last few days, you already see the FinTech week, right? Almost in all the conferences, we have so many speakers from the government, from regulators. So my next question is looking at this, how to bridge the regulation and also to balance with innovation. We have a guest from Singapore, with Henry also coming from a different background in America, in Great China, and a few guests from Hong Kong. Maybe Rocky, start from Hong Kong. So how do you see the regulators balancing the innovation versus the market growth versus the security and the regulation?
Yeah, I think just keeping in mind when we think about how the government and the regulators will formulate the policy and the regulatory regime, I think overall, other than the Web3 side, we ought to think about the TradFi, the traditional financial institution. And I think we are now at this stage where we want the merger of the two into one overall digital asset ecosystem. So you can see that from the government's policy paper. And with all the policy circulars announced recently, you see we are moving towards that direction. So we are, as the regulators always say, if it's same risk, same activities, same regulations, they're taking that principles. So obviously, it's always a tricky balance as to promoting innovation. What can we do under the sandbox? Can we try certain things more flexible, quicker, and then balance the risk? Now, it's not an easy question. We've seen a lot of different jurisdictions, which we'll hopefully to hear other speakers to work on. I just see there's no perfect solution on that, but I think we are, at least from a Hong Kong perspective, we do have that regime there. We have the clarification, we have the parameters, and I think it's an ongoing process, and I think it's in early sessions, I've also heard the speakers mention what's important is the regulators and the government to keep that dialogue going. And be agile and have a regime. Now, we have a regime, but we also want that to work for the industry as well. But it's an ongoing process, I think.
What's the Singaporean perspective? Maybe Lily or Qingyi?
Maybe I'll start with that first, because I just came from a panel at the Hong Kong FinTech Festival, and we were just discussing about this as well, and what's the balance between the regulators, the industry, as well as the stakeholders as well. I think one clear sign that we have seen from regulators in the region is that they are all very open to innovations. You have seen multiple cases of project initiative, like Project Ensemble, Project Guardian, as well as even the mention of, let's say, some of these sandboxes where people are applying licenses. I think that's definitely one step forward compared to where we see, let's say, 3 years ago or 5 years ago. You get to really have a safe environment for industry players to really come out to share ideas, which we do believe that sandboxes are, it's not perfect, but it's definitely one of the first steps to go forward in terms of incubating new products, because we definitely need the industry feedback. We are in a very nascent stage of the industry. There's more and more new products, new technologies, new methodologies coming on day-to-day basis. Without that interaction between the stakeholders, from the regulators to the industry players to the service provider, it's very hard for us to really tell what's possible and what's not possible. Obviously, we have to do it in a very safeguarded, real manner, because we wouldn't want to have that negative spill over to the rest of the industry. So I think that's what the regulators are obviously using this as a mechanism. And I think there's a lot more that we can do, maybe even testing some form of, I guess, restricted commercialization with test clients. I think the ideas are out there. It's really more for that two-way communication that we see in the industries. Yeah.
I think it's never the regulator's job to for innovation. So we cannot expect regulators to be aggressive for in terms of any new economy or what is considered a disruptive power for existing financial infrastructure. But I think in Hong Kong and Singapore, in both jurisdictions, regulators are very smart. They actually both start from institution side. So Project Guardian, Project Ensemble, and Project Bloom, they all start from institution to institution innovation, not from retail market. That's a smart move for both governments.
I guess you talk about the infrastructure, right, Lily? You are a Web3 infrastructure provider, right? Think about this. So from your point of view, now we are facing when the real world assets is coming into the Web3 world, we will need, and the regulators are expecting, a institutional grade of infrastructure. What do you think of this trend? The opportunities or challenges for you? Maybe Henry also?
I think I can think of at least 3 core infra layers for institutional investor to understand before they enter into RWA markets. So the bottom layer is the foundation layer. This is where you pick your blockchain environment. It's like you choose your chain, private chain or public chain, and is it EVM compatible chain you choose, or Solana, or even a layer 2 roll up, or even you can pick multi-chain environment. So it's the foundational layer. Then the middle layer, it's the tokenization layer. This is the layer where Cobon has been building for years. This is also the heavy lifting layer. You see 3 components from this layer. It includes custodial wallet infra. It also includes tokenization, the smart contract deployment and administration, as well as you will see the token life cycle management, which includes issuance, transfer, redemption, and ongoing servicing. So, and the top layer is the layer that talks to the real world. That's also the layer where lawyers, auditors, consultants, they step in to make sure the token representations, the ownership structure, legal structure are compliant and also enforceable in real world. And the structure itself has to be jurisdictional and transactionally meet regulatory standards. So for the bottom layer and the middle layer, they used to work they often we see them work very seamlessly because they are both Web3 infra. But like for Kobo, it's very easy for us to support both EVM compatible chain and the Solana chain. We can also even automate bridging and swap among multiple chains. But it's quite challenging to see the interaction between the middle layer and the top layer, because it's to ask a Web3 infra to serve traditional background investor could be messy. Because like for RWA industry, you will see most issuers are from TradFi background, because they are the parties that control the TradFi assets. But those investors are not used to managing digital asset wallets, not to mention managing their own private key. So they usually rely on a token registrar for the management or the control of their wallets. So it's impossible for them to master digital asset blockchain wallet. So at the same time, many native wallet infrastructure providers, they are too crypto native. So their products are not intuitive enough or abstract enough to provide online banking kind of user experience. So the challenge comes. So we see both sides have to make more steps towards each other. So for the infrastructure layer, they need to build more user-friendly infrastructure. And for the investor side, they need to learn and understand how the blockchain technology really works. And they really need to understand no private key, no ownership.
Sure, thank you. And Henry, you have been, in the first 25 years of your professional life, you were working, or 30 years, working for the very centralized financial institutions. Now you are building a decentralized financial platform, right? So how is this, both in terms of the infrastructure, in terms of the way of working, what are the biggest differences or changes?
Ben, your question is very important. Talk about infrastructure. Lily has explained in a very good way in the technical end-to-end and comprehensive architecture. Let me try to address in a different way. We're talking about RWA, basically token on-chain. It is about the blockchain, about the Web3. What is Web3? What is a Web3? And Web3 before that is a Web2, right? There's a Web1 or Web0. But now called a Web3. What's the difference, key difference about the Web3? Then link to all the infrastructure kind of things or regulation, blah, blah. You may have different ways to look at that. I just give one perspective. Is Web3 versus Web2. Web2 transfer information. Web3 transfer values. So Web3 is still internet, but you can transfer value. No matter it's money, called a stable coin or CBDC, is money on chain or token money, or asset token, which is no matter RWA, T-bills, or BTC, native asset tokens. They are tokens of value. So you can transfer the tokens, the value, without or with minimum intermediate rate. It's called the P2P. That's called the P2P. So decentralization is difficult to understand, but one point is decentralization is de-intermediation. Just reduce all the unnecessary intermediaries, so-called the direct. So that's the key thing about the Web3. Or you can call it DeFi, or called on-chain. So in this regard, this is something really worth us to have a lot of meetings, a lot of seminars, a lot of work to do it, because it's a fundamental change from transfer information to transfer value. So the whole infrastructure will be totally different. Will be totally different. That's also the reason why regulators paying so much attention to that, because this is not add another cross to the existing law. It is about the whole new legal infrastructure to support the technical infrastructure. So Web3 is transfer value. So in this regard, RWA is not simply bring some assets on chain, like a T-bills or real estate tokens. They're all right. It is about you can transfer values on chain.
That's a great point. Actually, you may have heard recently this protocol X402, right? This is something really, it's probably resonated very well exactly echo what you said. Creating value immediately and transfer value instead of a transformation and then create value, right? And then the follow-up question, maybe Henry, you can answer as well, because for a lot of the entrepreneurs or startup owners, when they heard of RWA, a lot of people got very excited because the expectation is RWA owners can create additional value, additional liquidity, right? Given this by integrating with Web3 blockchain and so on and so forth. So liquidity is something very much in people's mind. Right? So how do you see this? How can we, as the Web3 world practitioners, to support RWA asset owners to increase or maintain the liquidity on this? How do you, especially you are a platinum, you have a platform, right? So if people do not achieve additional liquidity, so then I think RWA as a concept is losing the charm.
Yeah, totally agree. I would say tokenization, right, brings things on chain. What the tokenization cannot change, or what the things tokenization can change. In other words, what the values you can create, what the values you cannot create, because tokenization is not one formula for all. So one thing, let me start with what tokenization cannot change. Tokenization cannot change the risk-return profile of the underlying assets. So T-bill is T-bill, 4% is 4%. With or without the tokenization, it is 4%. Real estate, all the other things are still the same thing. So this tokenization cannot change. But tokenization does change something. Because bringing things on chain is ownership, right? Beneficial ownership, legal ownership, or operational ownership. When bringing the things on chain, it does change the created values in terms of accessibility, we already mentioned in the panel. And it does change the composability and the interoperability. Then linked to this liquidity. Liquidity is a result. It's not the reason, it is a result. It's a consequence of this kind of value creations. Because you can access the asset, for example, Hong Kong Stock Exchange, Hong Kong stocks. Hong Kong stocks is very popularly accessible by Hong Kong investors, but how about the people in the US? And even where in Asia, are you easy to access to Japanese stocks? No.
No.
Right? These are all major markets, forget the smaller things. So once you change the accessibility, anytime, anywhere, and you can use the assets on different platforms. For example, you can pledge the Hong Kong stock with a US lender to get the money and invest into Bitcoin. And everything can happen in minutes or in seconds. So this kind of efficiency and capability bring together, it is liquidity. It is liquidity. Liquidity is not like it's so much money put in here you can redeem immediately. If the people, you have a portfolio, you want to trade Hong Kong stock, US stock, plus Japan stock, what do? You need to have 3 bank accounts. You need to have a Hong Kong dollar account, you need to have a US dollar account, and you need to have a Japanese yen account. And probably in 3 jurisdictions. If you want to sell Japan, buy US, time zone works because Japan just closed and the US not open. But technically you cannot because your money is in Japanese yen with a Japanese bank. You need to convert to dollars T+2 and then move to Hong Kong or move to Singapore or move to US, which allow you to trade in US dollars for the US stocks, maybe another 2 days. So this kind of things, if this so-called transfer value on Web3 can enable, tokenization can enable, it is liquidity.
Yeah, I think, so do you think in Hong Kong or Singapore, this RWA concept in the next few years, what will be your forecast on the RWA market? Assuming the regulatory hurdle has been already cleared.
I'll probably talk too much. I should just be short for this question. The answer is big and huge. The reason is because the pain point is so obvious. Even just ask the people in this room, right? We're talking about tokenization is only money market fund T-bills. But even that, how many people can buy T-bills now? Can you get the T-bills in 5 minutes? Can you sell T-bills in 5 minutes? No. So even this kind of a simple, boring products, the pain point is there. And once the can transfer the value on Web3, so the market is huge because it's a conversion story.
Yeah, sure. I guess also I want each panelist give us, I'm sure you have gone through a lot of pilot studies, some pilot project. I don't know if you can share 1 or 2 examples. What are the lessons can be learned when you help the early RW pilot go on chain or go to the Web3 world? If you guys have any specific examples, I don't know, Lily, Robert, Jianyi?
Yeah, maybe I can give a comment to that. But before that, just want to add a point to what Henry said, right? I think it's really looking at blockchain as a vehicle, as a new delivery mechanism, right? There's a lot of everything that we've done in the traditional financial world can technically be done on blockchain. And in fact, we're doing it a bit more efficient, a bit faster, a bit cheaper. That's kind of the intention and ideal model that we're looking at in blockchain. And drawing that reference and answering the questions that were shared regarding looking at pilots, I think Project Guardian, Project Ensemble actually set a lot of interesting observations. I think one of the big themes that everyone recognizes is how do we address interoperability? Because even right now in this industry, there's multiple protocols that's inventing their new technologies. There's multiple different standards that's being driven from a different, jurisdiction exposure. It can be also based on the asset class. How do we kind of reach a form of maybe standardization between assets such that one asset that's sitting on platform A, it's similarly recognized and valued on platform B? Because that's kind of how you build that world economic system, right? Being able to align that value transfer between A to B is kind of the important way to really create real value. Yeah.
We do have several completed RWA projects and also some in our pipeline. The underlying assets are diversified from mobility account receivables, mobility car account receivables, to mining income from mining fields, to private credit. And the lessons we see from those, these projects, some are POC projects, just to prove a concept. Some are real projects. And from those projects, our lessons are the market and the investor response to RWA projects are not only positive, but extremely positive. So I think the lessons are you have to get ahead on RWA projects. So those already left behind or missing out have to catch up, because RWA assets is actually considered the bridge assets between the old economy and the new economy. So you have to catch up, even if it's just a test, it's just a POC project. So, but also to getting to the market without any structure is also risky. So from our experiences, we could see if you want to scale a POC project to a real project, you have to work on several things. Regulatory clarity, of course, and on-off ramp, smooth process for on-off ramp. You cannot expect your investor to come in without a smooth way to exit. And also custody that can provide the programmability, that can support multi-chain deployment. So you could have different funding source on different users for different chains. Also, I think I agree with Henry to the largest extent that you have to find your partners that can provide you with a liquidity channel. So technology itself cannot bring you users. You still need to find your market product fit, just like any other commercial products. So, but now I think it's really the time to move to IPO day.
Robert.
So what our speakers mentioned is about the liquidity of the RWA. I think back to normal usage, the most important thing is that in a more macro view is that whether we consider that RWA can increase the GDP, whether they can enhance our market, like the capital market efficiency. What we are talking about is doing some fundraising in the market. Because I did a lot of the IPO in the past. And the IPO markets now is very hot, we know that. But of course, there is some companies or even some of the assets or some shares can be tokenized, and then we use RWA to do some fundraising activities. I just using an example recently that I have an experience is that we are talking about some intellectual property right, the IP, for some biotech companies. Maybe they are not fulfill the requirements in the Chapter 18A in the stock exchange, and they are considered whether using the RWA to tokenize because the backup asset is the IP. Of course, we have to do some valuations. Of course, we know that if we can tokenize all this IP in a portfolio, not an individual IP, the R&D projects, the developments, the research projects should be accelerated by the companies because they have more money to do more R&D, the research of the whole for the companies to develop. Of course, on the other hand, is that the investors are willing to do that because of they have, in long run, if we fix all the regulatory framework, like in Hong Kong, the SFC or the VATP licenses, they're fine to let the tokens, the RWA to be licensed in the VATP. I think we can enhance the liquidity. Of course, we are talking about that if we, for the liquidity of the RWA, the very important is that whether we will consider any market maker here to enhance in long run, not only the liquidity, but of course, the value, to maintain the transactions of value. This is very important in the prelim stage. And whether we have any signature program, signature RWA being launched in Hong Kong, in whatever jurisdictions. So I think in conclusion is that not only the liquidity, we should consider that whether the whole RWA, if we can increase the GDP, then we must go ahead. We must think a way to solve the problem, the tech problem, the regulatory issues, all of the other jurisdictions regulators are facing. We can have a more internationalized standards to let the issuers know that how they can launch their tokens to the different exchange.
Thank you. So let me also chip in with our own case study for Robot AI. So our company actually was funded like 12, 13 years ago. We started as an EV company. And then luckily 3 years ago, we got an investment from the Middle East, and we went public in NASDAQ as first and only so far the hardcore sort of hardware technology company that ever listed in NASDAQ from UAE. However, over the last couple of years, you see the EV market is getting so competitive. The margin basically is zero or negative. And we, as a UAE company, we cannot compete with the top leading players from China, from the US. And to some extent, over the last couple of years, we were struggling a little bit. But suddenly, over the last, especially when Donald Trump coming back for the second term, when he from an EV company to a smart car company, to a robot car company, to a robotic company, to a eVTOL company. So suddenly, after we accumulated so many hardware or smart device portfolio, and there's a possibility that we can put them on chain. So a few months ago, we invested in this blockchain company called Acron. We invested with our stock, and on that day, the capital market reacted very positively to us. So for us, that's why we are embracing the RW world, the Web3 world, from a very traditional point of view. I guess this could be I know this RWA, as Rocky defined, was very technical, it was very, very tight. But if you looked at RWA from a real broad point of view. I think there's a lot of possibilities. Even people sitting here, especially from the real world, right, can be an interesting concept. So I guess we have 3 minutes left. Maybe lastly, each one of you maybe offer one or two, just one sentence of suggestion or advice for both the Web3 world who wants to embrace the real world people, or the real world people wants to enter your world. Maybe. Rocky,
I just one point I want to remind everyone, just follow up on Henry's point. When we look at what tokenization can and cannot achieve, what it can achieve, it also have a different perspective as to what we can achieve on top of that. So, for example, if it's just the efficiency point, it enables a lot of things. So even if it's as simple as, okay, we're more efficient money market fund settlement, for example, that allows that to go into the repo, the collateral arrangements, and which is what our firm is actually helping in Europe to standardize the intraday repo arrangement or secure arrangement on money market funds. So you can do like intraday for 6 hours, and then you can do a turnaround. So that it's possible when we have the tokenization achieved. But we do need the products, we need the first layer to be available, and then we can talk about that upgrade for the benefits of all of us.
Sure, thank you. Henry?
I would say just be prepared for the totally new infrastructure to transfer your values using internet. Just like you're sending emails now, you will be sending your assets and getting assets like you are receiving and sending your emails. It's a new era just started, and be prepared for it. It will come quicker than you thought.
So the most important thing is that to integrate the traditional products to the
home market product fit. That's the key to Web3.
There's no shortcut.
Yeah, maybe for me, more from that Web3 native perspective, because of how decentralized open source is kind of key principles. To us, it's all about innovations. I think there's a lot of industry leaders and partners here that are more than happy to really help to support, to really explore this world together. So to us, is try and obviously work with the partners. I think there is a lot of room for opportunities for everyone.
Okay, thank you so much. Thank you for staying. Thank you. Thank you.
Thank you so much. Let's take a group photo together. Thank you so much. Thank you for your impressive sharing. Please take your seat. Thank you. And now we will proceed to our 6th panel discussion of today. The topic is Gray Rhino or Systematic Failure, Unpacking Cryptos. So on October 11th, 2025, the digital asset market faced a historic multi-billion-dollar liquidation, prompting a key question: was this a Gray Rhino event, an anticipated breakdown caused by factors like excessive leverage and platform fragility, or a sign of deeper systematic failure? So in this session, we will take a closer look at the Friday flash crash, examining its root causes, key lessons learned, and the measures needed to build a more resilient and sustainable market for the future. Now, let's welcome our moderator, Mr. Colin Wu, founder of Wu Blockchain. 依家讓我哋掌聲有請主持人吳雪區塊鏈創始人 Colin Wu 先生。让我们掌声有请吴说区块链创始人 Colin Wu 先生来到舞台上，掌声有请。And now let's welcome our speakers, Mr. Calvin Cui, Executive Director and Chief Executive Officer of OSL Group。有請發言嘉賓 OSL 集團執行董事兼首席執行官崔松先生。 有請 OSL 集團執行董事兼首席執行官崔松先生。 Now let's welcome Mr. Patrick Pan, Senior Advisor to the Chairperson of China Renaissance。掌聲有請華興資本董事長高級顧問潘志勇先生。掌聲有請華興資本董事長高級顧問潘志勇先生。Now let's welcome Mr. Li Biu Wang, Executive Director and Chief Executive Officer of Synerhope。掌聲有請新火科技執行董事兼首席執行官翁曉琪先生。掌聲有請新火科技執行董事兼首席執行官翁曉琪先生。
OK， 大家好，欢迎来到我们今天这个最后的 panel。然后，在场的3位也都是行业经验丰富的老兵了，然后给大家来分享一些最近的，关于热点啊，以及他们所身处的一些业务的观点啊，相信也能给大家带来一些比较有用的见地吧。啊，第一个问题就是可以请各位分享一下，因为现在啊，其实市场也到一个。某种程度的这种很多人认为的预期的转折点，包括像昨天Allianz DAO 的联合创始人认为，他身边的绝大多数的交易员和机构都开始看空，啊，然后当然尤其这个过去的12个小时，这个行情也出现了一定的跌幅，啊，甚至有人说这个是不是我们这一开会啊就开始下跌是吧？对，就是不知道各位这个嘉宾你们。包括你们机构的研判啊，认为现在行业是不是到了一个，不管说是牛转熊啊，还是有一定概率的这种转折点，还是认为只可能是一个短暂的这样的一个中间的短暂的一个下跌的状态吧，后面可能还会回到牛市继续的轨道中啊，因为我们看到可能比如英伟达呀或者美股啊，它其实也在继续的创新高啊。行，要不我们继续就从这边开始。
这场我们说中文是吧？
对，说中文吧。
终于可以说中文了。最近这个，首先先声明，不是 financial advice。其实我这个个人啊，就交易合约已经不交易很多年了，所以还是如果是杠杆的产品的话，我觉得大家还是要注意安全啊。就我们之前有一句话叫。这个珍惜生命，远离合约。对市场来看的话，我个人还是认为说，从长势来看，啊，我觉得这个市场并没有从牛转熊的迹象，啊，如果 BTC 如果跌到10万以下的话，那我个人认为纯个人意见就是还是买入的机会，对，因为成长大势并没有发生什么变化，我个人认为。
谢谢。我对这个市场，因为我觉得这个市场有非常大的变化，尤其是这一轮的周期。大家知道，这个比特币基本上就是说，整个市场基本上是按照比特币的周期在走。一般来讲，每4年一个周期。之前我们讲这个，叫1牛3熊，有4年里面1年是牛市，3年是熊市。但我觉得这个周期可能不太一样。这个周期的话，因为有整个 Trump 的政策，大家也知道 ，Genius Act 以及其他这些政策，所以我总体的判断应该是。相对来讲比较平衡的一个4年，也就是说不会是1牛3熊，应该是这个2牛2熊。那现在的话，我觉得我们在牛市的中场，我们在牛市的一个中场阶段。这个中场阶段的话，既不是最高点，也不是最低点。那这个时候的话，我觉得这个对整个市场来看的话，大家都会更加谨慎一点。核心的话就是说，尽可能不要去追高了。然后如果市场有回调的话，我觉得反而是一个非常好的一个机会。这是我现在对这个市场的一个判断。
OK，对我们看法还挺一致的啊，就是肯定不是这个牛市已经全面结束，然后进入到熊市的状态啊。那更多的可能是一个快速的上涨之后，需要这个市场需要停下来，需要在一个合适的位置震荡清洗啊。那么因为我们从宏观上可以看出来，就是稳定币的这个总数量还在不断的增长。那么其他的像国家主权基金啊，包括上市公司啊，包括一些主流机构都还在买。那么包括这个美联储的降息啊，是在持续进行中的。那么为什么所以我们看宏观面其实并没有那么差，包括美股、包括黄金、包括其他资产啊。那么 crypto 还是自身出了一些问题 那么一方面呢是在过去上一轮的这个比较大的动荡中，然后其实上涨的还是太快了啊。我们看以太坊从1000多，那么连续上涨到5000啊，接近5000。那么这样的连续上涨势必会让一部分早期筹码价格低的这个玩家要出清啊，要把这个获利给落袋为安，这是一个必然的事情啊，没有永远上涨的一个市场。那另外一个呢，就是说本身行业因为1011啊，大家知道前段时间的一个暴力的一个暴跌，那么这个带来的一个特别大的影响呢，是行业中总的这个包仓金额大概在4000亿美金啊，这也就是说一大批的中坚力量啊，特别是机构团灭了，那么一下就把整个市场的流动性打薄了。那么接着又出现了一系列的事情，包括这2天的这个 balancer 被盗啊，今天还有 stream 也出了问题，就行业自己本身出了一系列的这个影响这个整个行业长期健康发展的一些事件，那么让很多的犹豫的筹码变得更加犹豫啊。那同时呢，还有一个比较重要的一个因素呢是我们在连续的事件中可以深切地感受到啊，包括很多网友都扒出来了，链上有很多的巨鲸，很明显是政治力量背后的老鼠仓啊。那么它会让很多的聪明钱本来要进入这个行业的很多人认为说完了，就是我们可能就成了这个政治人物的尿壶啊，就他随时可能这个推动一个扭转现在盘面的力量，然后让你打得血本无归啊。那么这些信心的变化都会让行业带来很大的影响啊。但是我们从数据上来看呢，就是这2天的这个恐慌贪婪指数跌到了20几，那么一般这么低的位置，也就意味着行业已经这个超卖啊，或者说过度恐慌。那么很多的这个聪明钱呢，可能又是遇到了一个像刚才 Patrick 讲的一个比较好的一个建仓的时机。所以有时候恐惧即贪婪，贪婪即恐慌啊，就是我们不要在这个因为我们从业很长时间了，我跟 Colin 很多年，那么像这样的情况见怪不怪啊，已经见过太多，比这个极端的比比皆是啊。但是呢，市场在1011这样的事情，包括最近连续的事情，它一定回血上需要一些时间，没有这么肯定是需要在反复去找一个阶段性的一个中继点，那么才有后面的这个机会啊。但是呢，就是回到刚才 Patrick 讲的，就是这不是一个就是意味着这个牛熊转折了。那么甚至就是未来是不是还有牛跟熊都很难讲啊，因为过去的牛跟熊4年一个周期，本质上还是比特币减半带来的，就是比特币每4年它的产量减半，给行业的供给跟需求平衡带来一个很大的颠覆性的打破。那么现在4年的这个周期越来越不明显，因为4年减半对市场的影响越来越小。那么包括就是说来自于传统的力量啊，它的注入的这个新的买盘跟新的这个卖盘，这个力量可能更加成为主流啊，所以周期可能会打破。牛熊的这个特征可能会打破，然后因素可能会更复杂啊。但 again 就是我们还是觉得目前不是一个就是后市很悲观的一个状态。OK。
好呀，谢谢3位嘉宾的分享。对，然后我们讨论的第2个问题呢，就是我们刚才讨论了大家比较关心的这个牛熊转折的问题。第2个问题，我们来讨论一下现在也是比较热门的这个 DAT 的问题。对，我们看这个每个周一啊，这个 Tom Lee 的这个 Bitmine 还在疯狂的买，但是以太坊的价格却在这个持续的跌，是吧？这个Bitmine 能不能成为下一个这个微策略，大家其实也是很期待的，对，啊。然后在座的3位老板，你们自己的公司啊、业务啊，其实也都非常深入的参与到了这个整个 DAT 的业务中，啊。但是呢，关于这块最近其实市场呢也有很多关于它的讨论吧，包括监管机构可能也有一些不同的反馈啊，甚至汤姆利自己说，可能他认为什么这个 DAT 已经到了这个崩溃时刻啊，就是当然他的说话一直都比较耸人听闻了啊，就是你们自己怎么看目前这个 DAT 它经过一个相对来说比较狂野的发展，来到了这样的一个阶段，那么它后面呢还有很丰富的机会，还是说它已经也来到了一个需要优胜劣汰的一个状态，或者说这样的一个时刻啊？ 要不还是这个，行啊，那要不从 Liver 开始吧，啊，从那边转过来。
OK， DAT 呢，应该来讲，就我们看任何一个事情都要这个分成2个部分来看啊。那么 DAT 它很明显在上一个阶段里面是一个被过度吹捧的一个新鲜事物啊。那么也是因为被过度吹捧，然后呢行情遇冷之后呢，大家看到了很多这个过去热钱清算这么一个情况，所以大家产生了刚才主持人这个疑问。但我们从它的本质上来看呢，它还是一个很重要的一个行业的帕累托改进啊。那么怎么说呢？就是最早的时候，我们知道13年到17、18年这个周期，大家都是你要买币，你得去交易所去买啊。那么交易所是主要的一个购买通道，但这个通道呢还是门槛特别高啊。我们当时很多这个人要相信这个平台，甚至有些还要翻墙。然后呢，可能资金进场也很困难啊，没有好的这个法币出入境通道。那么再到这2年的 ETF 啊，其实 ETF 扮演了一个就是传统资本更容易进场的一个工具，但依然有很多基金呢认为 ETF 就是不在它的这个基金的这个可交易的范围内啊，但大量的这个基金啊，包括主流的这个老钱它本来就已经在股票市场里面，那么买股啊。来替代买币啊，或者说扮演一个轻量化的一个买币通道，这个其实是一个就是对于传统的人群跟传统的钱能够更好进行业的一个通道啊，所以那个肖峰总有句话说，那个ETF 很好 ，DAT 更好啊，他去扮演了这么一个角色特别是这个微策略啊等等，他们还证明了它的价值啊。那么但是目前这个情况，我认为可能会。是一个很好的一个验证 DAT， 就是 DAT 的 upside 我们看到了，在行情特别好的时候，很多的 DAT 的 MNAV 可以达到好几倍、2倍、3倍啊，它有一个很好的溢价。那么在行情下行的时候呢，其实我们更多在观察什么呢？观察 DAT 它的 downside 在哪里？啊，我们来一起验证一下 DAT 它会不会崩盘。如果 DAT 撑过了这次的回调，啊，那么我们可以预计的是，在下一次起来的浪潮中，它依然会有很好的一个正溢价，啊，这也是它验证它自己的商业模式的一个非常好的一个机会。那么从这2天的情况来看，我们可以观察一下今天到明天的数据，就是那个几个头部的 DAT， 它的 MNAV 会不会远远低于1，会不会脱毛？如果没有，那 DAT 这个商业模式在行业中就算正式立住了，啊，我认为它长期还会有很好的机会啊。那么，但是呢，可能会对于那些就是只是过来参与一把，然后它的规模很小，流动性也很差，然后只是这个过来要割下韭菜，或者说要通过一次快速参与，然后去达到一个这个快速挣钱的目的。那么这些就是偏中腰尾部以下的这些 DAT， 它就未必有这样的生存的机会啊。所以就是说 DAT 是好东西，那么大家要参与的话，一定要参与头部的 DAT 啊。对 ，OK。
我也简单分享一下我对 DAT 的看法，因为我觉得 DAT 是非常重要的一个产品形式。在这种形式上，就相对于其他的直接持币，比方我们直接买币或者买 ETF 来看的话 ，DAT 应该是更加有创新的一种形式吧。但 DAT 整个发展呢，现在看呢，确实碰到一些挑战。最大的挑战就是刚才 Liver 讲的 ，MNAV 会不会低于1啊？这是一个非常非常值得大家去思考这个问题。就当一个公司的市值低于它的净值的时候，这个时候 DAT 的意义究竟在哪里？但其实我觉得我们仔细去分析一下，发现呢，其实首先来看的话 ，DAT 的 MNAV 它不可能长期特别高。比方说长期如果它高于2或者高于3啊，我觉得在这个情况下是不太可能的。所以呢，长期来看，随着时间周期越长，随着持币量越大 ，DAT 的 MNAV 一定会回归到相对来说有一定溢价、有一定合理溢价。但是不会特别高的溢价的这个水平，那这个合理溢价是多少呢？我个人认为在30%到50%差不多。所以我们也看MicroStrategy， 看微策略，它的这个溢价，如果它能够持续去保持这个溢价呢，我觉得就基本上证明这个行业呢肯定是存在的。这是第一个。第二个呢，就 DAT， 我们看它整个发展，它其实也经过了几个阶段。第一个呢，MicroStrategy 我觉得可能算 1.0 吧。所以 1.0 就是 MicroStrategy 整个 DAT 公司就相当于一个基金。非常简单，没有几个人，也没有啥主营业务，要干的事情，唯一的要干的事情就是买币，再买币，然后呢，在别人都不买的时候，他还要买， 这样的话它变得 super bullish， 这样的话对很多基金、对很多机构投资人来看，他们考虑的是一个问题，就是他并不需要你帮我做 downside， 只要你 super bullish， 对他来讲这就是一个非常好的一个对冲工具。但这种情况呢，一旦行情转变的时候，我们看到它跌的会远远快于这个行情。比特币跌20%，它可能跌40%或者更多。所以呢，接下来就来到了 DAT 2.0 时代。DAT 2.0，我们觉得这个至少我的看法，我觉得像 Tom Lee 就是像这几家 Solana、Ethereum 这种 L1 为基础的 DAT， 我们可以把它视为2.0，因为它有最大的一个 features 跟 1.0 不同，它有 staking， 有 yield， 有 passive income， 这个是跟其他的这个就至少跟比特币的这些呢有非常大的差异。它产生的这个 yield passive income， 一般来讲是足够 cover 它的 operational expenses， 以及包括这个 legal cost 和这个 audit cost， 所以这个公司不需要额外的去出售它的股票，它就能够维持它的公司的正常运营。所以我们看到这个Tom Lee 他们会至少在上半年，他们在整个美股在 Nasdaq 都是现象级的融资，非常的成功。但是呢，就是说我们当然看到为什么它的 MNAV 也会持续的下滑，甚至低于1呢？我觉得更多是一个策略，阻止后来人进入，这是2.0。那在我们看来的话 ，DAT 还有没有更加就是这个2.0，现在市场也在挑战啊，你有 yield， 有 passive income， 究竟算不算一个合格的上市公司？这个公司就是投资人机构投资人为什么要买你这个公司的股票？其实呢，在这个基础之上，我们觉得有一个2.0 plus， 就是这公司在有了 passive income、有了 yield、有了 staking 之后，还是需要有多一些东西。这公司不能，否则的话它就变成一个基金了。那为什么我们不用一个基金的方式去承载这个产品呢？比方说，大家也知道，Ethereum 的 staking 的功能也会逐步实现。如果 Ethereum 的 staking，Ethereum ETF 的 staking 实现了之后，这个 DAT 它的挑战会不会更大？所以呢，我觉得 DAT 还需要3.0或者是2.0 plus， 就需要在 yield、staking 这种 passive income 之后呢，还要有一些新的一些收入的一些模型。这也是我们一直在探索的。所以呢，总体来讲，我对 DAT 的话，我觉得现在进入一个调整阶段，非常同意Livio 说的这个观点。一定是头部才能存活，因为确实是这样。第二呢，就是说，头部我们要存活的话，我们还得有一些这个新的一些商业模式。如果简单的只是买币加上做 staking 这可能市场觉得还是不够。那样的话，市场可能把你会回归到只有10%到30%的溢价，就相对于这个直接的持币的这个 NAV 这个净值来看，那这样的话对一个公司来讲，肯定还是远远不够的。当然，我觉得这个点可能大家也都一直在探索，所以这是我的观点。
对 ，DAT 我是一种创新的金融工具。那其实，相比较的话，就是以 crypto 为底层资产的 ETF 的话，其实 DAT 提供了更多的主动管理的灵活性，包括从这个融资从包括运营就提供了这种灵活性。那这种认为它在整个 stock market 上是有特别的一种需求在哪就包括有各种各样的那个限制或者是政策的阻碍导致很多企业或者是很多的基金它其实无法去直接持有币，或者是更安全的去持有币。所以呢，我觉得这个是创新出来肯定在这个市场上会有相关的这个市场存在。那同时它是一种金融工具，我觉得所有的金融工具其实都有两面性。就是看一个是运营的好不好，第二就是你如果要投资 DAT 的话，那就是你投资它是两方面你看的是哪一方面？对。那另外呢，我觉得底层不变的一点是说，不同的 DAT 最后它是一家购买某种 crypto 资产的公司。那你购买的什么资产，运营的是什么资产就会非常非常的重要这个有的波动性非常大，有的呢每个虽然都是 crypto 都叫币都叫 token， 但是他们的经济模型和它的运营模式往往有非常大的区别，这也是投资人应该是去关注的同样我同意那个前面 Patrick 和 Livio 说的第二点，就是 凡事到最后都是2·8效应。那最后，可能真正能规模做到非常大的，能吸引到更多投资人，一定是那些运营的非常好，且同时是运营的非常正规，投资的资产是好的那些 DAT 的公司。那往往可能不会有太多家。对，就像之前可能在市场上还有一些骗子，对吧？也有骗子的发生。包括那我们可能，我觉得将来会看到的是，如果像这种 DAT 的公司，它的人运营，包括它的托管，包括它整体的这个运营的模式会变得更加透明，可能会是未来的一个发展方向。
好的，谢谢3位。对，然后我们最后一个讨论的话题呢，就是关于这个最近这个相关的政策相关的一个话题。在过去的这个半年以来呢，香港和内地、中国内地的这个政策都出现了一个比较大的一个变化。其实应该说，香港其实是比较稳定的，它其实我理解是一直循序渐进，根据它的每一年制定的规划，每一年的陆续的出台，包括昨天也有一个新的这样的一个规定或者解释出台又做了一些新的这样的放松但是中国内地呢，其实过去的6个月可能出现了一些有点冰火两重天的状态，而这种冰火两重天，它某种程度也影响到了香港这边整体的环境一度其实包括我个人的感受就是当时一度几乎好像内地所有的国企跟香港所有的银行都开始设立这种稳定币的小组，在研究，在申牌，在甚至在招人，在合作热度空前然后一夕之间呢这个监管机构可能给每一家都打了招呼以后这个事情就瞬间的戛然而止了，甚至可能目前来说进入了一个物极必反的状态大家甚至都不再敢谈及这件事情但是我觉得另外一方面，香港就是包括诸位也都是香港的公司香港这边的整体的政策的走向包括它的法律法规的出台还是比较稳健，而且比较扎实的虽然当然也有一些人认为可能步伐还不够快所以就是下一个问题就是可以请各位聊一聊这个你们怎么看过去这一段时间的这样的一个政策的变化，以及对未来半年或者1年这样，不管是香港还是中国内地可能的一些政策的走向然后要不这次我们就先从这个 Kevin 这边开始。
对内地的政策，我觉得可能不太能多评价吧。但我觉得从香港的这个整体政策来看，我觉得虽然包括上午整体我们香港的政策可能不是最激进的，但我们看到的一个好的方向是，香港的政策正在变得越来越开放，也越来越开始能够主动的去接受跟国际的一些好的变化和一些联系。这个特别对我们在香港的从业公司是乐于见到的，因为我们提供的基于香港以及海外的服务，将来我们可以通过包括昨天的整个流动性的共享订单部的流动性的这样的政策出来以后，我相信可以为香港的所有的客户或者是用户提供更好的流动性。那我觉得这个整个对香港的金融市场是一件非常好的事情。那倒过来看的话，我觉得香港毕竟是全世界的第三大的金融市场。对，那我们也不能说香港的市场香港的监管会走的一定是非常非常激进，但至少每一年我们都能看到一些好的变化，这个是我们还是乐于见到
的。我觉得这个接下来的这个政策的研判呢，总体来讲，我觉得中央政府把这个香港定为，就至少在香港，首先呢能够发 VATP 的牌照，然后到今年的话又开始了去年就开始做这个 stable coins 的试点，然后今年呢可能稍晚会公布这个 stable coins 首批的这个名单，然后到明年的话，大家也在预期之中，也会拿到比方说 VAOTC 的牌照，所以我觉得整个的发牌的推进呢，应该是说明至少中央政府是认可香港作为一个整个中国整个大中国，甚至是整个华人或整个是相当于全球的最重要的一个crypto 的一个政策高地，或是一个政策高地的这个定位应该是没有变的。这首先这第一个。第二呢，我觉得这个 当然就是说，在稳定币的政策，包括 RWA 的政策，原来很多这个央企、国企，包括银行，以及包括很多互联网公司都参与了这个 stable coins， 以及包括 RWA 的一些申请，包括一些案例的一些研判。我觉得这都是非常好的。当然呢，中央就有中央的这个政策，我觉得这个短期内，然后我们这个香港把这个政策做一个收紧，然后呢更加聚焦于在香港的一些企业能够快速的为整个 stable coins 打开局面，特别是试运行呢提供一些比较好的一些用力。那我觉得这个方向呢也是基本上不会有变化的。就总体来看呢，就是说我觉得应该就我刚刚说的，就是说第一呢就是香港的定位在整个中央的大的政策的这个定位是没有改变的。第二呢就是说整个香港围绕整个加密生态缓缓推进的整个做法也不会有改变。那中国大陆的话，我觉得不太好研判，因为我觉得短期内的话，我觉得还不会是说对 crypto 持一个开放的一个态度。但我觉得香港对我们来讲，所有从事这个行业的人，包括这个所有这个金融行业无论是通过 RWA 还是通过各种 tokenization 的方式进行转化的人，香港始终是一个最好的一个地方，可以去开展相关的这个 crypto 的业务。
对，我觉得今年确实经历了非常罕见的反转啊，就从极度的中央政府极度的这个pro 啊到开始控制。那么这个类似的情况，其实在当年17年也发生过啊。一开始是要发牌的啊，
传闻那个时候说要给什么 OK 火币发牌。
对，然后后来发现发生了一系列事情，发现还是这个新鲜事物还是看不懂啊，有很多伴随的风险。那么因为大陆的这个国情太复杂，就是它举个例子，就是在今年年中的时候，然后大家开始在讨论稳定币的时候，那个热度非常高。那么很多金融机构也跃跃欲试要进场，但是我们发现有另外一类人群更加活跃啊，就是那些活跃在各个地方的传销组织啊，开始打着国家支持啊，我发一个币比比特币还要厉害，请你们一定要来买，一定会涨100倍万倍啊。那么会国家一定是看到了这样的，就是有金融的不法从业者开始包装用 crypto 的概念啊，让很多新的人群误以为那个是真正的 crypto， 从而上当啊，已经发现了有很多这样的迹象，所以不得已叫停了啊。其实从17年9·4来看呢，就是其实国家很多的这个高级政府官员是否认同比特币跟以太坊是不好说的啊，但是呢，他们控制的是像17年的那个像 ICO 的那一轮啊，有几千几万个团队开始包装，用一个简单的 PPT 就能骗很多钱，这种金融乱象啊，就像当年的 P2P 一样啊，这个一个新鲜事物出来之后呢，因为国情复杂，然后人的这个受教程度这个水平不一，所以会导致很多金融乱象的延伸啊，所以为什么国家要开放香港来做试验田，这里面还是有这个综合的各种的考量在里面啊。那么我们回到香港，香港就是说，在过去从发布政策宣言，就22年到25年啊，其实是刚经历了3年啊。就是我们从行业的观察来看呢，在过去3年里面，其实是一个摸着石头过河啊。但是在今年以来，我们觉得这个石头可能摸差不多了啊。这个特别是最近啊，就是几个重大的措施，比如说开放那个7号牌交易所可以不用受到那个12个月的那个限制啊，包括可以连通全球的这个流动性啊，包括前段时间率先全球批出来的这个 Solana 的这个 staking 的 ETF 啊，其实这都是向行业去表达一个态度，就是香港的这个监管，香港的这个在行业的这个开放可能会加速。啊，这个其实也侧面的证明了，就是说，监管从过去的，因为我们知道一个新兴的行业，对于监管来讲其实也很难的，它特别是对于这种发展很快的 Web3 行业，就是它的风险，包括过去行业已经这么多年，已经很多这个风险事故发生了，那么没有一个监管不头疼的啊。其实我们这个接触过像日本的啊、新加坡的、像香港啊。就美国的监管都很头疼啊，到底我这么管会出问题还是会怎么着啊？所以我们看， 虽然过去大家有点诟病说香港慢啊，包括就是这几个举措都是我当年在 HKT 做 CEO 的时候去倡导的啊，但好歹是落地了啊，就是摸着石头好歹过河了啊。然后我们最近呢，星火也给SFC 提了几个新的 proposal。我们发现这个反馈的积极性，包括批复的这个效率有了明显的改变啊，就是这个都意味着，就是过去3年呢，监管从0到1摸着石头过河，到现在为止已经建立了监管自信啊，就过去3年，通过他这套方法管下来，并没有出现什么重大的问题，这是第一个，就是我没出事儿，那么我就可以然后第二个呢，他知道了哪些地方有风险，哪些地方其实也没啥风险啊，那么不如大家这个大刀阔斧，再开放一点，再去试一试，啊，所以我个人跟前面2位的嘉宾的观点一样，就是我们会预计到接下来3年，啊，如果说前面3年就跟一个小孩咕咕落地，到这个开始这个牙牙学语，到开始走路，那么接下来3年，人到3岁要干嘛呢？上学了呀，上幼儿园了啊，就是我觉得香港的整个这个发展啊，特别是在监管推动下，整个行业发展会越来越快。
好的，谢谢大家，咱们时间也到了，对，然后也非常欢迎大家来参与我们这次的活动，也希望大家一起能够把这个不管是香港还是华语的 Web3 的整个行业跟社区能够做得越来越好。好，谢谢大家。
好的，谢谢我们台上4位重磅嘉宾为我们带来的分享。那这是我们活动的尾声了，所以我们也邀请我们台上4位嘉宾稍后可以和我们全场的我们的观众朋友们，大家可以往前坐一坐，我们来一张自拍照哈。现场的各位观众朋友们，大家可以往前坐一坐，我们稍后拿手机来一张自拍照。好，那今天呢也是非常感谢我们4位嘉宾。好，我们一起来一张自拍照好吗？我们用手机的前置镜头。好，我们现场的嘉宾们，大家可以往前来一点点。好，然后争取能够我们摄影师还有我手中的手机都能拍到大家。好，那我们先来一张 selfie 好不好？先来一张 selfie 啊，比较可爱的 selfie， 来3、2、1，耶！好，我们看向摄影师，来一张。哦，好，我们再来一张自拍照啊。好，请大家看向我们的手机，来3、2、1。哇哦，好的，好，摆拍一张好，那4位来拍吧。好，我们台下的嘉宾继续看向我们的摄影师啊。好，我们大家一起点个赞好不好？为我们这一次 Finternet 点赞。好，我们大家保持住笑容啊！再来一张。好，谢谢我们4位嘉宾为我们带来的精彩分享。Once again, thank you so much for all the participants here for joining us for this wonderful Finternet journey. 那也非常感谢大家的到来，也欢迎大家到场外继续去参观我们的展位。那么我们也希望在未来继续见到大家。Thank you so much for coming and support. See you next time. Bye.
那个小亮，然后他们那个电视里边有很多的一些